Okay, that was a false start. Welcome everyone. Good morning, beautiful people. Good morning, traders. How are you all doing? Let me know in the chat where you're following our live stream from. Today it's me and you in the beginning. And LJ is going to be joining us in just a couple of minutes. So good morning. Good morning, Calvin. Welcome. Welcome, Maria. Good to see you. Good to see you guys. Luis is here. Welcome. It's been a while. It's been a while, Luis. Good to see you. Infinity is here as well. Yeah, we do have an amazing lineup today, guys. We're gonna have an amazing stream. And actually, I have a couple of ideas for the market as well. They're gonna be quite interesting for all of you. So we're gonna be diving into lots of different things. Welcome. Welcome. Good morning. Hey, good morning. Good morning. Good to see you. For you, it's well, where are you actually? In UK, or are you a different part of the world? Because for some of you, it's not going to be a morning. Welcome, welcome. Good morning from Angela. Amazing. Greetings, greetings. Good to see every single one of you. So, how has been this trading week treating you guys? How has it been? How has this trading week been for you? Let me know in the chat. Hey. So I'm looking at a couple of things immediately right now, so we can jump straight into this with you. Just before we're gonna get started, can you please let me know in the chat if you can still hear me and if you can still hear the music, because sometimes my microphone doesn't work with the music. So if you can let me know if you can hear me, that would be fantastic, and then we can get started. Here, light is perfect. Everything is perfect. Hey, from Turkey, thank you so much. It's so kind of you. Thank you. Really, really appreciate it a lot. I love Turkey. I've been living there for a year and a half, almost 2 years during COVID, actually. During COVID, it was just fantastic. It was amazing. Yes, all clear. Fantastic. Listening. Yes, thank you. Thank you. Thank you for the confirmation. Amazing. Welcome. Welcome. Good to see you. Nepal, one of my favorite places in the world. Really, really missing Nepal. Really, really looking forward to go to the Annapurna Circle, perhaps next year. It's just not letting my thoughts, honestly. It's not leaving my thoughts to go on Annapurna Circle as well, and a couple of other peaks in Nepal. Absolutely can't wait. Such a beautiful place. South of Portugal. I'm gonna be in Portugal actually in the beginning of December. Gonna be in Lisbon, gonna be in Porto as well in the beginning of December. So looking forward for that. I've been only to Porto so far. So gonna be visiting you guys in the beginning of the next month. Microphone is okay. Good morning. Good morning. Good morning. Fantastic. South Africa, amazing. Bangladesh, Wizak is amazing. Netherlands, great. Welcome. England, Curacao soon, better than Netherlands, because of the weather for sure, especially in winter, I suppose. Netherlands in winter were really, really cold. Anyway, let's jump into the market because things are moving and I'm really, really looking forward to share a couple of things with you. First of all, do you guys trade crypto? Let me know in the chat who of you trades crypto. Who of you trades crypto? Yesterday on this drop here, we had $200 million liquidations of longs from buyers all around the world. So all retail buyers, lots of people got liquidated $200 million within just basically 2 hours of time, got wiped out of the market. If you guys trade crypto, let me know in the chat. I rarely trade crypto myself. I've started trading Ethereum actively the past month since the flash crash, to be quite honest with you. I traded it before I started my trading journey in crypto actually, 2000 and God, it's been 9 years. So what is it? 2016. Okay, 2016. And I started with crypto, then I left it. I went into the US futures market, into the Forex market, and many interesting things. Now, I trade crypto really rarely. if I really do see the really great opportunity, and it needs to be very, very good one. So I'm currently short on Ethereum. Again, this is a current weekly point of control, and I'm looking for the continuation to the downside until the previous lows here at least. So I'm currently short on this one until the previous lows, but normally I'm waiting for Ethereum, to be quite honest with you, and for crypto to go lower. If we look at the higher time frame, we look at the 4-hour time frame, what can we see is that we had lots of volume here, we had volume accumulation. If we look at the daily time frame, we had these highs here being taken and the price went below them. So we had these highs being taken, the price is going below them right now. So for me personally, it does look like we had a retest. Eventually, I was even looking for a higher retest. I was looking at this retest and then the continuation here, but perhaps we can just get the continuation here. So in any case, mid-term, I'm looking for the short continuation for crypto and for Ethereum specifically until this volume accumulation here, until this zone. I also do have another level, another zone which is interesting for me. It's for Ethereum on Binance. It's 3040 slash 2975 right here. Okay, so this is one zone, and this is my final.
Hello.
Oh, welcome. Here's the boss. How are you doing?
No, I'm not the boss. Am I the boss? Yeah, maybe I am. How's it
Might be.
going?
I'm good.
Yeah.
How are you?
Nice. I'm good. You're looking good today, Anastasiia.
Thank you.
I'm gonna jump in here. I see LJ is a little bit late today, so I'm gonna jump in and just keep you company for a little bit here.
Thanks a lot. So kind of you. How are you doing? How's the market treating you today, this week?
So I think it's been good. I haven't been trading much. You know, I'm focusing on a lot on my swing trading, and this is not a lot of opportunities. It's quite slow. You know, I'm trying to be patient and waiting. So I have a short position open on EUR USD. I haven't even checked that one today.
Is it a swing short position?
Yeah, right.
Yeah, because I'm looking for some longs for GU.
That's right, Dale. Yes, Anastasiia, you're always looking good. But like I'm just saying, today you're looking. I can't jump on and say like, hey, Anastasiia, you're always looking good. That would be weird. You know.
Thank you. Yeah, that's weird.
Yes, a swing short position on EU. Obviously, it's not looking great right now. But I'm trying to, focus on only the daily candles, which means I get to wait a whole day for the candle to close and to make a decision on that. But I got a very wide stop loss, so I got my stop loss above closer to 117.5, so it's a very big stop loss. So I'm probably going to be holding that for the weekend, see how things develop.
But
you're looking at Ethereum.
I'm looking at Ethereum, which is super rare actually.
Yeah.
I was saying that I don't trade crypto, but the past month since the flash crash, I started trading crypto quite often because for my, by the way I trade, it became better than before. So it's now I actually am looking for the short. Well, I'm in a short for Ethereum right now. I'm looking for the price to come back to at least this previous zone here once again, the point of control of the months that we touched overnight after the liquidation of all the longs, $200 million full liquidations yesterday during this 2 hours drop. So we reached this point of control of the months. We came back to the point of control of the current week. It's now dropping. I'm in a short. I'm waiting for this low to be taken again, or actually mid-term, I'm looking for the way longer confirmation to the downside, continuation to the downside. I'm waiting at least until the zone 30, 40, 29, 71. And then eventually my overall target is this area here, which is 2700 to 2400 level. So I'm looking for way lower levels on Ethereum, but I was expecting the price to come back to this zone before, which it might do still, it might not do. But right now, at least this level is my focus for today.
Yeah, and I think you're absolutely on point here, and the crypto market has been very choppy to say the least. It is also what I believe is showing relative strength to the rest of the risk on market. So shorting Ethereum here is definitely, I believe, the right thing to do, and it has a very clear structure. And I mean, you guys watching here, you know technical analysis, you know trading, and you can just look at this and say, yeah, if you had to take a decision here, that's a short, definitely a short. Oh, I like these comments. Yesterday, 2 weeks ago. Okay, so Jonathan, two weeks before you told us that gold is going again for long. Uh, yeah, okay, got some problem reading that comment. I respect your analysis. Well, I respect you too, my friend. You know what's funny about this is I'm usually right on my analysis, but I very rarely make money on being right on my analysis. You know, it's like that's the issue, isn't it? I think you're muted, or you're just talking very softly. But I think you're
No, no,
muted.
no. It was something. It was. Can you hear me?
I can hear you. Yeah,
Yeah, yeah. No,
this
it's
was the
Remy in
volume.
the background. It's muting me.
Ah, okay. Maybe he's just checking. I think he's checking the audio quality and trying to, because sometimes there's background noise, so he wants to mute one of us to see where the background noise is coming from.
I was
So
saying,
yeah, I
you know, been knowing where the price is gonna go and actually making money on this
yeah.
are two different things. I figured that out myself as well.
Yeah, I mean, I'm just gonna share my screen here. I'm gonna show you the idea that I had over the weekend, and where I also feel like I should more often, you know, get in on the positions and get in on the trades when I feel like a move is happening. But because to me this move was quite obvious, the breakout was quite obvious. We had every sign of that accumulation for gold. I mean, we can look at the higher time frames like fib structures. We can see that in this trend it has consolidated between the 0.236 and the 0.382 every single time in this uptrend. And while everyone is super bearish on gold, it's the most bullish trend I've ever seen in my life. Even stronger than Bitcoin in 2017, So down in this area, and we go into the daily, we see that we had like accumulation right here, higher low, go into the 4 hour. This is a beautiful structure here with that higher lows and a ascending triangle type of trade, and then break out. And the beauty of this is you can kind of just take. So we have a pattern here where we have a ascending triangle and a rectangle. A rectangle is just a range. And the way you trade breakouts from rectangles is obviously from the high to the low, and that's the same for triangles and rectangles. So you can use double this range, and then just put it on top, and there you have the target. And then you add the kind of like the reload zone here, and you see that we're now hitting that mid zone. It's just a picture perfect move on gold. I believe gold moves very nicely on the daily and the 4 hour. It really takes out a lot of stops on the lower time frames, but on the higher time frames, this trend is just beautiful to trade. The problem here, is I had the breakout here, and then I put some orders in here, and as you can see, I did not get filled. So I've taken one trade this week. That was one of my plans to take that trade. That would have been a 2R winner. And then the other plan I had is to short gold based on the potential of this being a distribution range and move down here. I'm in a loss on that one. Hopefully that can turn around, but it is what it is. Probably going to be holding that over the weekend. So that's the only things I've been focusing on this week. But it's interesting, the only trade idea that worked out is the one that I'm not in. So I have to ask myself, when I'm doing my journal review over the weekend, was it a bad trade? Or because there's a difference between, a bad trade or just a missed opportunity. And I think I might have made a small mistake here. I underestimated gold's momentum when the breakout happened. I probably should have traded this as a breakout trade instead of putting limit order below. Yeah.
Yeah, gold has been difficult actually to catch, because I was still waiting for it a little bit lower before a continuation to the upside. I took long, but I exited way too early, like one
Yeah.
third of this total to the upside, and I didn't re-enter it afterwards. So it's not easy, even if you know the direction, especially if the market is like trending, it starts moving and it doesn't stop. It's not easy afterwards to re-enter it. We oftentimes feel like, okay, the move is already passed, so I'm not gonna take it, and then it just keeps going, and you start wondering, maybe I should have taken it somewhere in
Yeah.
between. So, but it's, yeah.
Have you looked at platinum lately?
Me?
Yeah.
No, no,
Let's
not
take a look
lately.
at platinum on the weekly.
I used to
It
trade it before. Oh my goodness, really? That's crazy.
yeah. Look at it in May. It broke above the highs in May. It is now 50% higher. And then you look at the daily trend here. It perfect. I missed I actually had an alert here, and I ignored
Break.
it. Yeah, I had a breakout alert right here, and I just ignored it because at the time I saw this, and I'm like, wow, this market looks super boring. I'm not going to be trading this. But I obviously, at closer look, you can see the consolidation before the breakout. You can see the very strong momentum on the breakout. I think we might also see volume. Yeah, look at like when it's breaking out here. I think if you look at the futures market, you're probably going to see an insane increase in volume. I mean, look at this. Look at that increase in volume on consolidation, and then eventually it breaks out.
Yeah.
So yeah, there's lots of opportunities out there if we just keep our eyes open.
I used to trade platinum before, and then I just got rid of it because it wasn't performing like as much. But I was trading it on futures because when you trade it on CFD, sometimes the swap and the spread is insane.
Yeah.
I was trading it purely on futures, and then I left it together with oil because a period of time changed for me, and it was way too much.
I entered a swing position on oil a couple of months ago. Used to try out, see if it's even possible to be holding positions like that on a swing account long term. I, did calculations on the, did some calculations on the spreads and everything, and eventually found that I had a long position open, and I think I paid like $800 in commissions and swaps over that Wednesday, So yeah,
Previous
came
oil,
back.
more than 500 or 600 only for the swap.
Yeah,
Not even counting commissions, which was crazy.
yeah, insane. I'm gonna switch back to your screen because I'm gonna be leaving in a few minutes. I'd love to see what you're looking at here today.
Yeah. So my short for Ethereum is still on, and it keeps dropping, which is quite nicely, finally. Honestly, if I'm going to be completely honest, October was difficult. That last week of October was completely disaster for me, but not because of the market. And since the 2 weeks of November not wasn't easy. Like September was amazing, and the months before August were amazing, but now this period of time is just crazy. But it's getting like today, it's finally getting better. I got into the market and I'm like, okay, I'm excited. Like, I finally see a couple of things coming into the play when I was looking at them for a long time. So I'm excited, finally to trade normally because otherwise, like sitting on your hands or like getting into the trade are like going and then reversing. This is how this month's been for me. That's the thing.
Yeah. No, it's
It's
been
just
very choppy. It's been all over the place.
so choppy, so choppy. So I'm also looking for the pound long. I've been looking for the long on pound. I'm gonna delete a couple of things here. Been looking for the long on pounds since this zone here, normally. But it came back again so many times that I got out of break even eventually after this because it's been too many times ranging. So now I got back into the long on pound just here. So I'm now looking for the continuation finally to the upside. But this time I took a bigger stop loss. So hopefully this time is going to be enough of it for the price to play out and to go where I wanted to go. So my stop is quite big on this one right now, but my target is at the previous range here as well. So this range is something I'm looking for, or also I have another zone of target that I'm eventually thinking about, and I'm going to be watching out for is this area here. Now the reason I'm looking for the short on pound, there are a couple of things for this reason. First of all, we tested the value area high of this specific range. So we had a high volume node here. If I place a volume profile over this high volume node, this was going to be the point of control, 29,400, and then the value area high is at 32.65. So the price didn't go lower, it reversed from here, started recovering. What is important for me personally is that we broke the previous highs. So by the market structure, I'm looking for now for the continuation to the upside, so the corrective wave to the upside before eventual continuation of a drop, depending on the pound economy. But here was the high, and now we created the higher high. And I always combine the volume with the Elliott waves because I come from the pure price action, naked price action trading, combination of Elliott waves theory, Fibonacci, price action, candle reading, and so on. So now then I added volumes, and afterwards I combine those old things together. So now we broke the high. We've been testing it here. Now I also was looking at this low if we gonna go lower, but we didn't. So now this 4-hour candle closing in 1 minute from now is quite bullish. So I'm gonna be expecting the continuation to the upside slightly finally right now. Also, the reason I'm also looking for the short is because the corrective wave, the short wave here is already at the limit of what an average move for the pound is. So on average, if we drop for the past month since June, it's approximately 420 to 450 pips, which 420, 450, and this was smaller, and this one right now was 460. Right? I don't count the smaller ones, but I count approximately the same sizes or bigger ones to know, and I'd like to estimate how far the price can go more. So this is usually the corrective size before some kind of pullback. So I want to see if the price is going to come back a little bit higher also for regarding FIPS. If we place our volume or FIPS here, 50% is going to be a little bit lower than my first target. 38.2 is at my first target, so that's something I'm looking for right now.
That looks great. I think that 38.2 level looks really good as a target. I'm gonna have to jump off, but yeah, I will see you later, and take everyone, and be nice, Anastasiia, and then we're gonna have LJ coming on soon as well. See you guys later. Take care.
Try. Good evening, Henry. Good to see you. Welcome. Yeah, we're gonna have a look at a couple of assets that you guys were asking about in the chat. Akram is here. Welcome. Thank you guys for nice comments. Okay, you were asking to look at a couple of things here and there, so let's have a look at this. So regarding the NZD USD, I normally don't trade it, so that's gonna be a completely markup from zero for me, which is gonna be nice because you will be able to see how I make my decisions from 0 to. It's gonna load. Perfect. So NZD USD, it's been ages since I looked at the New Zealand dollar, to be honest with you. Yeah, that was the last time I looked into it. That was June, July. That's how that's how much time has passed since the last time I looked at it. Okay, so NZD USD, where are we? Okay, the first things I'm looking at is always the market structure in the first place. Again, I come from the naked analysis completely. Pure price action combined with Fibonacci, things like this, candle reading. So those are always the first things I'm looking at. Yes, can you hear me better without music or with the music? Can you hear me better now without the music or with the music? Let me know in the chat if you can hear me better now without the music. Let's figure the sound out and we're gonna continue. Slightly better without the music. Okay, perfect. Okay, perfect. Okay, good. We're gonna continue without the music for now. My microphone isn't working with the music. It's not. It just doesn't want to work. So for NZD/USD, again, we have this big level here. Now, what else I'm looking at is I'm looking at the volume perspective, and I'm looking from this for this range right here. So I've placed my volume profile over this whole range, right? And I don't differentiate the range where the price goes sideways, just flat, just in a rectangle, or the range in a form of the triangle, or a range in a form of this kind of triangle. For me, the range is the range. Everywhere where the price was going sideways, for me, it's a range. So it doesn't make any difference. So what we can see here is that the price has reached the point of control of this range from December 2024 to March 2025, where the NZD/USD didn't go anywhere from that point, and started finally reversing from this, right? So what can we see is that here I would be expecting the continuation to the downside normally, because the price was breaking through this point of control, testing it, continuing down, but then finally, together with the GBP/USD, as we can see, the market structure is pretty clear on this one. We had broken the highs, we had broken this high volume node, and now the recent bullish closure here is suggesting that we might get the move to the upside on NZD/USD too. So we see that the volumes are below. If I place my volume profile over this move to the upside, we're gonna find out that the price has exited the value area too, which is, if we exit the value area to the upside, is quite a bullish sign, which means that the majority of trades were happening below the current price, and traders are expecting accepting the higher price of this asset. So they evaluating the asset more at the higher price than the current price of the asset is. Just give me 1 second. I'm gonna check something on the futures market for NZD/USD. I want to see where the big volumes were traded, if there are any. Okay, not bad. And one more thing. So we had the volumes here on the previous highs. We have the volume. Yeah, actually, to be quite honest with you, I would be expecting longs on NZD/USD right now, which might not be the bad entry. Even the problem for me is in the risk to reward, because my stop loss would need to go below the volume which we have two volume spikes, and this whole zone here is my volume zone. So for me, the stop loss would be the problem. If the price goes further, this would be a final target, and it would be 1 to 2 risk to reward, which would be great. But again, not sure if the price is gonna reach the highest target, so might be the bad risk to reward on this trade. But the original ID in general ID is amazing. So whoever sent NZD USD in the chat, you're a legend, honestly. I haven't looked at it for a long time, but I would be long on NZD USD now. I would be long on NZD USD, and it pretty much is coming together with my short ND on GU, as we can see, right? On the long ID on GU, apologies. Yeah, for gold, we're gonna still go over it in a second, and I see you guys asking about the EUR USD. Now, I am not long for EUR USD, and for the targets, I would need to know what is your entry. If you're already long on EUR USD, let me know in the chat your entry so we can have a look at it together as well. Honestly, from all of them three, GU, NU, and EU, I like NZD, I like EUR USD the least. Really. Because EUR USD right now has reached my long target already. For EU, I had the target here. And the price has reached it. This and this zone. So I'm not particularly too keen to take any longs on EU right now. Compared to GU and NU, I don't think it looks good. So honestly, for EU, I would stay away from this one now. We are above the value area high still, so we might continue back to 16,380, perhaps. But not the best. Not the best setup. Now, looking at the 4-hour time frame also, the reason I'm not looking for the more continuation to the upside is if we place the volume profile over this whole downwards movement, we will see that several big volume areas. We have this volume area, we have this volume area, and the price has pretty much reached it before, right? So for me personally, if like it's not the trade that I would ever take, so it's completely not bullish trade for me anymore because we already reached the target. But if I would be expecting the price to continue higher, I would expect it to continue to the level until 16,375. Okay, 16,375. Let me highlight it on the screen. And 16,585. So those two levels. If the price would continue and I would take the long, those would be my targets. But honestly, I wouldn't take a long here in the first place. Yeah, if your entry is 15,700, which is a great entry, I would exit the trade now. But again, it's your own decision, right? You need to do your own analysis. For me personally, I wouldn't hold the longs. I had the target at this high. I'm just looking at my futures analysis right now. I had this target at my previous highs already. Okay, so what is my setting on the PVP? For the PVPs, I have the same exact settings. Exactly the same settings for all the time frames. The difference is only the color of the point of control. So for the weekly PVP, I have the setting period 1 week. Total volume, so I don't distribute the volume by ask volume and bid volume. It's all total for me. The value area volume percentage is set to the default 70%. The numbers of rows for me is 500. Okay, so nothing is enabled here. And if I go to the style, I don't have my volume profile, as you can see. So, but again, if you are just starting using the volume profile, it might be better idea to make sure that it's on, because then you're not gonna get confused about the high volume nodes and so on. And I have my point of control. Now again, you can of course place the value area high and low, but that's completely up to you, right? I work with a point of control and developing point of control too here. So that's something I work with. And now if we go to the daily, here, the settings are exactly the same. 1 day period, volume total, value area 70%, the same as in the weekly one. Rows layout, stick per row, or the numbers of rows, doesn't matter. You can place 500, because if you're not using the volume profile histogram itself and you're working with a point of control, the whole point of the setting is to make sure that it's going to be loaded and you can see it. And then you go to style, you go again, if you work with a point of control histogram on these periods of time, you can enable your volume profile. I don't, because I prefer working with a manual setting volume profile. Then the point of control is enabled for me. So those are the settings. You're welcome. Okay, so this we answered. I had a couple of other things highlighted. Okay, and the USD we went over together. Let me just... Okay, yes, gold, some questions about gold. Welcome everyone. Welcome. Regarding gold, it's been tricky. I did have a long, oops, that's not what I wanted to delete. I did have a long on gold, but I took my target here, I took my profit here, which is sad to look at right now, considering how far the price has come. I wouldn't be shorting it, because if we look at the recovery and if we look at the price action, there is nothing bearish about this price action at all. There is absolutely nothing bearish about this asset. Gold is probably most likely going to continue going up as well. But when the shutdown is lifted, sometime afterwards, I am expecting the drop on gold, to be honest with you. Here is one of the levels that I would be expecting the reaction from 42.59.5. So from 42.59.5 might get a reaction for gold for shorting it. However, extremely, once again, shorting such uptrend is always risky, right? Risky idea. So right now, what I'm expecting is a continuation to the upside. We just got some extra volume coming in gold here and right here. So we had multiple volumes coming in. We had a huge disbalance of delta here as well. So I'm looking at the future chart. So technically, high risk, I would be going long right now on gold until 42.59.5 right now. Something like this, potentially. Something like this. That's 30 minutes, and in 5 minute time frame, if we look at it, yeah, that's something I would be looking for right now for gold. But again, high risk, so you need to consider it for yourself. Hey,
Hello.
there
How are we doing,
there's
guys?
a
How
lot.
are we doing?
How are you doing?
Bit rough. Yeah, bit rough.
Yeah,
Yeah, feeling a little bit more settled now. But yeah. Apologies for that, guys. If I can speak as well, in a bit late.
oh,
In
don't worry about it. Jonathan has joined us as well, so before it
yeah,
was all
cool.
good.
Okay, cool. Appreciate that, Johnson. Yeah, I've been yakking it. I don't know. This whole week I've been off. I think I'm just ill. So how are we doing,
Hey,
guys? Good to see you. Good to see you. We're here
need to
now,
keep,
so it's all good.
Need to take care of yourself first.
Yeah,
Yourself.
get some more rest on the weekend.
Yeah,
I
absolutely.
think my nervous system's still just like depleted after last week after hospital. So,
Yeah.
but yeah, what are we looking at?
I'm normally looking at Ethereum. I'm short in Ethereum. I'm looking at
Putting a
long
theory. Interesting.
Ethereum. Yeah. Surprisingly, I'm also surprised. I've been trading crypto in the past months like I haven't since 2016, 17.
I was gonna say, like, when did this last happen? Because
Yeah,
normally, you know,
honestly, active trading on crypto 2018 the last time. But
yeah,
now since the flash crash, what changed is the volatility and what changed is the structure. So for me, the way I analyze the market, since the crash happened, it became better.
mm,
So I took some trades specifically on Ethereum there and here, one trade on Sol, which it's not particularly my thing. It ended in profit, but I didn't trade it since then afterwards. So, but Ethereum has been quite good to be honest with you.
that's fair. I can see that. I can see that. It was like same with the Bitcoin structure. It was sort of we weren't going too far. We were just in kind of this weird
Yeah.
indecisive chop range. Everyone's like, are we going higher? Are we going to drop? This has opened up the charts a bit, given you some good levels. So
Yeah, but I'm
I can,
normally midterm, I'm waiting for the more shorts on Ethereum.
yeah,
So I'm
yeah,
normally waiting until this zone is reached here for Ethereum. So, but I was expecting that it might go a little bit higher still. So here, back, and then continuation to the downside, which might happen, might not happen. We might drop already as well here. So, but in general, from this zone here, I'm expecting the shorts on Ethereum. We broke back below these highs. So the price has been testing it, broke back below. This is the level now I am looking for the price to reject from. So from where we are to approximately 3,800, 38, like yeah, 3,800.
mm,
But now I'm
yeah.
shooting. If you look
I
at the
agree. Yeah,
look at the 30-minute time frame, we are testing the weekly point of control. If I want to make it really nicely, I can draw the trend line here, which is going to be perfectly connected
beautiful.
as well. Which I don't like. I don't use them, but sometimes it just looks so beautiful that you just want to put it on the chart, you know?
Yeah,
But technically, for me, is a point of control of the week here that we are testing, and it's ranging between the point of control of the week and point of control of the month.
mm,
So I'm expecting at least a continuation today here back towards this previous lows, same
yeah,
lows. So which would be perfect actually.
yeah. I think I
And
mapped out a similar thing on Bitcoin yesterday. I'll just show
yeah,
you real quick.
yeah,
Um, so a similar deal, this kind of descending wedge type deal. Whether we got another tout at the top end and then come down for a retest of these lows and potentially a new low. So obviously lines up with ETH as well.
yeah, yeah.
So,
That's true. Yeah, Bitcoin had it was 200 million liquidations yesterday on the short.
yeah, yeah,
Yeah, there's like 2 hours again, and
yeah. Bitcoin's very interesting at the moment. I mean, you've had heaps of the big players liquidating, like long term holdings. Especially a lot of them are in that sort of uh, tech fintech esque space. Many of them have investments in like data centers. Obviously, crypto mining data centers kind of go hand in hand. So there seems to be a lot of I guess just liquidating old holdings, take some cash out, put it into AI related infrastructure and that kind of stuff. So yeah,
yeah, interesting, interesting. Maybe yeah. But yeah, let's see. Let's see. What were you all looking for the continuation to the downside in general for crypto still or the
yeah,
upwards from here? What's your
downside.
perspective? Downside?
Yeah,
And if the
yeah.
shutdown is lifted, when
Um,
it's lifted?
yeah, yeah. When it's a yeah, even then, I think crypto's just kind of out of favor at the moment. I think as well the traditional players would rather pick up, because now we do have that institutional involvement,
Yeah.
but you'd still rather pick up stuff, like stocks or gold, for instance, over Bitcoin at the moment. So
Mm.
I think we're just a little bit out of favor. I think it'll take I'd say if we get the $2,000 stimulus checks that Trump wants to put through, and that actually gets approved by Congress, then I think that'll be the point to, crypto and stuff will start rallying because people go, okay, COVID checks, stimmy checks, everyone's
Yeah,
gonna jump into the market. Yeah.
yeah, everyone is just putting this money into the market in US. That's for sure. Yeah.
Yeah. So,
Yeah.
because if they do that, it'll be quite large. I think I had a screen cap of it the other day.
Yeah, it was the same during COVID, essentially.
Yeah. Yeah.
Because yeah, during COVID also the stimulus check was sort of the reason the market bounced back so high as well and so
Yeah.
fast after the whole drop.
Yeah, exactly. So this would be an example of just how much the stimulus checks this time would be, right? So these are the COVID checks. These would be
Yeah.
the tariff dividends. So it's very significant. It's way bigger. So
Yeah.
that's going to be the question of how if they can get that passed through Congress, and then whether they do people under 150K or under 100 or whatever it ends up being. But it seems fairly likely that it will happen. So yeah.
Knowing Trump, it
Yeah.
might happen. I'm pretty sure
Well, yeah, and then
he's gonna
it's
be
everyone else has to vote on it, right? But I think there's definitely a willingness and propensity to sort of
yeah,
give something back to those that are taking it hard. So yeah.
yeah. It's true.
But yeah, what
Uh,
else is going on? I missed everything before because I was yakking, so I don't know what you guys were talking about
so
at
you
all.
haven't tried it today yourself.
No, I was earlier today, but just the past I don't know 2 hours or something, I was feeling a
Yeah,
bit off. I was like, oh, I should eat something. As soon as I ate, good 15, 20 minutes after, I was just like, nah, it's all
crazy.
coming up. So
Yeah.
yeah, terrible. I
I was
did.
looking
So I was
for
up.
longs on pound. Oh, I'm looking for longs on pound and NZD USD actually right now.
Yeah. Okay. So I was going to say I did take longs on the Aussie dollar. I held these from last night because we had the employment data coming through today. So I was looking for that to be a bit
Yeah.
better. We got that initial spike. I didn't close out there. I was expecting a bit of a dump. I was talking about this with Rich yesterday. That we expecting to see dollar, turn back around, and we've basically gotten that come through today, very nicely. So I've now tapped out here. My full side target is 65.90, but we sort of stalled out here, so I just took profit around that 80 level. Same with euro dollar. Jumped into that late Asia and then closed out at 116.20. That was my initial target there. So TP'd at like 19, roughly just under that 20 point. That was quite nice. What else was there? There was NASDAQ trades from last night we were talking about yesterday. That ended up being really, really nice. So we've had this. We zoom right out again. Reset the chart. Zoom, 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 zoom. So we've had this band that we've basically tapped into a few times. This sort of, descending trend line, whatever you want to call it. Broke outside, came back in, retested it very nicely last night. We also had the options pricing lower from last night, so that played out really nice. And then today, I took a further short through here. Once we hit that double top, seemed to lose momentum, short through there. That's come through very nicely. Is there anything else I had? I didn't take any dollar yen trades.
Oh yeah, there was a
There was gold as well.
dollar yen as well in the
Yeah.
chat that missed it.
Talking about dollar yen.
Yeah, about the dollar yen, there was a question. I think I can't find it now, but I saw it earlier.
How are we doing, DJ, by the way? But yeah, so gold. Yesterday we were talking about we had this wedge form through here, and either we break down or break to the top side of it. Today or last night, this was still last night, wasn't it? I gotta check the time. Can't remember. Yeah, that was 4 a.m. my time. That was still last night. Broke outside through there. Today sort of traded sideways through Asia. Still good momentum. Topside target at 42.40. So that's where the pivot level. I don't have the pivots on here right now, but that's where the pivot level was for today. So yeah, those are the four trades. Gone pretty well so far.
So what's your take now on GU? Because I know the
GU,
pound
yeah.
week. I've been honestly looking for some pullback to the upside, but yeah, I'm curious to hear your perspective on that.
Yeah, so I definitely think we could. We were talking about it yesterday a little bit. Obviously, everyone's looking forward to the budget announcement. So that's on the 26th. So what, 13 days from now? A lot of that is now being sort of priced in, right? We had the Chancellor come out, give that speech talking about it. That gave us the next downdraft through the pound. We've had some of the data as well coming out, which has been a bit poorer. But it seems as though all of those trades are kind of in the market, so it's a bit of a buy the rumor, sell the fact type situation. I think right now, if you haven't sold the pound at this point, what are you what are you waiting for, right? So I think right now we're getting a bit of short covering, bit of profit taking. I also do see further downside for the dollar coming back in once we have the government reopening. We've had all that
Yes.
trapped
So
US dollar.
so you're expecting the short on the US dollar when the government reopens?
Yeah. So we've had a bunch of so basically part of the reason the dollars perform better, despite having got the shutdown, we've also had some of the bits of pieces of US data, like we had the ADP the other day. We've had some of the other tangential data. It's come out not looking so nice, but the dollar's still stayed strong. Part of that comes down to the fact that that dollar liquidity has been out of the market with the government shutdown, so they're not paying stuff like the treasuries and the bonds, the regular coupons. So there's about 250 odd billion total that has been taken away from the market. So that's equivalent of like a full round of QE. So the TGA has gone up over $1 trillion. Coming towards Christmas, that now needs to go back into market. That gets paid out. It means you got about 150 odd billion between now and Christmas coming back into the market of USD. Hence, you're restricting supply before. Now you're opening up that supply once again. So yeah, turnaround for the dollar. That liquidity comes back. Workers and stuff get paid as well. Then we start to get the actual data. It looks like we may not get the October numbers at all, both for payroll and CPI. They're looking at just scrapping it altogether. Go figure.
Nice.
Yep. I'm sure you've talked about this before. I'm sure, but yeah, the rest of the tangential data or / the indication of the data that we do get doesn't look too crash hot. And then we also had last night, I forget his name, which Fed member it was. But yeah, talking about further 100%, they're going to start pumping out liquidity. The Fed's going to start buying bonds. All of that adds up to US dollar liquidity. And so options are also pricing this week as the final piece. Euro dollar up towards 117 potentially. I think we'll get just shy of that, 116.70 or so. But yeah, across the board, options are all pricing weaker dollar. And so I've still got the call for about 120 end year, running back up to that coming to New Year.
Interesting. 120 for the euro.
LJ, are you still short EU?
Hell no.
Okay. Well, it sucks.
That's what I
Oh,
said on the Monday, Jonathan. That's why I was saying the asterisks around it because I
yeah.
see euro dollar up towards 120 towards the end of the year. I don't think we'll actually get to 120, but that's the direction. Have another attack at the 119.
Okay. Well, I'm short. I'll keep my short open. And Anastasia's long. You're still long GU.
I'm long GU and I'm looking for the NU long and the USD.
Hmm.
Someone sent it on the stream and I haven't looked at it since July. The last markups I have on the NZD USD chart is from July actually. But this time I was looking at this and it looks quite good for the break of the structure as well.
Yeah,
Yep, that's exactly where I'm looking for it. That's
yeah,
exactly my target, LJ. Your purple
yeah,
line on the chart. That's my target.
yeah,
That's
yeah. That's
almost tick to tick my target we just discussed it before the shutdown.
look. We very often have like the exact same sort of
Yeah, yeah, we
outlook.
do.
80% of the time or something, 70% of the time.
I feel like that's funny because I feel like I'm also in line with you, LJ, but I'm never in line with Anastasia because we always take the opposite, opposite sides of our trades.
Yeah, that's funny. How is it possible?
Yeah, are you profitable, Anastasia? Because I'm not, so maybe that's why. Maybe I just
I,
need to maybe I just need to fade myself.
my stats say that I've been profitable. Yes.
Nice. Okay. Well,
Normally.
I'm inconsistently profitable, definitely.
I was about to say, recent, like you've been crushing it recently, Johnson. Come on,
Yeah,
yeah,
definitely. I made yeah, just a couple of trades I made a lot of
smashed
money.
it.
Yeah.
You've
Yeah.
scaled up like 3 times in the past like 4 weeks.
Yeah, it's been
Yeah,
quite insane. Yeah.
it's good.
Um, it is good. It is good. Now I'm just gonna, try not to give it back. But I mean, I feel like I'm in a yeah, it's been a very good flow. Very good flow. It's like I'm looking at EU. I'm short EU, and I'm underwater on that one. But I really do not care. I really don't care. Doesn't really. So it's a
Look,
good.
there's I would say that there's options. There's some heavy options down back around 116 tonight for the EU
Mm.
for euro dollar. So that might stem the rally for today. Um, you get that attraction back towards 116. You know, natural round number rally off that. You can exit and then go long from there.
Normally, for me, the EU, I was long. I didn't actually take this trade, but I was had an analysis on long, and it reached my target. So from here, comparing to GU and NU, I wouldn't be going long anymore on EU, for example.
Mhm. I've got it's on the
But
daily.
you can't. I mean, you guys have to agree that from a so ignore the fundamentals here and ignore the lower time frames. I mean, from a daily perspective, you have to agree that there's definitely a slowing down of momentum. There's price action telling us that we're going into consolidation at historic highs with levels to the downside looking very interesting for possible retest. So, I mean, one interesting perspective here is if I'm allowed to share my screen with you
Yeah,
guys.
go for it.
So let's just ignore everything we know about the fundamentals of this. But to me, this looks to me like it's the perfect long position, right? You have a downtrend comes into support, and you kind of start breaking. You get the lows, you got uh, lower highs, lower lows, and then it can start to potentially shift right here, right? And this is EU uh, reversed, right? So if we flip this back to what we have on EU, the same should be true for short. Now it's more difficult for me at least, to find short setups when you're in what looks to be kind of bullish market. It's difficult for me to find short setups, but it's very easy for me to find long setups in what looks to be a slightly bearish market. So this to me looks like a weakening of momentum, looks like market is coming down into an accumulation zone and showing the signs of a potential breakout to the upside. So from a technical point of view on the higher time frames, it's quite close to confirming or invalidating this this uptrend. Do you agree?
Yeah, disagree.
You disagree?
Disagree.
Okay.
Yeah.
Okay. Well,
I know
that's
you're
awesome.
saying from the technicals. The reason I disagree is because, yeah, the text would say that, but texts always have to take in context of the fundamental picture, because basically
Yeah.
the texts are the description of the fundamentals that are going on, right? So you have the obvious distortion with the shutdown, longest in history, right? When you have
Yes.
a government shutdown, and being the longest in history, that has a very much has a large effect on the dollar complex. So it goes back to all those charts I was showing on Monday, where we've seen SOFR rates go much higher. So the secured overnight financing rates. And when you've got a secured asset sitting there with the Fed, secured by treasuries, and that is more expensive in interest in overnight funding than getting an unsecured rate between banks, something's wrong. Basically, that's showing there's a huge drought in the oil of the system, being US dollars, rolling around the system. So,
I'm at, I'm absolutely with you on that. I also see that the structure that I'm looking at on EU actually was created during the US shutdown. So the things that I see on the chart in terms of technicals for a potential break lower is created when the US government was in a shutdown, where we had like this information void basically. So I'm absolutely with you on that, and I agree with that. When it comes to like the technicals and the fundamentals, you got two camps. You got three camps basically. You got the people saying that price is everything you need, then you have people saying that fundamentals is everything you need, and then you have people like maybe you and me. We're looking at both, and for me, the fundamental analysis answers the questions of why and how, like why is price moving, and then the technicals is asking when and where. So you have the why, and this setup here, I have the when and where. I believe if we're going to get a move to the downside, we're going to get that in the next 2 weeks, and to where we're going to get it here. But it's lacking the why and how, because the why for this to turn bearish is not there. So when you have the correlation between the why and the how, you have a marriage of fundamentals and technicals, and that story is now playing out for this setup. But the thing is, with this setup, this is a purely technical play, which might be actually a bad thing in this case. So we'll see what happens.
yeah, but it's similar to the thing like when we were talking about seasonality, which is why I don't like it, because you have to take in context the regime at the time. Um, what else was going on? What were the other tangential effects that caused that seasonality effect? Because if you just take what you observed with nothing else, then you're going to derive the wrong picture. Um, this is why when I brought up that thing the other day, when we were talking in chat, in our group chat or whatever, about like how you have FX replay to do like backtesting stuff, and you can run through the bars. I was thinking about creating like something that has the macro picture on the candlesticks, so you can go back and
Wow.
see what was actually happening at that time, right? So then, as well, when you're
Let
backtesting,
me
you're not
let,
just
let me
backtesting from
let me
technicals.
let me just hold off right there. Like maybe let's create this first before we share the idea, because that's
Okay.
that's a big idea. let's talk about this in private before we share, because that's a big one.
But
Let's
yeah,
uh,
yeah, yeah.
let's do that.
I
Let's
was
create
looking how to
products.
create it, so yeah.
Yeah, and then we can sell it to the viewers instead of just
Beautiful.
No, but that's $1 million idea right there.
Yeah,
If you can get
yeah.
that's like level 2 data on level 1 data. I like that.
Yeah, because I don't know, I hadn't found anything like that. Henry said there's indicator like that. Let
Okay.
me know what it is, because I haven't managed to find anything like that myself.
So let me ask you, like, are we talking about looking at a candle and then do you know what a is it called like a droplet candle or a drop candle? Have you seen those?
Uh,
Where basically it's a candle that is it changes form based on where the volume was traded within that candle. So
oh,
you
right.
have kind of like, if most of the volume was traded at the low of the candle, the candle at
But
that
that's a
part is
volume footprint. It
a volume.
exists.
Yeah, but it's I think TrendSpider has it.
But it has many platforms for analysis of the futures have it. You just turn on the footprint and you go on the volume footprint, and the candle is not gonna make a change, like it's not gonna change. But what it's gonna do is gonna show you where the volume is traded within this candle. I can try to connect my other chart, but the problem is that this mic on the other doesn't work.
So it's based on
Which mic?
volume
This mic?
candles, right?
Are we talking about this mic over here?
Yeah, that mic is definitely not working. You have to change that mic immediately. Get a new
You're gonna
mic.
make him tipped off again.
Sorry, Mark.
You have to turn up on the podcast.
So,
Do you guys watch it?
Anastasiia, this is we had the like this is I know what you're saying with the footprint print chart. Like it's pretty much like the volume candles, but it's showing where the volume has been traded within the actual candle, right?
Yeah, yeah,
But instead of showing the actual numbers, it's the difference in width of the candle. Uh,
yeah,
Instead of showing, I'll
yeah, like this, yes. And it can show the numbers, or it can show just based on their histogram. Where was it?
interesting.
That's literally what I used to trade.
Yeah. I'm gonna log into TrendSpider just to. It's really
So,
cool.
That's
so
that's lit-
Henry,
Wait, let's literally this. I'm gonna show you.
so Henry, this has just got like the actual data though, like data releases.
By the way, guys, I need to share with you a
Yeah.
very, very important announcement before we go into that. Have you guys ever heard about the? There's a podcast called Pipped Off. Okay. I think it's one of the like it's one of the biggest podcasts in the trading space, and they recently had two like amazing guests. So the host has recently invited a really popular person in the trading space, and they're sharing like some insane value on there. So I'm gonna be sharing the URL to that podcast, and honestly, like, you guys gotta go in and see this. This is good stuff. So got that in the comment section right there. Go in and yeah, the best
Definitely
podcast
check it out.
trading. Yeah,
It's
definitely
it's
check
a
it out.
good it's a good pod. It's a good pod.
Yeah, it is. It
You
is.
guys will enjoy it.
Yeah, definitely.
Jonathan,
Okay,
this Samsung
let's
you're
do it.
looking at?
No.
No,
So
because this is showing you based on the volume within the candle. Where was the traded volume in this candle?
yeah, I know, but Let me see if I... So it's pretty much what you're looking at right there, but it's shown in a different way. Let's see if I can find... Yeah, raindrop. Okay, so it's called raindrop candles, and it's actually like a completely new type of chart, but I don't believe it's available anywhere else. So it's really cool, actually. Let me show you the chart. I'm hoping that TradingView will integrate this soon, because it's kind of like a completely new addition to technical analysis. It's like a new chart layout, basically. Okay, Brave tab, where is it? I think it's going to be this one. Okay. Right, can you see it? Remy has muted you again. Remy, you can't use muter randomly, dude. Okay, you're good now.
I see this, but like, why would you use this if this is the same exact thing that you can use on the footprint? But instead of just drawing what I just shown, they connect it in the area in this weird shape candle. Like, why would you do this? You can do exactly this. This is what you have. It's a volume, but distributed by bid and ask. So you can also choose the volume histogram, but like bid and ask. So it's gonna be on two sides, depending on like where is the more bid, where more ask. But now they connect it into like a cloud of some sort.
So I think the main purpose of doing it like this is to kind of appease the type of traders and technical analysts like myself that is focused very much on visual analysis, and not specifically going. No, this is not the same as volume candles. Okay, as I've just showed you, I have it on my trading view here. This volume candles is a very normal. It's been around for a very long time. It's just where the candles become bigger with more volume, wider, and then thinner with less volume. What the droplet charts are doing here, what the I don't even know what it's called. It's called the raindrop. So it's basically so it's basically the volume footprints, but it's shown in just a strictly visual way. So if you're looking at, for example, the lower time frames, and you let's look at here, we have the 1 hour, and you're trading based on the 1 hour, or maybe you're going into even the lower time frames, and you're trading intraday on the lower time frames. You might not have the time to look at, like, pull up the footprint chart or look at the exact numbers. And you're just looking at it strictly from a visual point of view. I'm not saying that I haven't really tried this. I'm not saying that this is like the next big thing, or this is what you should be using out there. But it's a completely new way of looking at the technical analysis. For example, you can look at this candle right here, where you see that you have a bearish candle where most of that action was on the high right here, and I would assume that this would tell you that this is a good potential top formation, right? We have a bearish candle where the top of the candle is significantly bigger. All right, Anastasiia, you see you have your screen ready, because
I gotta
this
say
is
that chart looks cool though.
It does look pretty cool, yeah. And
it just looks like it looks really like metal or something, like right, like
yeah.
Cool. Yeah.
Basically, I found the difference. Between the volume footprint and this raindrop candle that you're looking at. So basically, this raindrop is based on where did he go?
Johnson disappeared. Yeah, there he is.
Yeah,
the raindrop candles are basically based on the VWAP, so not the volume. So it's a VWAP candle. So you're right, it's not the same as a volume footprint, because a volume footprint is showing you the amount of contracts traded on every single tick, every single price level, and this takes a VWAP in the account.
That's interesting.
So that's a formula, basically.
So this is on TrendSpider, right? And I'm not affiliated with TrendSpider. I am going to be soon, though, after this one, when I send them the replay of this. But This is from TrendSpider, all right? So I'm trying out TrendSpider for a while. For me, it's not a good platform, not shorting. Like I'm using TradingView, absolutely fantastic. TrendSpider, not for me, but if you're trading the stock market, absolutely amazing. That's also why you get a free subscription to Trading TrendSpider when you sign up to Trade a Pool, which is our sister company where you can trade the stock market fund and get funded. But this right here is I love because what TrendSpider has done here is they have introduced a completely unique and new concept to technical analysis. And I actually think that if this goes on for a couple of years later, it might actually be added to things like the CMT curriculum and things like that, because this is what I believe something that experts in technical analysis should know, because having a candle based on volume or VWAP in this case might actually give you a significant visual edge in technical analysis. With that said, I have a smorgasbord to attend, so I will be. Do you guys know what that is?
No, I
It
was
means you're
just
fat.
wondering.
It means you're
Okay,
fat, Jonathan.
no, smorgasbord is Swedish, and it's basically just a bunch of nice, good stuff to eat.
Just
That's
means
what I'm
you're
going to
fat.
do.
He's gonna go and eat a heap of food and get fat.
So
That's
I'm
it.
going to contact HR now, and I'm going to send them the replay of this and say, LJ called me fat. What can we do? Can you compensate me in any way? Please do it financially if you can.
All right, and I'll send you back a link to my fat loss guide and my fitness. Get fit in
Right.
90 days.
Do you actually have one of those?
No, no, I
Okay,
don't.
well, if
I
I
used to
wish
do
you had,
personal
because I
training when I
kind
was
of
at
need.
uni, but I probably have. I probably do
I feel
have
like
one
you would.
from back
Jonathan is
then
ready to
somewhere.
buy it. So think about it.
Sorry,
He's
what?
already what?
I'm saying it sounded like Jonathan is ready to buy it, LJ, if you have one.
Oh yeah, definitely,
Why not?
definitely. Like you get it, you get a guy like that. Yeah, sure. Give it to me. Give it to me right now.
I
Okay,
probably
I
have it on a
will.
hard drive from back in the day. Yeah,
Hard drive.
yeah, because
Yeah.
this is when I did that stuff like personal
Guys,
training stuff, whatever,
I
when I was
gotta
young.
go. I gotta
Yeah.
go. I gotta
All right,
go.
go eat your food, you
All right.
big fatty.
Take
Enjoy.
care. We see you. See you later. Take care.
See you, man.
I'm gonna switch to a
Can we get?
screen and leave for just 2 minutes and come back.
All right,
I
that's
need a
fine.
shot of coffee because otherwise I'm dying.
Yeah, that's all good. All good. All good. Um, Mixed things of nice to eat, dude. Jonathan will just eat anything in sight. If he sees it, he eats it. That's it. Calories in, calories out. I expect it in Hub Credit. Yeah, the amount of calories you lose, you get in Hub Credits. That'd be great. Oh man. Alrighty. So, I guess we're on euro dollar, like we were talking about before. So, top side, what I'm seeing is the higher target is somewhere up here around that 116.70. You got the 50 and 100-day moving average up here as well, right? So, right now, options are starting to price right up here going forward. Just so you guys are aware, so this is probably likely the bottom through here, and any pullbacks are probably just likely to come into this 116 or so, and then we start to move higher. So I wouldn't be further betting on shorts for the euro from here on. We don't need just another candle. But yeah, next episode of Pipped Off next Friday, guys. So if you guys go and check it out, you get another episode next Friday. Next Friday is next Friday? Or this Friday? Next Friday, I take it. What else do we have? Dixie. So yesterday as well, when I was speaking with Rich, we were looking at the Dixie. I need to delete like all of this. This on my screen is much clearer because I got high res. Let's get rid of some of that. It's a bit better. So back early November, we came outside of that trend line through there, made the break, classic sort of break retest. We had a slight dip in there on some of the news headlines that we had coming through, came back outside, retest right on there. We've ran right up into the 200 moving average on the daily and now pulled back from there. It's also roughly the double top up here around that 100, just above 100 level on the Dixie as well. So we've played that out nicely. If we go down to now the 1 hour, we've had a pretty steady, staggered lower highs, lower lows, and then we broke yesterday's low as well. And now we've come up and we're just testing the underside of those candles. So like I said, we've got a bunch of the options levels a bit lower on the euro dollar today, and we've already had quite a bit of movement. So we may get stuck around this kind of price. We could even eke back into this area just a little if we go down to, bring it down to a 30-minute. Let's delete this rubbish. But you'd basically be looking at that level through there as your absolute peak, probably, and then we'll likely see another downdraft after that. So similarly, last night, you got that guy running through there. We had a couple tests of it, came through on the hourly. This is a half an hour, but if you see on the hourly, we didn't actually close beyond the top side. So you can see we wicked through it, closed on the hourly underneath that trend line there that held, reverse back down, come back into retracement, double top there, came right off. So anywhere here, similarly on the pound, like with euro dollar, we probably have this small pullback. This area for now, middle of today's drive, is probably going to be the rough support. And similar as we've seen this pattern play out a few times, this sort of trend line capping us a number of times, we pull back into there, either come just short of it or test the bottom side and then rally off. This being the pound and where the current state of British politics and Britain in general is right now, you're probably going to see, if we do get the down kick, obviously you'll continue to have that outside move on the pound rather than the euro. So euro dollar, equally looking for any deeper pullbacks into about this 116 level to then go long off there. Akram, you short gold. 4220. 4220. I mean, I'd love to see you on pipped off, but don't want you to be pipped off. I would say you're pretty good for this, though. We're almost there anyway. You're not far. Where'd you actually short from, Akram? Because if I get rid of this for a bit, I'll show you guys the pivot for today. All right. This one's calculated different. What settings do I have on my... I probably have to reset the settings on that. On my MT5, I have another custom daily pivot indicator. So, yeah, 4240 was the top side resistance for today concerning that. So, banged right into there. That's what I was looking for. Never mind, it went through. What do you mean it went through? I'm still short of that. $35. Oh, okay, so you closed at 21. Okay, yeah. Oh, if you short from 35 from 21, that's plenty. That's fine. That's yeah, it's good short just from here. So, I mean, yeah, again, gold, you've got that head level there that we snapped through. So that's your first point of contention. Then see if we manage to get any kind of a deeper pullback, because obviously we have actually had a reasonable run up through here. So you could get some kind of a deeper pullback back to about 41.90 or so. Right now, gold momentum is pretty strong. It's pretty hot. So I'd say we're probably more likely to cluster around here, around that 4220, consolidate for a bit. So 4220 to 4210 by that prior head also.
I had such a good entry for short for gold and I missed it.
Yeah, where were you looking for?
If you look at the 5-minute time frame, this high, but not like a double high, but it started dropping, and then the small pullback to the upside before the continuation of a drop.
So
the
what, like
last
that
high?
top?
No, the
This one?
last high. Yeah, this one. That was perfect entry actually.
Yeah.
There was a volume, there was everything, but I missed it.
Yeah.
But honestly, if you look at the higher perspective again, if you look at the higher perspective, it's not it's completely bullish for now. So shorting it also is not particularly something that I would take normally.
Yeah, after we broke beyond basically this level is the 4190, and we've established like a pretty healthy run beyond that today. So if I go and hide all that stuff, we got above the 10 moving average. We got through this block, that sort of pause consolidation cluster after the first drop, and then the bottom of this wick, we just sort of ran right through it. So that was my point of resistance that we had to basically fail at for us to turn lower. I will say though, I don't think we're necessarily just running for highs once again, right? I think I said this yesterday as well. Very similar to when we had the consolidation around 3,500. We had many of these dips down. Looks as though we're going to take another attempt, and we stall sort of partway, come back off, faff about in here, then eventually get up, then come off. I think it's going to be a similar situation like that for gold. So last night we were definitely helped by one, we had like the NASDAQ and stuff falling off, and then two, like I said a bit earlier, we had I forget who it was, which Fed member, but he was saying we're basically on the cusp of the Fed buying assets once again. So more liquidity into market, obviously gold positive. Yeah, what else is there on the cards? What else are you guys looking at today?
I'm muted again. So I'm looking for the gold to reject 42.59, 42.60 level.
Do you have your chart? Do you want to show me? Or?
Wait, yeah. I'm gonna change it here. So what I'm looking for the gold to come here. We had this accumulation of volume as well, and there is some volume here that might stop the price for now. I'm not sure if we're gonna reverse all the way down from this. By the market structure, it doesn't look like it. It would be completely weird if we just reverse in the middle of nothing. But I'm expecting some kind of reaction from this level and perhaps some kind of correction before the continuation to the upside. Maybe here again, this zone, and then the continuation higher from here.
Yeah.
So I'm expecting I'm still expecting some kind of upwards movement, 42.59, taking it, and then the downwards drop.
Because especially if we move closer to confirmation that the Fed will cut in December, I still think they will.
I think they will as well. I think they will cut the rates again in December.
Yeah. So the probabilities were too high before. Obviously, Powell sort of stemmed that. Anastasiia just died. We'll jump over to mine. I'm sure she just accidentally closed everything. There we are. But yeah, so those rate probabilities had to come down. They were way too high at the time, especially with the shutdown, no data, that kind of stuff. Jerome Powell referenced that. Welcome back.
Yeah, I pressed the wrong button. I was
Yeah, I
trying to
figured.
show this. I was trying to show the Fed watch tool
Yeah.
and the probabilities of the rate cut in December, and I pressed completely something wrong. So we have right now 50-50 pretty much chance that the rate is going to stay or the rate will be cut. A little bit higher chance that the rate is going to be cut, like 52% versus 48, but we still have 27 days. And we
Yeah.
have eventually the shutdown will be lifted by then. We're going to get data coming in through finally, and I think we're going to still see the rate cut after all, because the next one is on the 29th of or 28th of January. And right now we have the higher probability of the rate already being 350, 375. So be cut again. I don't think if they're going to cut it in December, they're going to continue cutting it in January necessarily. But I think the December one is still coming through.
Yeah. Yeah, it's quite interesting that we've now dropped down to 51% because we're at 65 at the start of the week. We then had the ADP numbers come through, which weren't great. We've
Yeah.
had a number of the Fed members talking about still wanting to cut. They still see ample room to cut, etc. That's the basic direction, blah, blah, blah. And yet the market is pricing stuff the other way. And that was particularly from last night, which seems to be after we had the headlines come through that we probably won't get the October report altogether. So I think that's the wrong way of looking at it, though. It's basically obviously less data, no data, what Jerome Powell said last time. Don't have the data, we're not necessarily going to cut then because we need the data. I think they'll look at the tangentials that they have, get the new data, and then it will still be the same picture. So I think this actually needs to come up from here. And there's a distortion currently between all the head bank economists now. Not that I respect their opinions very highly. I think they're at about 90% chance of a cut. Yeah.
Of the cut.
So, yeah. So you got very much a difference in the market pricing versus sort of forecasting element going on there. So, yeah. We've definitely slowed down in the market after jump before.
Yeah, we did. We had a market completely stopped.
Aussie dollar, I will say, I did jump in again. Since
For a
we're
buy?
holding up good here. Yeah, for a buy.
Good news for me.
That top side target at about 90. And I've got the stops up here at 62. But yeah, I like that New Zealand dollar long.
Yeah,
For
New
sure.
Zealand dollar is looking good actually for a long.
Yeah, much of the
Whoever, I don't know whoever said it in the chat, but thank you. Otherwise, I wouldn't open this chart for another half a year, to be honest.
yeah, you got to send them a dividend when it plays out.
Let's see if it plays out. We can definitely figure something afterwards.
But yeah, I think it's quite good. So my end year target for Aussie dollar was somewhere around 67. So we're a touch under there now, but we definitely have options of starting to price higher. We've got more of a risk-on environment coming back. New Zealand dollar obviously is going to get picked up alongside Aussie dollar rallying, and then New Zealand has had a few idiosyncratic, stuff related to their own economy. Some of the data points haven't been that great, but it's sort of very much in the price. It's a bit oversold. at this point. So it's definitely due a turnaround. I think Ord NZD as well was like the highest. It reached the highest in like 15 years or something the other day. I'll zoom out further. Highest since 2015. That's what it was. Not in 15 years, since 2015. And then obviously we had that peak during, just after COVID. But yeah, I mean, this has been on an absolute storm, reflecting that difference. But just now, yeah, I think New Zealand dollars due a bit of a relief period. So yeah, I like it. I like it.
Yeah, even Euro USD is now reversing and holding. I was expecting it to drop a little further, but it seems like it's holding still at the same level, so might continue to the upside again.
Yeah, this basically I'm looking for some like a slightly. Oh, that's a daily. I was wondering.
Hello.
I'm looking for a little bit lower of a pullback down to about 116, and then to get long from there. Is this the doggo?
Yeah, he's coming to say hello. Sometimes when I work, if I sit on the couch with my laptop, he's coming and he's like taking my hand with his paw, like pet me, and I can't work, and he's like, pet me, I need this attention now.
Yeah.
And like the
Yeah.
moment I remove my hand, he like continues to do that.
It is, dude. It is so cute when they do that
Yeah.
sort of poor stuff.
Yeah.
My the cat recently in the past like 6 months has learned a similar thing, where when she wants your attention, she doesn't like you touching her paws for some reason. Some cats don't mind, some do, but she just like raises her hand. She'll be on the bench or something, puts her hand up and goes like this, like signals to you, like she's trying to wave almost. Like she's like, "Come," like, yeah.
It's
That,
so
or if she's trying to get me to go outside, but she always wants someone to like come outside while she's out there, just to, I don't know, be in the same vicinity.
That's so cute. It's adorable.
Yeah.
Oh my god. They're so cute sometimes. It's crazy.
Sometimes, yeah.
Sometimes. No, I look
Yeah.
at this guy and he's so cute almost like always, I look at him and like how is this alive?
Yeah. Yeah.
Yeah, it's
Very sweet. Very sweet.
so sweet.
Same with my cat. Like, that's probably the redeeming quality that she has after everything. Like that's
Yeah.
if not for that, she'd be turfed out. I was thinking the other day I should do some kind of, like how you have the chickens trading and that kind of stuff. Like, people have done that, right? I should try and get
Yeah,
like a
yeah,
cat
yeah. Oh, yeah,
to
this one.
trade.
Yes. Yeah, yeah.
Right? Yeah. See what I can do with that.
Didn't
Maybe
you
she can.
say that she time costed you a lot of money when she stepped on something? On some
Yes,
battles?
exactly.
Yeah, I remember that. I remember that.
Walked all across the keyboard, entered a whole bunch of trades, punched all the hotkeys, that kind of stuff on my like personal brokerage, and just, yeah.
Wow.
So she needs to learn to trade so she can claw back some of her damage done. So, LJ, how will November's inflation, manufacturing, housing data shape U.S. economy outlook for 2026? So, as far as October, I don't think, as it looks now, we're probably not getting October. As far as inflation, I would show you this. Inflation's just on the floor. We're not getting inflation from the tariffs. It's just not showing up anywhere. I don't think it's going to come from anywhere. The tariff stuff as well is just, it's more of a like a price adjustment. So you have like a immediate sort of shock, everything readjusts, and then you move
So you're
on.
not expecting tariffs to affect inflation much
No,
over the next, I don't know, 6 months, 12 months, nothing.
no. You'll have like a one sort of period adjustment now that we've run through past inventories, that kind of stuff.
Yeah.
There's been some countries and or areas of the economy or specific companies themselves that have been like exempt or had like temporary exemptions or stuff like that. But yeah, it's more of just a one-off bunt. Like, okay, prices were here, now they're here, and then they just stay. They don't sort of expand. It's not like a compounding type effect like inflation has. So yeah, I think that was very much the thing that confused me when this all started and everyone's talking about this ongoing inflation effect. I'm like, I don't know. I found it odd. Um, if the price of something goes from $100 to 110, that's just an arbitrary number. From the tariffs, it's not going to keep going up. So it doesn't go 120 and 130 and 140, right? It's just a one-off. So, and at the same time, there's heaps of countervailing effects where inflation is coming off the board, and then you've also got the Fed reducing rates, etc. So, but yeah, so as far as the inflation front, I expect it to be pretty tame, pretty much in line. Manufacturing, I do expect. So ISMs have been like beat down for quite some time. We've seen them pick up a little bit. Some of the recent data, and we missed some of it as well because of the shutdown, was just when we had that last spat with Trump and China around the tariffs, around punching stuff up to 100% again. So whenever you get that, we've seen the manufacturing data and some of the other bits and pieces sort of drop because people like hit pause on new orders and that kind of thing to wait and see where that lands. So we've had that sort of dip there. I expect from now the ISM to begin to actually pick up. So that'll be positive for the economy. Housing data, as far as that, housing going pretty strong. Rates coming down will help that. Obviously, people start buying.
Yeah.
Next question being whether the 50-year mortgage thing actually happens or doesn't. I'd say it's very 50-50 at the moment. 50-year mortgage is good in the sense that it helps bring down people's average payment so people can afford the house. Where it's bad and why it might get turned down is because in the long term, you can end up very easily like negative equity in the house, and it ends up being a poor situation for the larger economy. So you're making very much a trade-off, because by that time, 50 years of compounding interest, even with the gains, with the extra 20 years stacked on there, it dwarfs the capital increase of housing at that point. So that's where it might not get implemented. But yeah, I think the US economic outlook for 2026 is going to be pretty good, pretty crash hot. We got the stimulus coming in, the Fed hitting the pause on QT, probably coming towards pumping more money into the market. We've had the shutdown ending now. You're going to have liquidity coming in from that. And then eventually the Fed will start buying bonds and doing more QE as a whole once again as well. So I think we're going to have a ripper 6 to 9 months. Stuff will go bonkers, and then it'll get too top heavy and then crash off. It's my general summary.
General overview.
Yeah.
Okay, so where is your stop for Euro USD now? That's AUD USD for AUD USD. It's basically very normally very small stop, right, for this.
Yeah, let me check where I actually put it, because I mapped this out. Let me just make sure this is actually where I put it.
Yeah, I'm
I've
just
got it at
because
61.
yeah. Okay.
Yeah, I've got it
Oh,
there.
okay, makes sense. Yeah,
Yeah,
that's why I'm asking because
that's
I'm holding it
58.
obviously. Yeah,
Yeah, yeah,
I was
58.
wondering where will you consider your trade being invalidated because
Yeah,
I have much bigger stops for GU and NU, but
yeah,
I have a smaller risk as well because honestly I was waiting for this GU for a long time. So
yeah. I've only got half on this,
yeah.
because the other sort of, if not buying in here, the other buy point would have been at basically that candle, pretty much just where the stop is. So if we get down to there, but price action is still looking healthy, then I'll just shift that a little bit further and then add at that level and then go, yeah,
But you're gonna keep the original
something like
position
that.
open.
Yep,
Okay.
yep. And then so that'd take the total risk to like 1.2%, with the drawdown plus the new position. Yeah.
Makes sense.
So there you go. Euro dollar in New York, bullish. Look, coming into New York, I don't think so. At least beginning of New York, I think we're going to get the downdraft towards 116. We've got, I have it. There's a large number of options around 116. So anything over like a billion is significant enough that it tends to have a pull in the market. Um, we've had quite a run higher today as well, of course. So I'd be looking more for this to come into 116, consolidate around here through New York. You'll probably test the underside of here. So you come to 116, come up to 116.10 or so, bounce around here. It's probably going to be a tomorrow story, to turn bullish again. So yeah, I'd say you're probably looking for shorts going to New York and then consolidation after that.
So you're more expecting it to continue up tomorrow.
Yeah, I think we're kind of done the move for today. Yeah, I mean, we've seen like dollar yen rally right up. We're coming into, I guess, soft resistance here. I'd say we pull back, but again, similar kick around here for today. Then potentially tomorrow, come back through. The piece that could disrupt that, I suppose, is any kind of headlines as to whether we are or are not getting certain pieces of data, or if they might be further delayed or some kind of issue like that. But yeah, that's my general expectation for the rest of today.
But you're expecting the continuation to the downside on USD JPY, so why not upwards on EU today? If
So
dollar.
again, this is not today. So I expect us to pull
Okay.
back a touch and then trade sideways. So similar with EU down through here, trade sort of sideways, chop about maybe up to there, whatever, but no like break of new highs until tomorrow.
Yeah, makes sense. Okay.
And then the next sort of soft point I've got 116.40 and then 116.70 further up.
Let's see.
Yeah.
Let's see. What's your take? Because I asked you about the crypto. We talked about this in the beginning, but I didn't ask you about the stock market. So what do you think about the S&P and NASDAQ? Because I'm also looking for the short continuation for both of those. So I'm
Yeah,
curious to hear your
so
opinion because I was short yesterday at night on this drop. I was short in S&P yesterday too, which was quite good actually. And now it was just 1%, but it was good. And now I'm expecting the continuation further down for both of those.
I am quite neutral at this point, given today's price action. So I was looking for, after yesterday, so this drop back into here, and then a run and attempt at the highs from yesterday, and then to break through. Obviously, once pull back up through Asia just after rollover, sort of traded roughly sideways through the rest of Asia, made a double top just before London, then rolled off. With that, seeing that, I end up going short. Now that we've done that, I'm much more neutral overall. I don't really like how. Yeah, I guess we're very sort of undefined. Obviously, it's the tech players that are causing that lag. So last night it was Nvidia getting hammered, whilst at the same time you had stuff like the Dow actually made new all-time highs due to financials and stocks. So like Goldman was way up, that kind of stuff. So the AI hangover from last week still seems to be there a little bit. I'm not. So why I'm neutral is at the same time I'm not confident on precisely calling a deeper drop just yet. So maybe after tomorrow, depending where we close, and if we get any other further news on when we may or may not get inflation, this, that, whatever we're getting, then there might be a bit more direction. But this current point for today, and given the current structure, very neutral. So, and the this is where the options pricing is for today, 25,538. So we drill down a little bit. It's roughly where we tapped into, just up here, where you traced to, right to where the options level, expected level is for today. So
I'm looking at the continuation downward.
Yeah, I was thinking about it earlier, but I'm undecided. Yeah. I think Anastasiia just closed herself out once again.
Yo.
Okay, I think Remy added you, and then I removed you accidentally. Sorry,
okay.
Remy. How are you doing, Rich?
Anastasiia just actually close everything. Just tuk, tuk, tuk.
Yeah, took herself out.
Oopsie. How are you, mate?
Doing well.
Better.
Better now, yeah, I should say. Not so well before, but better now. So I feel like I've got
nothing that a good chunder doesn't fix.
Yeah, not the first half an hour after, but once you get beyond that, you feel a bit better.
Welcome back, Anastasiia.
Welcome back.
I'm having some technical issues today.
Took yourself out once again.
No, it was I couldn't hear you.
Oh, okay.
Like a breaking down connection, I think. But Rich, if you don't mind, I'm gonna quickly go through the S&P and NASDAQ for my screen. You see, it's just not working out for me today.
Yeah, I see what you're saying.
Wait, I'm gonna try it.
Your camera is also very laggy at the moment, where LJ's camera seems fine.
Yeah.
I think maybe your internet's
No, it's mine. It's mine. Maybe because I don't know. We had some issues. We are having a storm. Normally here.
Classic.
So it's probably because of the storm. But well, at least it's in the end of the stream, of my part.
How lucky.
Yeah. Don't worry, I know all about the storms.
Oh, you for sure, of course.
Yeah.
No, anyway, I cannot really share my screen, but I'm waiting for NASDAQ way lower if we are talking about the, like I'm waiting for the second shoulder of a head and shoulders pattern. If you look at the hourly or 4 hour time frame, essentially. If you
4
look at
hour.
the 4 hour time frame, yeah, 4 hour. Thanks for helping out with this one. I'm looking at the second shoulder on NAS approximately 2500, 25,200, 25,300 zone is where I'm gonna be looking for a buy, and I'm looking for short until that point. We are having it's having difficulties going higher. If you look at the price action on 4 hours and recently since yesterday as well, it tried dropping. I'm looking at the momentum also for shorting. We can see like it's taken a very big effort to grow, so it takes hours, and then within just 4 hour or 8 hours, it's completely wiping out the whole effort of buyers that been put in for the growth, for gaining those those highs again. So the momentum for me is extremely shorting right now. And the same thing, I'm waiting for S&P 500, so I'm waiting for the second shoulder of a head and shoulders pattern where I'm going to be buying it afterwards. So I'm now short with a small risk. So let's see how this one plays out. I'm now short NASDAQ. From the top of, basically, if you look at their 15 minutes, no, wait a second, 5-minute candle. So from the top of the second short candle right
So
now,
here.
like this one, something, yeah.
Yeah. Okay. Fair. See, I was if I was going to consider the shorts, because I can see the same. This is the same thing as you. That this is where I was conflicted with it. I'd like to see a move back up to there first, to short, ideally. But
Yeah, for me, yeah, it could be, but
yeah, I mean, we're dying pretty quick now, and again, it's like double topped, and like I said, that's right where the options level is as well.
yeah,
So it's going to provide like resistance, the same way I was talking about options level providing support for the euro about 116, because you get the market makers coming in as well.
yeah.
But yeah, no. If I'll probably wait until we get a break of the lows, and then yeah, basically down to that 200 moving average on the 4 hour, and it's near where we had that gap up through there as well. I can definitely see that head and shoulders that you were talking about. So
Yeah.
very nice. Places through here.
How we doing?
Doing well. How you going, Rich?
Yeah, I'm good, thanks.
And
I'm good.
Rich
I
and Rich.
just saw the back end of this, and I heard Head and Shoulders pattern, and my ears perked up. I'm a massive fan of Head and Shoulders, although I get absolutely ripped for trading Head and Shoulders. I don't trade them as Head and Shoulders, but I love the pattern itself. I think it tells a slightly bigger story, very similar to the kind of quasi, or at least that's how I interpret it, that Victor would talk about, right? That failure to go high, that break lower, stuff like that.
Yeah.
It's good.
Yeah,
it's really good.
It's an only technical pattern that I still trade. Normally, I like to see the previous levels being taken first. So in this case, for example, this short that you have now on your screen, these head and shoulders, I wouldn't take because the previous low of the left shoulder wasn't taken. So I would like to see the low, this low being taken first, price at least renewing it for a couple of ticks. For me, it would be an absorption of the buyer's level, sign of the strength of sellers, and then, yes, if it comes back to the same level, I'm taking a short. So preferably, I like to see this level being taken. So if we reverse it and flip it for S&P 500, for example, for a buy, it's perfect. Again, I cannot... Can you go to S&P for a second? My screen is not working. Still.
Which is the safety one. There we go.
Yeah, on the 4-hour time frame, if you go. So we now have taken this highs, higher, much higher than the previous highs. So now I'm looking for the price to return towards the previous shoulder at 67.50 approximately, 67.40 here. So you see how far the price upper, So if it goes there somewhere back, this is my level for a buy again for the new highs So maybe even for the new all-time highs, depending on the situation.
Yeah, I
I
agree.
feel
I
like
agree.
that's so. I feel like that's easy to teach as a head and shoulders pattern, but really, what's going on is much, much deeper. Most of the time, I don't go into the mechanics of what I think's happening deeper than that. I'm like, head and shoulders, inverse head and shoulders, job done. In fact, there's only two chart patterns that I will trade, but I don't trade them as the pattern. Maybe we'll touch on them a little bit later, but it's something that it's a bit of a bugbear, I think, because if we looked at the candlestick, what is that book called? Where it lists every single candlestick pattern that we can trade as traders. There's some of them.
Candlestick. This one, something
Have you
like
ever
this.
read it?
No.
Okay. There's like so many patterns as traders we could trade, but there's only really two that I would personally touch, and I would never trade them as just a blind pattern. I trade them because of what I think, like you said, of the absorption of buyers, the absorption of sellers, the market makers, pairing orders, failure to go higher, lower. So anything I can combine structure, order flow, I will then overlay that into a pattern and go, it makes so much sense that the market could do this. And it's demonstrated by a pattern. Curious, you said head and shoulders pattern. How long have you been trading that method? You said that's the only pattern that you would trade.
Since the last 7 years.
7 years. Yeah.
Yeah, it comes back. It goes all the way back to me when I was trading the naked chart and pure price action with Fibonacci.
So like the fib would be the pullback in line
Yeah.
with maybe the neckline or the shoulder line, something like that.
Basically, yeah. And now I mix it with volumes as well.
That
Yeah.
was my first profitable system 5 years ago, was the 1 hour effectively. And I remember thinking, this is really cool. It's really clever. I've got it all worked out. And then someone joined a stream and they go, oh, that's just raid, break, return. I was like, oh, you just completely poo-pooed my whole strategy. I thought it was like super clever. They're like, no, it's just run liquidity, break structure, and return to a fib level or an order block or a
Wait,
breaker
what do they call it? Raid, break, return.
raid the high. So it'd be like raid the liquidity,
Yeah.
run the
No, I was
opposite
just saying, I like that. I like the raid portion. You know, because people say, you know, like break, retest, run,
Yeah.
or whatever. I much prefer raid. It sounds cool. And goes with the Viking heritage. So
But there's this moment of like, hang on, is a break of structure a candle close or is it just a wick? And then a run on liquidity, is it a candle close or is it just a wick? Because candles will close pretty much on any time frame if we keep going down the time frame. So when it's like having a predominant time frame like the 15-minute and it just wicks a high, do we call that a run on liquidity? And it was these tiny nuances that actually took me ages to figure out the difference between a candle close versus a candle wick and what time frame would be my dominant time frame. And then I've fluctuated from the 1 hour down to the 15 down to the 1 minute for the last 5 years on this approach, and kept sort of trying to, I get better quality on higher time frames, but I get way more quantity on lower time frames. So it's a trade-off of like, Rich, do you want like a 0.15 at 4 or 5 trades a day, or do you want like a 0.3 at maybe 4 or 5 trades a week?
Guys, I will have to leave you. Unfortunately, I do have to run today. Thank you so much for the stream. LJ, thanks a lot.
Thank you, and thank you for covering me for that little bit.
Of course, no, thanks for covering yesterday. Richard, thank you so much. I'll see you next week.
Catch you later. Cheers.
Goodbye, Anastasia.
See you, Anastasia.
Doc
Three
LJ.
Musketeers.
I only just saw that.
What's that?
I only just saw the Doc LJ.
Oh yeah, no, I saw that before as well. Who, I don't know, someone changed that. I didn't change it. Someone, it might have been Johnson now. Yeah.
Coming on stream talking about your medication that you have to take.
Yeah, I get. Oh, dude, yeah, I completely forgot about it as well now until you brought it up. Because yeah, when I jumped in before, I was like, wait, why is my name Doc? I was like, oh wait, oh it's Doc LJ. So that's good.
But he's playing a game with you, mate. I'm probably sure it was Jonathan.
I'm sure it's Jonathan, for sure. It has to be. You know. How's your trades going, Rich and Rich?
Which one do you want to start with?
Okay, we'll go top down. So, Butler,
Start with me.
how's have you taken any further on like the live account that you were trading, like the stream one?
I only took the one yesterday. I didn't get entry point this morning during the stream. So I had a trade just before the stream on my personal account and on my prop accounts, but not on the live stream account. It was just a very quick EU buy. And since then, it just went absolutely parabolic. It just went to the moon. So this is EU. Prior to the stream, we had this area of yesterday over here where we pretty much really cemented the upward momentum. Obviously, just before that, we had areas where price tried to break, to try and break lower, the price lower. It failed, and then over here was the biggest attempt with the most failure, the most absolutely like rocket ship movement during the New York session. And then, as expected, after a big move, we have some consolidation and a little bit of sideways action. Went to bed this morning, arrived and saw, okay, well, we've kind of like just wicked into it. We've been struggling between this high point of yesterday where we had a single reaction and then this base of mine. And then when I arrived at the markets, it was roughly around here, just after 6. No, this is just after 7, 7:30. So just around about 7:30 this morning, my time, I arrived and I saw, okay, we're at this point. I drew a little support zone to see how we're going to react off of it, just to kind of like narrow the range ever so slightly to see if there is any more momentum to try and push it lower, or if we're going to start pushing higher. What happened was price basically came into this support resistance area. On top of that, the base area as well. Price started to want to push up, and then this was the deal for me. This one sealed the deal that there was no more downward momentum whatsoever. So price redipped back into the area and then started pushing higher. Last ditched attempt to try and push the price lower, to try and break this new established attempt to push higher. Bears absolutely failed, printed a very nice bullish candle. I decided I'll get in with the intention of aiming for the support area of yesterday where price failed to push higher, retested and started dwindling lower. This was my initial trade. It was a 1-2 on EU. Did not take it on the stream account. Like I said, wasn't during the stream. And then we just absolutely mothershipped all the way higher. Came into literally just wicked a higher time frame area of interest. Okay, there we go. Like struggling with the RAM, I don't know.
Yeah.
Same idea. I tend to target areas where price showed it wanted to break a trend and then absolutely fail. This was one of those moments. Even though it was news, this follow-up day was the confirmation that this area over here was an area of interest for myself, because we came into it and then just never came to test it again and just absolutely tanked off. And we literally wicked it. Just to the pip wicked it.
Yeah.
And then since then we've been a little bit bearish and then just sideways consolidation. So I'm waiting for these multiple lows over here to be broken. Either, doesn't matter if it breaks up or breaks lower, I will then start looking for a trend to be formulated and then possibly take a trade from there. But as it stands right now, this is the singular only trade that I've taken today. I marked out a gold trade, didn't take it. I just marked it out, and I'm happy that I didn't take it because it would have been running in drawdown at the moment. But yeah, just the one trade for me today.
Fair. Yeah, because I was wondering, because like yesterday, obviously we were talking about, I was saying, dollar should turn around. Then we've gotten that very much today.
Yeah.
So yeah, I was curious whether you managed to capture some of that.
Only the singular one, just the singular one. but I
Yeah.
stuck to my plan, and
That's the thing.
didn't
Do you
find
never, ever change it when you're seeing something like, because obviously you outlined those higher levels, right? So, but you no matter what, you don't have like a special case type thing, no?
At what point, where's my objectivity? When do I turn around and say now is a special case? Why now is it not a special case? I had an idea that we were going to start having some movement, but not to the degree. So I would have expected if price were to come up to kind of test this area and then kind of like decide what it's going to do there. But my back tests is completely based around this idea. And for me to stick to my plan, I need to always trade like this. And it's successful for me. It's like, I don't know. I don't know if it's the idea of I like the fact that I'm always in line with my expectancy. So I like the idea of expectancy. I like the idea of looking at my win rate and calculating almost to the dollar value what I can expect to get maximally and minimally on a day. And so if I can stay within that bracket, I'm more
running it very much just like a business. You know, you got this much invoices coming in, that much expense, and it's just rinse, repeat, sell this many Big Macs every single day type thing. But why I was bringing it up is because like the curious part is obviously you're a big poker player, enjoy poker. So obviously there's points when you need to know when to sort of press the throttle and take that special case type element, or like whether you bluff or call someone else's bluff, for instance. So I was just wondering if that ever comes into play in trading as well.
I've thought about it, to be dead honest. I have thought about it before, where I just said, you know what, I honestly think that if this is going to go, this is the point it's going to reach, and I'm going to try and reach that point. But while I'm in the trade, I kind of like, I don't know, I'm not sure. If I get like the slightest of pullbacks, then I'm like, oh, I should have just taken my 1 to 10, that kind of, not 1 to 10, or my 1 to 2 RR and be done with it.
Yeah. And I guess the difference is in poker, because you need to do that to win. The market, you don't need to win. You're not trying to win. The objective is to survive and then come back every single day and just get your bit out of the market every single day. You don't win the market, you know?
No.
Fair,
and this is like the idea of me playing cards against myself versus if I'm playing poker, I'm playing cards against other people. I want to understand your logic. I want to understand how you're trading or how you're playing specifically. So I try and pick up on certain tells. The problem is, what tells does the market give me that I haven't already tested? So the tells that I get is the short-term 5-minute to 15-minute areas, stay in the trade for about 40 minutes maximally, and then I'm happy with that. And I'm content. That's the thing. So I'm really content with trading this way. And it boosts the confidence when I know, I was right. Look at my expectancy. I got 2 trades today, and I'm happy with my 1% gain, as an example. This is like, I was right. See? So when it comes to poker, it's completely different, because even though it's a game of incomplete information, you don't always get the gratification of seeing what the other person's cards are. So if they fold, you're like, I won, but you're still stuck with, what did he have? What
show me. Come on.
So there's that little bit of a divide.
Yeah, fair. What do you have for us today, Rich?
Before going to that, I just want to touch on what Richard said, actually, because when you said, but surely, there's I think of it like a boxer. Richard's just said, look, I've trained in this ring. I know this ring. I know every corner of this ring. I've got the data for it, and I survive in there. I know I can last the round. And LJ was like, but if you know how to fight, why don't you just get in the other ring? Why don't you just take on these other opponents? Why don't you go for these bigger TPs? And I like what Richard said. He was like, well, I've never been in those rings. My data doesn't tell me what happens when I get in there. I haven't looked at bigger TP targets, 1 to 3, 1 to 4, 1 to 5. So it's, as Richard says, sticking within what we know is a massive confidence boost. There's a bit of a caveat to that, because as traders, we hear this, it's about leveling up, it's about getting out of your lane. But also, like, that's, if done wrong, that's where the crashes happen, right? So it's kind of,
Yeah.
for me to move from a 1-to-1 trader to a 1-to-2, I need to go back and look at every single one of my setups and then compare the data. What if I went for 1-to-2? What if I went for 1-to-3? What if I went for 1-to-4? And then we get an idea of kind of how the results look in comparison to that. So I like the Richard's like, nope, I keep it simple, because I find whenever I try and get outside of my lane, and I'm an incredibly creative person, I get in trouble for it. I get in so much trouble for it. I'm like, why don't you just stick to your simple rules-based plan and just execute? And I'm like, yeah, but when we see this tiny nuance and this extra structure break and a pullback and a wick and it plays with my mind, and now I need to do a whole new back test to find out if there's a better edge within that. So that's where a lot of my energy and time has gone into just bringing my trading back to a simplistic approach, and not allowing a singular trade to define me. In fact, today was a perfect example of that. I left a swing overnight. I've got this boot camp account, which I was like, okay, I'm going to leave a swing short on GU. And I went to bed, it was in drawdown. I was like, it is what it is. You know, I've got my stop in the place where the analysis is wrong. And the TP I had set quite aggressively within an area that I should swap my bias. And I was like, yeah, it should hit that. I wake up this morning, price has touched the TP. We're talking a nice swing to the TP and didn't close, and then pulled back, and it was in drawdown. And it was the first thing I saw this morning. I was like, this trade does not define you. Carry on, have a good day. And I was like, man, and I even looked at the TP target. I had 2 positions running, and I was like, yeah, not going to lie, they were big winners. And it didn't close by half a pip. And I was like, but I like that it bounced there. It made sense in my mind. And obviously I was asleep. So yeah, that was me. I took the loss on it, and then I was like, okay. And I'm currently short GU, aiming. I've closed the terminal because I didn't want to be distracted, but I'm aiming 1 pip below the wick to the left. I don't know if we've triggered that low yet. It would be on the 5-minute chart. Yeah, on GU. On the 5-minute chart, you'll be able to see it. No, looks like it's still held within that wick.
Just above. Yeah.
Targeting that low. Because earlier I was saying there's 2 patterns I would trade. One is a head and shoulders pattern. The other is a flag pattern. Now, I love flag patterns for the sake of they're a consolidation with a potential break and retest. That's what makes sense for me. So if we look at EU and GU at the moment on the lower time frames, for me, I'm seeing that same kind of pattern. I'm seeing the consolidation, and I'm thinking, yeah, if we break under this, there's probably a chance of a break retest to go short. Or if we break above, there's probably a chance for a break retest to go higher. Both of them are trying to break under, and they're now pulling back for a retest. So happy I'm short on GU. Whatever it does, I don't really care. It's not, again, one single trade doesn't define me. I'm learning this from looking at my data at the moment and reminding myself, you know, on a trade by trade basis, it doesn't make a difference if it wins on that singular trade. It's just what does it do on a bigger sample size. So today was just a good example to have. You know, probably one of the most triggering examples is where a trade misses your limit order by half a pip and then sails off to what would have been your take profit, or when the market misses your take profit by half a pip and then pulls back and hits your stop loss. And to be able to see those things and go, oh, cool, okay, doesn't define me, on to the next. Yeah. That's about the only thing I can rely on when it comes to trading, is how will I conduct myself when things don't go my way. I like what you said earlier. It's about surviving. It's just about surviving. And initially I had this idea of like, how much can I make when I got into trading? And how much can I make was the reason why I didn't really make anything, because I was just so overly focused on, can I get more? Can I get more? So once I learned to manage risk, that's when I stopped losing horrendously. And then I was like, okay, I can start slowly building on this. But what about yourself? How's your trading cooking? I appreciate you've been maybe not at the charts immediately, but are you still trading?
Yeah, a bit ill, a bit under the weather. Yeah, pretty good. So a bunch of the stuff we spoke about yesterday, when I was on earlier, and then with Rich, came to fruition today. So I held Aussie dollar long, first of all, overnight through to today. We had the jobs data coming through, which I was expecting better. Came through very nicely. I was looking for that further topside target. I considered taking it after we sort of sat around here for a bit, but we're consolidating through here quite nicely. And I saw sort of that base forming on euro dollar as well. So I was like, all right, I'll hold on to it. We eventually sort of stalled out just below 80 up here. So my desired topside target would be about 65.90, a bit higher, but we paused through there. I then re-entered on this guy. Looks a bit confusing now. There's a couple of trades overlapped here. So that's the first one. It's now a little bit of drawdown because either we pick up from there or to about here is the next touch point. If we get down to there, then I'll enter the second half. So it's that trade. And then run for that 65.90. Beyond that, there was euro dollar as well. Held that through earlier portion of Asia. Early today, my time. It's about midday. Held that right through. Came up. We came back. I wasn't sure if this was actually going to drop through and I just get stopped out. But then we did get that run higher. Jumped out just by 116.20. That was my top side target there. We ran a bit further. And then the other one was the NASDAQ in particular, which is very nice. So last night we were positioned up here. The options level was, I think it was 55.26 or something, about here-ish, something like that. So I was looking for a short, and then for that those options to pull price back a bit lower. And then that also coincided with these lows. We punched a bit further from that. Then coming up today, recovered a little, retracement through Asia, pop higher. We then got this double top. So once I saw that, failed to get more momentum, jumped in short, collapsed since. So that's pretty much that. Now I'm on the sideline, just like we were talking about when Anastasiia was here. I'd prefer to short from this kind of area before going again. That or else, if this decisively breaks, then I'd take a entry through there. But somewhat on the sidelines now. So there you go. Nice. Simple as that.
Nice. The short trade on the NASDAQ is the problem I have with that, and I have to battle with this myself, is by the time price comes back up, it's probably starting to put in higher lows and it's starting to create bullish order flow. I often stand in front of trades like that to try and short it. And then afterwards, if I take a stop, I find myself going, price was clearly bullish by the time it come back. Do you ever have this sort of internal battle where you look at this and think, well, higher time frame is still bearish, but lower time frame is starting to drive into my level? Do I want to short this? Because I see in chat earlier, it was like, how do you have the confidence? Sorry. How do you have the confidence to execute on your edge consistently? And so when we get these moments where we end up kind of seeing a potential for a sell and a potential for a buy, how do you navigate that?
So in terms of like seeing this start to run higher and potentially question whether it's going to keep going, is that kind of what we're saying? Yeah. So I consider until we've actually broken tops at all, the short side is still completely in play. So that would be my key point for invalidation. So hence I'd rather short close to that area as an example. Now, that's also the other piece where I bring into play some other portions to look at, whether that's stuff like VWAP, volume stuff, the options pricing like we've got in front of us. So for today, that's 25,538. So as you come back towards New York Open, you can see that's roughly up here. So near where we had that double top formed once again. So I expect that despite us tipping back here, coming towards New York, we'll get a magnetic pull towards that level once again. And then quite often, whenever you're the opposite side, you will drive to that point and then a bit further, just like we had that price action to the left last night. So if we get this drive to here, you'll often get that, goes a bit further, then it's sort of extended, and then going into like the first hour, 2 hours in New York, you tend to then pull back into it. And then once you get that momentum, not always, but quite often, that momentum continues and you drive back down. So I guess I pull interplay a bunch of those tangential pieces to sort of find where larger market players are positioning themselves and where they're actually willing to put up money, put your money where your mouth is, of expectation of price distribution. So that's sort of the extra components that I lean on, I suppose. And then I take in, obviously, me with my fundamental macro stuff, whatever the current sentiment or consensus around, we're looking at the NASDAQ right now. That's going to be like AI, NVIDIA, that whole sphere going on. Yeah. So I have a lot of qualitative portions with the fundamental macro stuff as far as sentiment type pieces, then drive in the quantitative elements with things like options, and then look at sort of the live play, live weather map, if you want to call it that, of what you're actually seeing in price action and the charting in real time. And those are kind of each of the three pieces put together.
Gotcha. I said no because I was like, no, I'm not going to go down a rabbit hole. There was something I was going to go into, but we're going to go off down a massive,
deep chasm.
Yeah, let's I've been told that sometimes I should just keep it incredibly simple and incredibly basic, and I think I really like diving down the rabbit hole of the deeper layers of the onion when it comes to price action and why price moves. But I understand that we don't really need to understand all of that to be profitable, and so if kind of maybe it'll be good to keep it like I'll refrain from going too deep with that stuff. That's like my inner critic of going like, but it's so interesting. Yeah, it is once you've been doing it for a while. But kind of in the very earlier stages, it was all about saying, I need a simple pattern, I need a simple framework, I need a way of managing risk management, and I need to then start learning on how I can pull the trigger on these setups every time I see them without this overriding sense of fear. And I think once you get to the deeper end of the pool where you've been trading for a little while, you kind of do one or two things. You either completely become oblivious to the sense of fear and you go, well, this is my setup. I know it's worked. I've seen it for years. I just execute. Or you go down the rabbit hole of understanding every nuance to your emotions and your psychology and why you think the way you think. And I often think that psychology can be as big a topic as you want it to be. Some people will build an entire career out of it because it can be a huge subject for traders, especially when it comes to fear, greed, revenge trading, FOMO, everything that comes to, can you physically pull the trigger? A friend of mine, he says, if you, I can't remember the word for it. He said, but basically, if you don't feel any emotion, you have the potential to be the best trader. What's the word for that?
I run the thing of from like Stoic philosophy, which is like apatheia, right? Which it's basically like emotional equanimity,
right?
Kind of like apathy, which people see is like you care, So it's basically just where you're equally level on the downside and the upside. So good, positive emotions, but balanced. And you don't go like too high on positive. So you're just good, but like chilling. You're not like euphoric. You're not too elated. And then the same thing on the downside. You're like, oh, this isn't great. You're a bit like, oh, it's a bit rough, but you're never in like despair. And so you keep in that band and keep going on. I don't know if that's kind of like what you were saying.
So that would be similar to being switching into observer mode, where you observe your emotions and you say, look, I'm not going to allow myself to be biased in any way, because before we have a trade on the table, we're neutral. We're looking at the market for information. We're just watching and we're just reviewing information. When we put the trade on, naturally that's when the emotions and the bias attaches to it, because it's like, well, I want this to sell off or I want this to go up. So you're saying that actually I catch myself. So you're using like emotional intelligence and awareness. And I say, well, I'm aware of how I feel. And I understand sometimes, it sucks a bit, but I'm not going to allow myself to go into that despair of, I can't believe it's going to hit my stop loss, where you're tilted and then you need to try and do something on the back of it. And the same when it goes into profit. It's like, oh, well, cool. It is what it is. Just kind of keeping that equilibrium.
Yeah, I almost view it. You can view it almost like trading, right? Like, so if you're in like a drawdown, like you're a bit more negative, you're looking for how you can actually get back to positive. So the first point to do with that is stop getting worse, right? And then if you're in a good state and everything's going well, Murphy's law, something is going to come and disrupt you. So you're trying to keep a watch out to, look around for what's going to derail things, right? And if you can keep an eye out for that, it's going to mitigate that. And if you are in that downtrodden period, don't keep digging, right? So again, you switch the mindset and look for how can I get back up. And so I'm always just focused on that upside tilt on both ways. And then when you are up at that higher level, you're looking at downside mitigation. And then that way it's sort of, you keep things level headed, I guess.
So you're not looking at price action to come back in your favor to get yourself back up emotionally.
No.
So you're actually saying, look, outside of whether this trade works in my favor or not, I'm looking to try and mitigate my emotions myself. I'm looking to bring my negative mindset back up to positive and positive mindset back towards a more neutral stance, regardless of what the P&L is doing.
Yeah. And I'll try and again, it's like a premeditation thing of when you take the trade, okay, the trade could go to here, on the positive side, this is what you're looking for. In the worst scenario, okay, we're here. Say if I think that it's still valid and I do want to, increase the risk or something because the rest is valid, there's something else that's popped off. It could be valid and then something else could happen again and now it's invalid. Where's my extreme point that I'm willing to go to? And so I sort of try and map that out beforehand. And then so if it does occur, you're not surprised. You're not caught off guard. You're like, yep, that was possible. You didn't want it to happen, but it's possible. And then so if it does, at least you're not getting hit by a truck where you're like, oh, how did I get myself into this situation? And you're caught blindsided or something, right?
Yeah.
So I always try to do a lot of, that sort of premeditation prep of the scenarios before actually jumping into things.
Nice. So before you take the trade, you will, I've heard this explained that let's say we want to short euro dollar and we're going to use a limit order. The trade is not yet filled, but we have this idea. If price pulls back, breaks, retests, I want to sell it down. Now, what LJ has just shared is so powerful, and I really hope it connects with a lot of the traders that are developing, especially to try and manage themselves within a trade. Because what LJ, and my interpretation of this, please correct me if I'm wrong, LJ is saying that when I'm in a trade, if I allow my emotions to be pulled with the P&L, I'm more likely to do something stupid that's outside of my plan. So if I can recognize, hey, I'm starting to feel a bit negative, even if the P&L doesn't come back, LJ says I need to bring my mindset back to a level that keeps me relatively neutral. Because if I'm operating in that neutral area, I know that I'm just going to be like, oh, cool, it went to stop loss or it went to take profit. So to do that would be an exercise that I've heard of, an exercise that I do sometimes, probably not as much as I should, is first of all is getting to the skill set of if you take a loss, you go, fair enough. And you can trust yourself not to be silly afterwards. That is hard enough. But to help get to that point is before the trade is even put on is to realign our expectations. If we have an expectation that trade is going to win and it doesn't win, that's when we get all emotional. So a good exercise would be closing your eyes and imagining that trade to just play through to your take profit. And naturally you can feel a lot of excitement. You're like, yes, I just hit 2R. But it's like, no, I'm going to play it through again. The trade just moves to take profit. And you sit with it until you go, fair enough. And then you do the same where the trade goes to stop loss. And initially, when I started practicing this technique, I would get this, I can't believe it would go to stop loss. I would get frustrated, even though the trade wasn't live. And I practiced it enough that I was able to imagine it going to TP and stop loss with only really 10% of an emotional swing of excitement and frustration. And if I didn't do that exercise before the trade, I would be 70 or 80% excited or frustrated, depending on what the P&L was doing. And if I'm too frustrated or too excited, I'm going to end up being stupid. I'm going to end up being overly confident in my next trade or overly fearful, and I'm not going to be able to pull the trigger on my plan. So it's super, super important that first of all, we recognize how we're feeling as traders, and then we put something in place to try and bring that emotional state to equilibrium. Because I see in chat earlier, it's us against us. But the real thing about this is if you can't control yourself, then you can't manage risk. If you can't control your emotional outbursts, then you're one click away from pulling on massive pain and destruction into your trading account. So we've always got to first of all say, and I don't like the word master ourselves, because that sounds like we're like, you've got like a slave and a master. I like the idea of like we need to learn how to work better with ourselves and not control our emotions, but work better with our emotions. So yeah, dude, I'm so glad you shared that, because it's something that you've been. LJ's like old as the sun when it comes to how long he's been trading. So to hear that he does these techniques, this isn't just for traders in their first 6 months to say, oh, I'm struggling with my emotions. LJ understands the importance, and this is why he does it, of I need to keep myself neutral. If I don't, there is a likelihood that I'm going to keep clicking the buy button or the sell button or whatever the case might be. And it doesn't have to be, I guess, overly complicated than that. But I guess as long as we have something, for myself, I have a pre-trade script that I read, and it helps fire up the emotional brain, the logical brain. And then when I'm in the trade, I've got something pretty special that I use, which is a full detailed video in the course that we're releasing that breaks down exactly what I use within the trade. And it's something that's really, really powerful. I'm not gonna give any hints to what it is now, because I want it to be unique.
For later.
Yeah, it's for soon.
Curb your enthusiasm. Curb it.
I see we're getting screamed at. Euro USD 15-minute chart.
There you go. That's what we're looking at for 15. So we got there's a bunch of options, pretty sizable, around 116. So that's likely to have a degree of gravitation back towards down there. That's also by this prior box. So the highs from yesterday, then the high through Asia that we got tapped out. So you're likely to find liquidity somewhere in there, some more buying pressure, and then take another run towards the highs. But yeah, coming into New York, you'll probably get a bit of a downdraft, most likely. There you go. That's a euro dollar 15-minute quick take. There you go.
I was practicing this yesterday when had this swing position. I was like, let's practice being the observer, and I just kept looking at the P&L at the bottom that was negative, and I was like, Rich, that's not being an observer. That's staring blankly at your P&L that's just negative. I was like, stop it. So I pulled the chart to a 5.
So why is it so red?
Yeah, why has it got 9 figures in it?
Ew.
What's going
on?
But I was like, okay, come on, let's be sensible. Put it on the 5 minute, not the 1 minute, and close the P&L tab. So now watch the candles for information, not the P&L. And I was like, okay, you're an observer. And immediately price moved up against me, and I was like, oh, that's really bad for the P&L. I was like, Rich, stop it. Stop attaching the emotional bias to the movement of this trade. And it was just every time we're in a trade, we have the opportunity to acknowledge and feel these emotions and then just try and bring ourselves back to equilibrium. Richard, I'm curious, you don't seem to struggle too much with these kind of stuff. Do you have a pre-trade script or maybe a during the trade mantra that you chant to yourself? Is there a special t-shirt you put on or a pair of socks you wear or something that just helps keep you emotionally neutral in the trade?
You know what, Rich, the problem about emotions is that I have zero control over experiencing them. Zero control.
Okay.
If I'm angry, I'm angry. If I'm upset, I'm upset. If I'm happy, I'm happy. What I do have control over is how that emotion is going to impact me later on. Am I going to allow this feeling of annoyance to carry me through the day? That's a decision. That's a choice that I have. And I'm a choice person. I choose to take responsibility for not only the emotion that I feel, but how I'm going to allow that emotion to impact me for the rest of the day. The same thing happens with trading as well. If I'm fearful of my stop loss being hit, I ask myself, okay, why am I feeling fear? There's just as much a likelihood of this trade going in my direction as it's going to go against me. So why am I so negatively tilted? Why am I so focused on that negative side? And then I just say, you know what? I don't care. I don't care if this is going to hit TP. I don't care if this is going to hit stop loss. I just don't care. Because I'm trying to remove the importance of this one individual event. So in my mind, I know I cannot prevent the emotion. I know I can't. I'm not a robot. Like, I am feeling. I'm made of flesh and emotions. But it's something that I've always struggled with for many years. And like, imagine road rage. You're driving down the road, minding your own business. You know, you're paying attention. You're following the rules of the road, and then some person in a car just absolutely cuts you off out of nowhere. No indicator, no nothing. They just try and push you off of the road as if you don't exist. Normally, I wouldn't say I would be revengeful, but I would be an unlikable fellow. Oh no, like, drive really close to the person, rear, flash them with lights. If you go past, show hand signs, roll down the window, call them.
Depends how big your bull bar is, you know.
Yeah, I mean, the idea was always
you guys have bull bars, don't you?
Yeah, we do.
Sorry, I didn't mean to derail you, but yeah.
I mean, they're like proper, like 70 mil thick. Anyway, the point is being that used to be me, and my wife, on the one day, she kind of like told me, you know what? A few hours ago, we had this incident, and we went out for lunch and whatnot, and the lunch there was a mood, let's just say, but it was a one-sided mood. It was me. I had an aura about me of negativity and annoyance, and it really spoiled the lunch. And my wife is an incredibly supportive person. She would never directly tell me that, hey, listen, you're being an a-hole, or you're being nasty, or whatever. She'll say, you know what, love, just, that was 2 hours ago. Why are you still worried about it? And eventually those kind of like words start sinking in, like, yeah, why? Why am I allowing this? Like, being somebody that likes to have control about my own decisions and decision points, it just felt like I'm allowing this external force to impact my decisions, and I have no control over it. And it kind of like from that point just decided, you know what, I've had enough. I'm done with this. This is the idea of rock bottom. I've hit rock bottom. I've had enough of this feeling. I've had enough of this carrying this weight with me, because it makes me a nasty person, and I wanted to become a better person. And then I slowly but surely started looking at the market in the same way as well. Just that I know that I have no control over where this price is going to go. I have zero impact on it. I am just a participant. And what do I have, or what is there that I have control over? And it's my decisions. When I decide to enter, how I decide to manage my trade, that's all decisions that I have power over. And if I have power over it, I'm going to take control of it. I'm going to own it. It's my decision. You're not going to tell me, hey, Dean, you should have done this, or Richard, you should have done that. No. I made that decision, and I will own up to it. And it's that ownership, I think, that has helped me a lot. And I also don't really look at it as, oh, woe is me. Oh, poor Richard, his trade didn't go against him. Whatever. If it doesn't go in my way, so be it. It is what it is.
Yeah.
Okay.
It is what it is.
So I learned
Richard has got like a... there's like something that he's like, but Richard, I feel like that's...
No, there was two things I wanted to say. By remembering the second thing, I forgot the first thing, and I need to say the first thing before the second thing. So the first thing was, I realise now that you've got road rage, and I like your hand gestures, so I'll be watching out for them if ever we're driving too close in the road.
Me? Oh, me? No, not at all.
No, it was Richard's hand gestures earlier when he's like, you know. But the cool thing is like you choose. You can't decide if you lose, but you choose how you lose. And so like you take ownership. You know what? I can't control that I'm going to lose, and when I lose, I will feel emotions. And I think that's like a generic across everyone. We cannot control that we feel emotions. We're always going to feel emotions, right? Unless there's probably some kind of mental condition, we're going to feel emotions.
Oh, thanks, Rich.
Sorry, dude. But what
Only
you
mental.
choose to do with the emotions,
Yeah.
that's what I like. Where you recognize what's my choice. I reframe losses into one good loss. I can't choose if I lose, but I can choose how I lose. And by you saying, you know what, like I'm in control of that. Like I like that because then you take full ownership of did I lose and lose well. And one thing that's really tilting is if I have an oversized loss or if I have a bad loss, a trade that perhaps I shouldn't have been in, I jumped the gun a little bit, which is why it's so important for me to stick to such a simple framework because every time I try and be creative and clever, it feels so much more personal when I take a trade that's not in my plan and it goes against me. It feels amazing when it wins, but that's the problem. It feels terrible and it feels amazing. I can't seem to bring emotional neutrality to the trades that aren't in my plan. When they're in my plan, I don't know if that's a word, but we'll go with it. When they're within my plan, I'm like, it is what it is. So losing on your terms. And the second thing that you touched on is like, I'm not like poor me if I lose, like whatever. Do you realize how many traders will never be able to say that? And it's because of one simple reason. Come on, have a guess. Tell me why you think the one reason why traders will never be able to say that.
I have no clue.
It's in their
I'm
control,
blank.
and they do it to themselves. We see it all the time.
Are we going to say self-sabotage? Imposter syndrome?
Nope. It is if we get emotional on a loss because they're over risking, and if you're over risking, massively over risking an account, especially like a funded account, you don't have the right to say, oh, well, it's just a loss because you are massively over risking. And so it's like the more leverage we use, the more risk we use, the more it's like a magnifying glass for the emotions. And it's so like if you struggle with 0.01s to bring yourself to like an emotional neutral state, trading at 0.1s is going to be so much more difficult. Trading at one lots, it's almost game over before it even starts. And this is why we would say like practice on the lower stuff. But do you know how many traders just go in with massive size? I saw in the Discord the other day, and it was, is it okay to risk 2% a trade? This was asked in the Discord, and I was like, okay, let's say we've got a hypergrowth account. I was like, that's 3 trades, and you are done.
Dunzo.
And then I'm like, I wouldn't be able to take just one good loss and say, oh, well, is what it is. 3 trades for me, my strike rate's not high enough. I'm going to take 3 trades and I'm going to take 3 losses. So it's about just recognizing that, use risk management. And when you're using risk management, it's so much easier to feel comfortable within a trade. Same with stop losses. If you don't use stop losses, you naturally have that, price is going against me. You don't know how much you're risking. So we have to have this number, this, cut-off point, an alert, a hard stop, maybe a mental level that we're willing to cut trade. Because if we're relying on emotions, by the time you're down 100 pips, 200 pips, and you're offside, you can almost bet your bottom dollar you're not going to be making the same quality decisions that you used to make before you even got into the trade. So just little things like that is just sometimes we trigger ourselves and we experience way too much emotions. And we do it to ourselves. We over risk. We get greedy. We want to get somewhere fast. I just physically cannot trade at 2 to 3% risk. I can't do it. I can take good losses, but it just feels so personal when I lose such a big chunk of an account. So for me, I have to pull my risk back to a size where I'm like, oh, well, it's just a good trade. Is what it is. But yeah, that's kind of what we see. We see traders risking a lot heavier on trades, and then you'll see like they stop out, and then you'll see like another trade immediately after, and it's like, really, is that in your plan? Is like taking a big loss and then getting back in again? Is that actually in your plan? So just little things like that, easier to keep on top of things when we keep the pressure low as well. Because then you can take, Richard, was it yourself that said you divide your drawdown by 20?
I used to do that, yeah.
What do you do
My
now?
brother does that more often now than I do. I can actually show you. I actually have 38 trades available. So
Nice.
so this is the 5K bootcamp, not bootcamp, high stakes account that I started trading. So if I'm trading EU, I have a 0.25% risk. I have 38 trades that I can lose. Even if my win rate is much higher than that and I don't need 38 trades, this to me is comfortable. This is me putting it into an area where if I lose, so what? It's 0.25%. Doesn't matter.
Yeah.
And I can do that 38 times in a row before I have to go, maybe I screwed up. So that's just how I look at it. I mean, you can go and, I can go and risk 0.5% per trade. I'll still have almost 20 trades. I don't understand why people would want to, for argument's sake, risk 1% and only give yourself 10. How quick is it for you to lose 10 trades? It can happen.
No, it's because they're not thinking about losing, but thinking about how quick can I get funded. I want to pass this thing in a day, in 2 days, in 3 days, in a week. This would be the incentive.
So in Afrikaans, we have a saying called vroeg ryp, vroeg vrot. And it means if you are quick to ripen, you're quick to become rotten as well. So it's the idea of doing something too quickly with the idea of getting there and passing it quickly. But that same mentality passes through. You always want to do everything quickly. I want to get to the next payout and the next one. Your results orientated. Mm-hmm. You're going to eventually. Congratulations, you're going to pass some accounts. You're going to get some payouts, but it's going to be short-lived. And you're going to wonder, but what went wrong? What went wrong? It's that patience. It's that willingness to say, you know what? Let's just take the foot off of the gas just a little bit. Let's take the foot off the accelerator and just kind of like wait to see what's going to happen next. And that is more to the idea that I want to trade with is the idea of just trading with patience.
Mm-hmm. Yeah. Yeah, because if you were trading at 0.25% risk, but you had the $4 million account that the 5ers can scale to, you're exactly where you want to be. So you've got the process, and it's just a case of whatever. If you took a 38 drawdown, did your system or yourself is cooked when it comes to how you're implementing it? Most of us, I set that number for me at the level where my strategy is, I'm done. I'm like, there's no reason to try and recover this anymore. So my investment is like a $500 account. And if it goes completely sideways, you know what? It costs me $500 to know if my strategy works. Now, the job is to make sure that I only take good losses in those drawdowns. And that's where it's like me versus me. So your strategy with a high win rate might only need a 10R drawdown. But because of human error, now it might need a 25R drawdown just to give that breathing room, right? So sometimes it's good just to give ourselves like the biggest possible window. It's I love seeing processes like that.
The thing is, even if I had the same rule, because I used to have the 20 trade rule where I would take my drawdown divided by 20, and then I'll be like, okay, cool, this is enough. So 20 trades, but that's like the idea of saying I don't really have confidence in my trading ability. That's one way of looking at it. But the other way of looking at it is saying, if I am wrong, I still have time to become right again.
Yeah.
So if I have 40 trades as an example, and I lose 20 of them, I can say, something's not working. Step back and then kind of have a broad view and say, okay, what is going wrong? Especially because I have a very rules-based, very systematic approach to trading, I can go and see exactly where's the failure points. And then based on those failure points, I can then say, okay, you know what? I have another 20 trades, and I am not adjusting my risk at all. My risk is staying exactly the same. I don't have to reduce it. I don't have to pick it up. It stays static. Then I know, okay, you know what? I have 20 trades. For me to rectify what is problematic about my strategy or problematic about my psychology or whatever it might be. So you can, like I said, you can do the one side, say, he doesn't have confidence, because if you have confidence in your ability, you only need 5 trades or 10 trades, and then you can just let that account of yours just fly. But at the same time, it's the risk management. It's the fact that I'm not trying to be results orientated. I'm trying to be process orientated, and within that process, I need to understand that there's going to be a time where things are just not going to work. So it's one of those things.
Yeah, you're in it for a long time, not a good time, right?
Yeah, like it's a marathon. It's definitely not a sprint, and I think it's because everybody. Who was it? Usain Bolt, fastest runner on Earth, according to like world records and Guinness Book of World Records and whatever. He said in an interview, I might be misquoting this, but he said he trained 8 years to run sub 10 once. And people are unwilling to train for a few weeks. They want it done now. They want to run under 10 seconds on 100 meters right now. It's that impatience. It's that not willing to work the process that would eventually lead to a favorable outcome. And it's the same with scientists as well, on the other side of the coin, where scientists would do a scientific research of some sort and absolutely spend their whole life on it and never get to any sort of outcome whatsoever. They'll try and prove a certain theory. They'll spend 30 years of their life like researching this thing just to come up moot. And it's just like, sorry, you know what? It didn't. There was, I had a theory and it amounted to nothing. That's like the idea is like, sometimes you're going to follow the process and you're not going to get the results that you suspect that you may have. It's one of those things. It's being ready to just accept that sometimes it just doesn't go in your way. Was there something wrong about your process? Not necessarily. Was there something wrong about how you traded? Maybe, maybe not. But like, it's that expectation. It's like making sure that you curb that expectation and knowing that even if you have a process that you can follow, it's not necessarily going to net any sort of results. And being okay with it. Exactly. It's the immediate gratification. I want it now, but I'm not willing to put in the effort. And even if you do put in the effort, doesn't mean you're going to get it. Like hard work does not equate results. It's not equal. There is like a factor of luck around it a little bit. Like there's people that work much harder than I do that are much further behind me. So it's just kind of like that idea. So the neutrality is something that I try and achieve balance in my life with everything. So that's the idea.
Yeah. Was it Warren Buffett that said the markets are a perfect environment to transfer money from impatient people to patient people?
Yeah, exactly that. Yeah. Perfect.
If I don't go all in, I can't get my Lambo.
Yeah, when Lambo?
Yeah.
You got to post it on TikTok, Need my TikTok Lambo. There you go. Maybe you can talk about the risk of ruin and longest losing streak comes naturally. Yeah, exactly. I mean, that's sort of what we were harping on before as far as the number of trades until death, right? Obviously, if you reduce that total exposure, you're going to increase the distance you have until risk of ruin. And that's definitely part of how I always think is like, you want to take risk. You don't want to chance ruin, right? So the same reason that playing Russian roulette is not a good idea. If you played it for $1 million a round, you got an expected value of what, 833,333. But it's probably not a good idea to do that because the one time it doesn't work, you're out. You're out of the
you
game.
just need to be wrong once.
Yeah.
It's
So-
what is that saying? You don't need a parachute to go and do skydiving,
Yeah.
but you do need a parachute if you want to go skydiving a second time.
Yeah.
So-
yeah. Exactly. That's perfect.
Let's have a quick look at this comment here. So it says, I agree, but also don't. If you're trading 25K with max 1K loss, like you need to trade more aggressive because you're making $5 to $10 wins. If you've got a, I'm trying to wrap my mind around that. If you've got a 1K loss, so you're talking about maybe a
So
25K account with a $1,000 max tap out?
yeah, so that's where Camille's talking about like time input versus what you're getting out, right? So
Mm-hmm.
like if you're trading, $500, you make 1%, you're not really going anywhere as far as your overhead costs to live, obviously.
Yeah.
Yeah. So that is fair, but yeah, I guess with that said, I mean, work at McDonald's, get a bigger account, and then do the same at a bigger account size. So it is worth it, I guess. I don't know.
But I mean,
Yeah.
like, also consider how long you were doing something before you either became profitable or before you started seeing success. Like a doctor, a person in South Africa, if they have to go and study to become a doctor, they will study for 7 years before they can actually practice medicine and have a medical license. That's 7 years. At what point do you say, "Ah, you know what, I'll do it only for 5 years and then see what happens then?" It's like,
Yeah.
it doesn't matter if you're going to try and reduce the amount of time, it's the concept that stays the same. Like, yes, capital, fine. You can do a lot more with more capital, and then you can actually risk less. But if you don't have that much capital, then risking less is going to just, you're putting the goalpost further and further and further. And it's going to take you a lot of time. But the result is not what you're going for. It's that process. It's
Yeah. The
nailing
point
down
is to nail down the process. Yeah, because
Yeah.
the results will come as long as
Yes,
you got the
they will.
process. The results are inevitable, essentially. It's just the process.
Yeah, the result's going to be the result. Like, whether you have input or don't, it's just you're going to receive the thing that you're going to receive. So I know it's like a very like weird way of like looking at it, but like the size of the account doesn't matter to me. It's the process of how I'm dealing with that account that matters to me, and how I can actually build that idea and use it for longevity instead of I want to buy my Lamborghini tomorrow.
Yeah. 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 Definitely. And yeah, funded versus actual capital, like that's exactly where the funded, like prop stuff is really good. Because if you got $500 and you put that into your personal account, it's not going to go very far.
Mm-hmm.
But you can pick up a prop account and then utilize that expansion of capital you've now got to amplify what you would be doing. So yeah. Yeah. No, I knew what you were saying, Camille. Yeah, right away. Yeah, for sure.
Yeah, but that's using prop firm accounts. In my mind, that's how I would use them correctly, is because I'm like, well, what return do I get when I put it in a personal account relative to what return could I get if I put it into, say, a Fivers account? The issue comes in is knowing what you can get for the same kind of work involved in trading a personal account, then realizing actually what I can get back is a substantial figure. Like in a personal account, if I did the same with £500 or $500, I'm getting hundreds back. That's what I'll get. By the time I got funded with the same level of risk to me on a prop firm account, I'm getting thousands back. And that's exactly the problem, is because now I can get thousands back. And in the real world, maybe I only had £500 or dollars to my name, and I'm like, well, now I can get thousands. I can triple my net worth in a week. I mean, think of what that does
Yeah, I
to,
see what you're saying. Yeah,
you know.
yeah.
But
Where then you over, instead of utilizing it as exactly that, like a utility, and it's amplifying what you're doing, you're now trying to use that as like a shortcut, a quick way to skip all the other staircases and just teleport to the top of the building. Be like, awesome.
Yeah, and when it doesn't move like in a perfect straight line from floor 1 to 3, we get super emotional because it's like, what? I've just lost $1,000, and it's like, relax, it's 1%. Like, yeah, it's. I kind of have this relationship with prop firm accounts where I think they're fantastic if you use them as a trading mechanism and sadly, I don't think it's always the case. I think sometimes, like you say, people want to use them as that shortcut, and yeah, they get shortcuts. Don't always. Trust me, I've tried finding all the shortcuts I can in 7 years of trading, and
There isn't
it
one.
all comes back to be patient, have a process.
They only work in Mario Kart.
Yeah, but it was in gaming.
Yeah, that's it.
Hami Mundi asked, how much is your longest losing streak? Mine personally, in February, March, April-ish, I had a losing streak of 18 trades in a row. 18 trades, which was spread out across, let's say, 1.5 months. 18 trades.
So
I
1%
lost
risk,
two
you
prop
would have
accounts.
lost you would have lost a prop firm account at 1% risk, right? But at 0.5% risk, okay, gotcha.
Yeah, I lost 2 accounts in February, March, April, because of just things just didn't work out. I was on 0.5% risk, lost 1 account, went over to another one. It was a 20k and a 5k, if I can remember correctly. 20k and a 5k that I lost. 18 trades.
Fair.
I think mine was 27R drawdown. It's pretty savage, 27R. And I was funded with the account as well. And it just, beautiful upswing, ADR over like 2.5 months. I'm like, yeah, it's got this figured out. And as you said earlier, you know, if the fruit, well, I forget the saying, but what comes quickly goes quickly as well. Yeah. And it was the same system. The market started faking highs rather than breaking and retesting. And my risk was too aggressive. And but I took 5R drawdown, then I sized down. Then I took another 5R drawdown, sized down. So I was able to soak up the whole 27R within one account. But by the end of it, my risk was so significantly reduced. I was like, there's so little upside. But I was like, well, I've got to fix the process before I try and buy more funding. So it was a good lesson. LJ, do you work out your trades on an R value? Have you ever worked out sort of like what an R value drawdown that you've been through? Some stories of that?
Not in an R value.
Okay.
Because I just go by percentage terms. There's too many accounts, too many trades, too many different trading styles to, it took me too long of the admin of trying to put it together that just wouldn't be worth the time necessarily. But I wouldn't know how to put in. I mean, you can, I guess, you take the reverse engineering of your profit factor, I guess. I don't know. Yeah, I wouldn't have a clear thing for that. No.
Yeah, the timing of my drawdown was the worst because I'd sat for 4 months every day marking up levels in the market and then recording the results, and it was in real time as well. And after 4 months, I'm like, okay, I've got it. My rules, I've got my system down, and took on obviously the biggest account I could. I took on a 100k account, and I traded it at 1% risk straight out of the gate, 5 losses over a few days. I was like, this isn't ideal. And then back to back, just went straight through phase 1, finished that, phase 2, finished that. And I was a 1 to 2 risk reward trader as well. So finally got to the funded stage. And I remember being in the first trade up $1,000. I was trading 1% risk. And I remember this voice inside my head that was like, Rich, you should close this trade. You've just made $1,000 in 12 minutes. Close this trade, wait for your payout, get your refund back on your account. And I was like, no, I'm a trader that follows my process. I go for 1 to 2 risk reward, and I'm going to trade this account the whole way through until the payout cycle. That singular trade was the start of my 28R or 27R drawdown. And I was like, are you kidding me? Why couldn't you do this in challenge phase? Why do you have to take me all the way to the water? All the way through phase 1, all the way through phase 2. And I remember sitting there going, dude, if you were 1 month earlier on your timeline, you would have made $27,000 that month. The difference of being unlucky and being lucky, as Richard touched on earlier. Some hard lessons in that, to be fair. A lot of trauma, because the next account, round of back testing, building that edge, I was like, what if it does it again? And that pain avoidance of just not wanting to sit down and study the charts was like, dude, it's gonna just slap you again. You're gonna backtest this, refine your rules, get really good results. You're gonna trade it live, and then it's just gonna let you down when you need it the most. And my brain was just constantly trying to attach this, dude, don't do it because it's just going to be painful. It's going to be disappointing. So I had to learn to navigate all those emotions and get on with the actual work of developing the edge when I'd been so close and then denied entry. It's like, queuing up to go in a club. I just queued up for like 100 people, finally got to the door and they like slammed it in my face. Nope, no more entries. I was like, are you kidding me? I've been here for 4 months. So yeah, it was tough. It was tough. And it's these kind of stories that I think we go through as traders that kind of refine us and help us manage our expectations for the next round. Because my experience of trading has not been smooth sailing. And I've been through 3 cycles that have been equally as rough as that. And each one, the difference of tens of thousands of dollars. And it just felt that each time I was unlucky in the timing and came up short, but I had traded incredibly well through these periods. It's part and package of it. As Richard said earlier, you can do the process. There's no guarantee of the results. Fortunately, I didn't sink 30 years into it. It took me 3 years to kind of get to that stage of saying, hey, I'm no longer losing, and I now make a little bit more than I win. But still, that next 4 years of profitability, it's not a perfect line that just suddenly rallies north and you go, well, if I can make $100 a trade, then I'll make 1,000, then I'll make 10,000. And I know it's fun on compound calculators and it looks great, and we can all be multi-billionaires within like a year. It also takes time mentally to level up, and then we get them setbacks, and sometimes we don't come through the setbacks like a robot would, because we humanize things. We're emotion. We're human. We have these emotions, right?
Yeah, definitely.
It's sometimes hard to just come to terms with it. Just like not even just the experiencing of it, just coming to terms with that you have an emotion and you don't know how to deal with the emotion itself. It's very difficult. Very difficult.
It's like a new milestone that you've got to learn to navigate this new hill, right? And then you get over that and you think, I'm finally there. Then there's another one and another one, and they're all different subtle reasons, I guess.
Yeah. LJ, we're going to bring up.
Yeah, I was bringing up that. So fastest time of blown an eval or funded, etc. So eval would be like 1 day. Like fat finger, lot size or something like that. Like get up, make a coffee, and you're like, oh, whoops. Oops. Right? Or the same using like if you've been on a larger size account before, and then I've got like settings for like this guy, which magic keys. I don't use that as much these days anymore, but any of those position size calculators or something, you've swapped between accounts, or I've been on like a personal, and then so the account sizes are different and it's on the original settings. You come back to it and you're like, oops, God damn it. Yeah. That was funded, I think probably like a week, earliest funded. And then again, that's down to like just silly errors, or I've left orders in overnight. Like I've ran through all the other accounts and I've left an account where it still had orders in, or same coming into a Friday. And then obviously by the time market closes here on Friday, for me, it's actually like 8 a.m. Saturday. And sometimes, I fall asleep and I've left orders in market gaps on the Monday. And then you've blown the account instantly. Oops. Right? So yeah, it normally comes down to silly human error from that type of stuff. So, but what can you do?
I mean, if you haven't lost an account due to a whoopsie, have you even been trading, mate?
Yeah.
Yeah. It's sad because well, actually, it's not sad at all. It's just one of those things where you can't help but like laugh about it now. But in that moment, you were livid. You were like, "Oh, come on! Like, why? Why me?" And it's
for me, it's more just.
It was dumb of me. I made a mistake.
Yeah, it's just frustrating because it's just exactly that. It's just dumb. Like, it's just wasteful. Like that's what I hate. Like if I had done something, I'd be like, "Oh, that's fine." Like personal execution error, versus like just ridiculous mistakes or happenings, or or the same thing I've had like trading personal accounts or something, or funded accounts where you even just take a hit, where we've had post NFP or something like that. You're trading, power goes out, and you've just entered orders or something. You haven't been able to adjust the stops. It's naked. Your power's out. Market's active, and you get knocked out. Stuff like that. It's just
Being in South
irritating.
Africa, I've experienced it. I've experienced the enter a trade as I'm busy about to click modify order.
Yeah.
Darkness, dark city. And I'm like, oh. Luckily, it was like 10 minutes later, came back, and the price hadn't like really moved around all that much. So I was very, very fortunate. Got everything up and running again, quickly entered my stop loss, and I was like, okay, it's good, don't worry. Ended up being a winning trade, but like just that feeling of like heart stops.
Yeah.
You drenched in a sweat. You're like, no. And that was a personal account. That could have been horrendous.
But you almost never seem to get lucky when you make these mistakes. It's like, why does the market seem to punish you to the 10th degree when you?
Dude, that's extra the worst. That's the most thing I hate. Like that, especially it's like the cat thing, right? That could easily 50. It's literally like 50-50. Could have been the other way. I could have come back and have an extra 6 figures. Instead, you're out 6 figures. It's just like.
It's like the cat knew, didn't it? If the cat had just stepped on it with the different paw in that slightly different timing,
I would be like, "Oh my god, you're amazing!"
It's like a treasure. It's like the idea of if you took all 8 billion people on Earth and you gave them a coin to flip, and there's only the two outcomes that you would take into consideration. It's 8 million people in a bracket, 1v1. There's going to be 4 billion people that have it right, that win that round, and there's going to be 4 billion people that get it wrong.
Yeah.
That's bracketing. That's technically luck. There's going to be people that are going to go through bracket 1, bracket 2, bracket 3, bracket 4, 10 brackets until you're down to 2 people on Earth. One of those people are going to be that one person that got every single one of those brackets right.
And then lost. Yeah.
And then you're going to have one person that lost the first one that won one, lost one, and so on and so forth. So every outcome of the bracket, are you going to consider that to be luck? Because it could just have easily have been you calling the right coin.
Exactly, yeah. And that goes back to all the literature of like studying, whether people are good traders, bad traders, that kind of stuff, because it is interesting to break it down mathematically like that and just say if you had a bunch of random monkeys pressing random stuff, in a market, you would have that certain number. It's a monkeys on typewriters type thing, right?
Yeah. It's the rule of
you have a random monkey, a random chimp, as good as Warren Buffett. Just probability sake, right?
Yeah. The rule of large numbers states that at some point it will be probable.
Yeah. That's fun.
Yeah, and if you want to know, are you one of these people? If you're not currently at equity highs, you're not one of these people. Don't worry about it. You're not getting lucky enough to just go riding all the way through.
You're in the bracket that lost a while ago already, so you're
It's another thing. People always go, "How's trading going?" Right after you're in a losing streak or something like that. And it's like, dude, ask me a week ago. I was at equity highs. Ask me now. I'm going through it.
That's always something that, like, if you have friends and you have to sort of teach them, because people like just general chit chat. You have how are you doing, how's work, all that kind of stuff, and people are like, oh, how's trading, or this or that, or they're trying to. You run into someone in real time or at the gym, they're like, oh, how's it going today, or whatever. It's like, ask me in an hour or ask me an hour ago. It's going to be a completely different answer. Right? Let alone today, tomorrow, next week, next month.
They ask you at the moment you've just put your back out, and they're like, "How's weight training going, dude? I'm in a wheelchair. Like, relax, dude." Just want to touch on this quickly. So, what would be a good drawdown to profit ratio on, say, an annual basis? So, a long time ago, I had the opportunity to speak to someone who was able to offer me some insights on this, and they said, as a professional investor, what they would look for was a twice sorry, half the upswing to drawdown ratio. So let's say in a year you made 20%, they wouldn't want your drawdown to be bigger than 10%. So it doesn't matter, for an example, what you're risking. Just imagine if you've suddenly made 100% in a year, they wouldn't want to see your drawdowns be more than 50%. If you've only made 3% in a year, then the drawdowns wouldn't want to be bigger than about 1.5%. So less so about, because I also asked, well, what countries make the most, and they were saying, well, it's funny because if you hang around with like a bunch of ICT traders, they would have a certain expectation, and that would be their normal. They would be aiming for that number. So if they were all doing say 2% or 5% or 20% a month, that would be what you'd be aiming for. There would be other cultural traders that were aiming for certain sizes, and they might be doing 1%, 10%, 15% a month. So he said there's no kind of statistical normal, but what we see is these batches and groups of traders that will end up earning the same kind of collectively, because there'll be certain education that gets in front of certain cultural groups that will become very popular, and it could just be through a teaching style, whereas in another country it wouldn't always be the same. But one thing that stuck with me was double the upswing to drawdown. So again, if you're when you think about prop firms, on a high stakes account, you've got to do 130% return of your drawdown to get through, right? So in that same kind of method, it would be like passing a high stakes account without a drawdown bigger than about 7.5% throughout that period. It's something that I've measured myself on for the last 3 years. Can I make double what my biggest ever losing streak cost me? And that tells me that I'm managing risk better, because it's not just about having a 50% year. It's to me, having a 50% year, if I had a 45% drawdown, is effectively, for me personally, that's quite worthless. If I had a 10% year with a 2% drawdown, I am a way better trader. I just need to adjust my lot sizing and work on my mental state slightly. But it's all down to how much could I make as a percentage based on the drawdown relative. And the numbers that were thrown around was 50% drawdown to 100% profit. And that would make that trader very investable.
Yeah, that's roughly what it is. Obviously, after you start going beyond 10% drawdown, as far as like institutional hedge fund type things, if you're looking for investors, that multiple changes a little bit, because like obviously no one wants a 100%, but with 50% drawdown, then it starts to get more strict. But that is the good base relative level. And a good way to think about it is, because if you had 10% drawdown, 10% profit, essentially you're just a coin flip. It's just 50-50. If you got to risk 10 to make 10, it's literally just a coin flip. So they're always looking for you to be better on average than that, so that compounded over time, that number is going to be mathematically profitable, right? But rule of thumb, definitely the 2-to-1, 10 to 20 type sphere.
Yeah, I've no idea what a really good trader would be like. If like 3-to-1, 4-to-1, 5-to-1, 6-to-1. I mean, obviously, every year
those are the exceptional hedge funds, right? That run up at, and hedge funds of smaller size are going to be able to do higher multiples. As you go up the capital structure, it becomes harder and harder because of liquidity reasons to actually make the same level of returns. So what we're kind of talking about here is very much that sort of traditional big fund type aspect. So like a hedge fund, and so you're kind of looking at, say, like stocks, like 20% compounding every single year for stocks is like really good, right? That's going to be the caveat to that. So it's going to be different if you're like an individual trader, you're using leverage in a very different way to, say, a fund or a traditional fund or hedge fund or whatnot. So there are slight caveats / asterisks around it as well.
Yeah.
So,
hey, Victor.
Welcome, Victor.
Hello, Victor.
Hello. Hi. How is everyone? We have full house almost here, and we even have more in the waiting room to join us. So it's gonna be awesome as always with the The5ers today. How is everyone watching us today? Hi there. I totally enjoy this topic. Perhaps you guys already know, some of you already know that I enjoy this topic a lot. So I don't know if you mentioned that. I didn't get a chance to hear the whole conversation, but just for idea or for comparison's sake, the S&P delivers, it depends on the decade you're looking at, but it delivers around 10%, sometimes 8, sometimes a little bit more than 10. And its historical max drawdown is around 47, I think, percent. So that gives you an idea of what the maximum drawdown on the S&P were, which is sort of, it's not the best out there, but I mean, it's like a baseline for everyone to compare. Like, what are the options I have? You start with the basic, which is passive investment, S&P kind based, right? So you're trying to beat, that's the benchmark. You're trying to beat the S&P. And the S&P, if you apply this ratio of 47 and you're making 8 or 10, you already get the multiples. We're talking about 0.2 on you're making 0.2 on the risk you're running. Historically, like, gotta put it into perspective. It doesn't happen every year, doesn't have every 10 years, but it did happen in the past. So it is a chance, a possibility that it will happen again. So, but it gives you an idea of what you're dealing with, even though S&P is considered, not considering the drawdown, because if you ask anyone, an investment vehicle has a drawdown of 47%, they would never tag that as safe. They would say that's crazy. That's risky. But still, S&P is considered to be a solid. I wouldn't say safe, but a solid choice to build a portfolio, depending on your age and things like that. No financial advice here, by the way. But so, but if you consider that, then it put things into perspective. It's not as easy to making twice the drawdown, that the maximum drawdown you've had. That's pretty good. If you can do that consistently, I mean, they're gonna be throwing money at you. And I'm not even talking about doing higher multiples because of obvious reasons.
Yeah, definitely. I'm gonna have to tap out, guys. I need to get some dinner, so I will see you guys tomorrow in the Discord with myself and Akram. So yeah, hope you guys have a good week, and cheers.
Cheers, LJ.
Take care, LJ.
6 people.
We have.
Oh, we do have a full house.
Yes.
Oh my god.
Yes.
Wow.
We are. This is getting awesome. We're gonna have an awesome discussion with all of you here.
Hell yeah.
But LJ, thank you for sharing your brains with us for the time you were here.
Yeah, of course, as ever. Hopefully, be back to good health next week. I'm definitely feeling better now. I think after I
Chundered.
chundered everywhere, and sort of revitalized myself. So, but anyway, yeah, I'll see you guys tomorrow in the Discord. Myself and Akram for New York Open. We'll run over some stuff, and if not, I'll see you on Monday.
Question, LJ, before you go, poker tomorrow night. Are you joining?
Yeah, I can. Yeah, sure.
Okay.
Easy.
Your house or mine?
It can be both.
Madagascar. There we go.
Awesome. Cheers.
Take care.
All right, see ya.
Awesome.
Ciao.
Guys.
Goodbye, LJ.
I'm going to do that as well. Cheers, everyone. Thanks for having us on. And cheers for the questions we had today in chat. I'll leave you in the capable hands of you guys. And I'll be in the Discord call in about 2.5 hours from now. We're going to stream a little bit later on today. So if you want to join the Discord call, it's in about 2 hours, 40 minutes from now. Catch you later. Cheers.
Thank you, Rich.
Awesome. Cheers, Rich.
Take care, Rich.
With that bombshell, I'm also going to drop out. Going to leave with the esteemed gentleman.
I feel like you guys are passing on the baton.
Yeah, I can
Yeah,
try.
we just had a 400-meter relay, and it's just like, guys, here's the baton. Go on. It's your
Go
turn.
on.
All right, guys, have a great day. It's nice seeing you again, Aaron. Pedro, you as well. Victor, guys,
Richard.
have a great day. I'll see you guys on Monday.
Perfect. Take care,
Have a good
Richard.
weekend, man.
Thank you very much, Rich. And other Rich as well. I didn't want to say anything because otherwise, you gotta choose your moments to say anything, because otherwise you're risking interrupting the flow or interrupting the other person. And if we have like six, believe we were six in there, you gotta be very careful
Yeah.
to wait for your turn to talk, because otherwise no one is gonna understand anything. It's gonna be like the Tower of Babylon. Um, Here we are, Pedro, Aaron. How are you guys doing?
I'm good, man. Good to be back. Yeah, hello everyone. Guys, subscribe, press like on the video as well. Keep on smashing that like button. Aaron, I think it's the first time that I'm with you on the website.
Yeah. This is the
Curious.
first time.
Yeah.
I see Pedro. Thanks for the question, by the way, Victor. I'm doing very well. Nice to see you, Pedro, and Victor again.
We are, and I'm glad you are able to hear me this time.
Yes.
So
Thankfully.
great. We're gonna have lots of fun. Discussing anything related to trading and looking at the charts and the other things we do here, interacting with the audience as well. How much do we still need to get to 90,000? That's the question. The first thing I thought about when I woke up this morning. How much do we still need to reach 90,000?
Less than 500.
Less than 500. Okay.
Yeah.
All right. So let's see how fast our audience are able to reach that. I'm pretty sure that at least a few of those who are currently watching us are not a subscriber. I'm willing to bet on it. So if you are watching this stream, do us a favor, double check that you are a subscriber already or not. Just maybe you're not. Maybe it slipped your mind. But if you're not, please subscribe. And while you're at it, like the video anyways, right? It's just a couple of pixels to the left or to the right. I'm sure you can find that thumb. All right. So, Pedro, are you looking into anything? We've been having some pretty nice price action. You can see it on my screen, the one that is being shared here. We had a beautiful on that. You can see how the wick flirted with the H4 order block right there in our face. And I always love to see these reactions from these order blocks. What are you watching before we go into the details of price action? What are you watching? Both of you, but let's start first with Pedro. What are you watching today? Where do you think we're gonna catch that big barracuda?
First of all, news. Yeah, news. We don't have them. Okay, I will just check my monitoring here. So what do we have? What am I looking at? Okay, so the dollar finally continues to move to the downside. I've been waiting for the dollar to get a little bit closer to the extreme, which is maybe closer to these lows. This is basically close to that sub 5 order block that you have on euro dollar as well, as euro continues to move to the upside. So there you go. That's what I'm waiting, and maybe when the dollar does get close to this level, I'm going to be trying to find some long opportunities at around this level. I'm also curious to see even today's low, if price will continue to hold today's low or not, because even today's low is not that bad of a level. It was a level of previous support resistance. Also, there's a little bit of a demand zone in here where price is bouncing, but I'll rather see dollar actually feeling a little bit more of this range, getting closer to this level in here, and then moving to the upside, or at least trying to attempt to go long. With that in mind, then when you're looking at euro dollar, pound dollar, and so on, potentially I'm starting to wait to look for shorts. That's basically what I've been looking or waiting in here. Before I jump into the euro dollar, interesting that the euro index is now touching the high at this range. So today already reacted from the high, and straight after that it reacted already from a demand zone, which is also the retest of the support resistance. So I'm curious also to see within this structure what the Euro index is going to do. If the Euro index by any chance starts breaking again below these levels, that could lead into new shorts on the Euro index, which means that Euro dollar and some of the Euro pairs could also start looking to the downside, which could reinforce the idea of looking for shorts on the Euro dollar. If this Euro index just starts breaking and actually holding and continue to go higher, then maybe we need to wait a little bit longer for that for those shorts on the Euro. So with that in mind, then when looking at Euro dollar, finally it reached around this 1620, which is something a level that we marked to mention last Tuesday. I didn't really participate in anything in the middle, even though, as you could see on Vitor's chart, there was maybe some opportunities in there, but it's not exactly the type of trades that I look for. And I'm curious to see if price takes this top, how it's going to react around these highs. Even though I could even see eventually this top being taken as well. Okay, I could eventually see actually price just slowly going and maybe just reversing after taking this top. But I think there's maybe still an interesting potential supply around here, which is basically the other block that Victor also has, that you could see some reaction and maybe have a little bit of a move to the downside on the Euro. Pound, just flat pound moving a little bit higher. Pound has moved a little bit differently just because we had more news on the pound. I think maybe can go a little bit higher as well, maybe fake out these stops and then we'll see. But I'm not really interested in selling the pound. A pair that I'm interested actually are the yen pairs. Okay, so the yen pairs, so the yen index continue to break new lows, so it continues and it's getting really closer and closer to this bigger potential quasi-model pattern that we have in here. This is literally daily, weekly, time frame kind of a stuff in here. And we have some kind of demand zones also around this level, and we are literally really close to that at this point. So what I want to see in here is basically a little bit of a confirmation that price break structure, and then maybe we have a move to the upside on the yen index. If that happens, then you are going to look at shorts on the individual yen pairs. Today, we already saw a little bit of weakness on dollar yen, mostly because of the move to downside on the dollar. But that could also be reinforced if the dollar does indeed wants to go lower. Then if the yen index actually breaks above this level, we can have more shorts on another good short on the dollar yen, and that's something that I'll be paying attention. So yen pairs are definitely on my radar for a potential short, in this case yen index to go higher. So that's basically the move in here. We already saw a little bit of a move to downside on dollar yen, maybe even taking a little bit of the structure, and it's also reacting from a potential interesting supply level in here, even though my favorite level eventually on dollar yen it would be for price to just fill out this compression and start looking for bigger shorts at around 157. But I think maybe today or this week we may have still interesting shorts, especially if the dollar does continue to move lower, and basically the same thing also on the euro yen. Euro yen also continues to go higher. I think we do have an interesting supply level. We need to go all the way back to the 90s or 80s. So it's the supply level at this top in here. So I want to see how eventually the euro yen is going to move, but it's mostly based on the potential reversal that you may have in here on the yen index. I think that's going to provide an interesting opportunity. Pound yen is moving a little bit higher at this point. Even Aussie yen can also be one of those yen pairs that actually Aussie yen is already moving lower because Aussie yen also is moving or reacting from an interesting supply level, or got really close to the supply level in here, again higher time frame stuff, and price is being compressing as price is approaching those levels. So I'm going to be curious to see if price holds this level or not, and then there's maybe a short opportunity on the Aussie yen. So Aussie yen pairs, I think we are maybe closer to potential shorts. If not, it's already happening. One pair that actually, unfortunately, it happened slightly earlier than my time that I joined my desk. It was the DAX. DAX, I wanted to look for shorts. Price has been moving to the upside. It reacted nicely from this level, and I was waiting to see how price would react after taking this top. And actually, you had a great opportunity to sell it. Unfortunately, price dropped way too much already. There was a really nice, even quasi-model pattern at around here, but this was kind of 730, 720. just slightly earlier than usually I joined my desk. I was trying to see if price would retrace back into this level. It didn't, just literally filled out this compression. So that move may have gone, but I'm still going to be curious to see on the DAX if price comes back close to this top to try to look for an opportunity to sell the DAX at around this level, or even let the DAX now go higher. So this was within the fair value gap, and maybe can go and react from the supply, and there's maybe new selling opportunities from the DAX in there as well. So that's a lot of what I finally price is getting to levels that I like. So I think I may start getting busy with trades either today or this week or even beginning of next week. Just one also to finalize is oil. Oil finally moved quite nicely to downside. Again, there was some news with OPEC yesterday about cutting production or reducing the barrels per day, and we had a big sell-off, and now price is getting closer again to this base. Price reacted already from an interesting demand zone, but price could even go a little bit lower. So I'm curious as well as WTI or Brent continues to move a little bit more to downside, we may find some buying pressure at around this level, and that is something that I'll be looking at. So those are mostly the pairs I'm paying attention to, which is kind of a big list. But I like that price is getting closer to some levels, which I like. And the dollar franc Swiss as well, just to finalize, on dollar franc Swiss is getting close to these lows. Either respect from this demand zone, or even if it goes a little bit deeper, I'm definitely going to be looking for longs at around this level. Maybe just need also the dollar to get to those lows or demand zone before looking for that dollar franc Swiss move. But dollar franc Swiss actually has been moving quite nicely. Both the move to the upside 1 week ago, and then this week the move to the downside. So that's what I'm looking at. Basically, it's quite a few things.
That's a lot of information, very extensive. Thank you very much, Pedro. I like how you do the overview. You give us like a radar kind of an overview from everything that's moving, everything. I like that. I like that very much. I don't do that because I'm a bit more selective, but with my palette of assets that I trade. But I think that serves the audience well, because not everyone is trading EU and GU like I do, and you're serving them very well with the way you do it. How about you, Aaron? What are you looking to be catching your opportunity today, or perhaps coming few sessions?
So, like Pedro said, the DAX I wanted to sell as well. Didn't get an entry, unfortunately. So I would have just sold.
Sorry, it was just to change for your monitor.
Oh, yeah, perfect. Thank you. So this would have been the initial setup, but I wouldn't have entered this just down here. It's a bit too big of a zone, but it didn't really do much. It just ignored it and went down. So now it could potentially go up off this sweep. It reacted nicely. But other than that, I'm not much interested in this pair anymore. Then we had GU, which has a buy setup for me, which is huge again. So what I wanted to do initially was put a limit at this order block. I did put my limit at night after the spread hours were gone, and then I decided to remove it, which is unfortunate because the trade played very nicely, as you can see.
Any specific reason that the audience can learn from why you thought it was best to take it off?
Because it was late. It was almost like 2 a.m. And usually when you make a decision at that time, trading wise, it's not the greatest. And from my experience, I usually lose those trades. So I said, I'm going to close the chart, close the MT5, remove the limit, and make sure I wake up and look at what happened. And then I'll do what I want to do.
So now that now, excuse me for interrupting you, Aaron. So now that this incident played very nicely, how many of these incidents do you need to reconsider that rule that at 2 a.m. I need to be closing any idea and not execute them?
Well, to be honest, I'd need a lot because from my experience, trading at night just so bad for me, especially the last few months. Like a year ago in October, it was very nice. For a month straight, I was only trading Asia session, and I was on a huge winning streak. And then since then, every night trade has almost been a loss. So I just decided to ignore them, especially after August. I was just losing every trade at night. So I feel like I still made the right decision. And I did want to say something to you, Victor. Remember that trade yesterday? The EU trade.
Let me
Yeah.
know.
So I took a sell, right? And
Okay.
I closed it around here. It was is where I
Uh-huh.
closed. And then it went down a bit more. Remember? And
Yes.
you said, "How does it feel that it is going the direction that you want to go now, but you're out the trade?" As you can see, it saved me a loss. So sometimes the chart might go your direction as you close it, and you'll feel, "Oh, I made the wrong decision," even though you followed your plan. But at the end of the day, it still ended up being a loss. So I followed my plan. I didn't FOMO for the small move, and I avoided a loss and got out in profit. So I just wanted to say that
You
I made
you
the
you
right
you
decision
follow the plan.
eventually. Yeah, and that ended up saving me the loss actually, which I expected EU to continue dumping after we saw it go down again on stream. Um, so I just want to get back to that trade that we were talking about yesterday.
Yeah, it is. It is. It's you know the tricky thing is that sometimes we do the right thing, we follow the plan,
Yeah,
and it doesn't do,
yeah,
we leave money on the table,
yeah, yeah,
or because it's not always going to be in this case where your plan is not on every occasion the plan will be, the
correct.
trade plan
Yeah,
will yield the highest result, not on every single day, on every single occasion.
yeah,
So on those occasions that it doesn't, sometimes that doubt comes in, and that is where you need to hold fast to the data you have, the measurements you made on the performance of these rules, and not care about the day-to-day results, because otherwise you will never be consistent, because sometimes it will not work. You will say, well, that rule is no good, I'm going to leave it. And sometimes you see, if you had applied it, it would have worked better, so then you will switch back again and that means no consistency in applying the rule, and obviously that's going to mean no consistency in your result long term, and that's not what we want. So that's the opposite of what we want.
yeah,
So it's amazing, it's great example, Aaron, to be showing that in this occasion, and you you're it's great that this occasion it actually confirmed, but that you did the right thing, you followed the plan, and you did it not because you felt it, but because you said experience, but experience more specifically, you mean you have measured it in the past, in the last 6 months, a year, whatever, I have done this, whatever amount of time, number of time, and I know why I do this.
yeah,
And actually, I believe that every thing, every action, every rule we have in our trade plan should have a scientific or a data to prove or to justify its existence on the trade plan. If it isn't, then it's our job to make sure, because maybe it's there because it looks logical, but maybe it's not the best rule to be used.
yeah.
So awesome, like it. Please go ahead.
So I was also looking at the dollar, which, in my opinion, is not in line with EU and GU anymore. So my bias was bearish. Now we've swept the 12-hour low, so I expect it to go up, but I'm not really convinced that we're going to go up on the dollar. I feel like we'll keep dumping, which we're doing right now. Um, Potentially just break this low and then continue on lower, because the dollar looks very bearish to me. What I did not like this week is the fact we didn't take this high out. That really was unfortunate. I expected it to get taken every time, and it just wouldn't happen. But we just got to stick to the technicals and agree to that. So I'm still bearish here. But the technical is telling me that it should be bullish. So that's why I'm just sitting it out. It's not probable, it's not clear. So I'm better off doing nothing now, especially after missing out on a nice trade. It's probably best to do nothing. But
Mhm.
I hope to see the DAX go up a bit. Other than that, I'm not really interested in much today. It's looking like a short trading day, to be honest.
And were you always this calm and collected when, in spite of having excitement in your trading day, in the sense that maybe I perhaps you still have excitement. I don't want to say you don't have excitement today, but I mean, you just said it's looks kind of calm. You're not really interested in anything particular. Maybe something will come up, will pop up, but it sounds like you're on a holding stance. You're a bit, holding back a little bit, because the chart isn't inviting to trade, at least not right now. Were you always this did you always have this stance, this patience in as a trader?
Definitely not, to be honest. Especially the fact that I'm looking at quite a few pairs. I trade like 5 to 6 pairs at the moment. Um, so I would just probably force trades back then. I'd probably look to force a trade. Especially after that move on GU, I would have probably felt very bad about it. Probably get frustrated and do something stupid or something that doesn't make sense. And even if it would win, it's not correct, and you think it's correct because it wins, and then you keep doing it, and it'll just go bad. So I would definitely just be in the trade right now doing something stupid, to be honest. About excitement, I don't really have that anymore. If I win, I lose, I don't really care much, unless it's a win that passes me an account, or that pays me well. Sometimes there's a good trade that makes you feel good, but other than that, it's quite minimal.
Yeah, we know that, it's great to feel good and to be celebrating our wins, and to be feel confident, feel, a good amount of self-worth while watching you putting the hours and getting the feedback, the positive feedback from your work.
Yeah.
All of that is positive and great, but we know, as well as traders, that you've seen this. I mean, everyone who has been a trader knows that you do not want to be too excited. You do not want to be too either negative or positive, because your emotion will start dictating, and having too much of an effect on your decisions, and they shouldn't have actually any effect, right? You should be driven by data, not emotions.
Yeah, 100%. I know some people that actually teach someone that is very excited when he trades, like extremely excited. Like, and when he misses a trade or loses, he's the opposite. Like, you'll just see him spamming, getting very emotional, um, and then he ends up just losing his account the day after. So it's something that probably the best thing to do is just try and manage your emotions. I feel like a lot of people try and ignore them, but that's a bit hard. We're human. Um, so you have to learn how to manage them, and then with experience that comes.
Yeah, and not act upon them, because you can't control your emotion. I mean, we're not robots. You're gonna have them,
Yeah,
and
100%.
they're gonna make you feel something, good or bad, but not, well, I don't know if it works for others. I'm not a psychologist, obviously, but what I do is I try to be an observer of the emotion, right?
Yeah,
Not an ignorer. I don't ignore it. I see it. I observe it. I acknowledge its presence, but that's it. I don't I try, not always. I'm
yeah,
not succeeding always, but I try not to do anything with it. It's just an emotion exists, and I saw it. I feel it, and that's it. I That's it. No concept, or at least I try not to give it any consequence, for our action, because then you become slave, not slave, but you become, basically it becomes the dictator, or the one dictating the next step, and those are not the best decisions. We
yeah. It
know
keeps
that.
going then. Yeah, 100%.
All right, we have someone in the chat, Omo Salami. Hopefully I pronounce your name correctly. Omo Salami says, take a look at gold. Well, we are all about making the wishes of our audience reality. So let's take a look at gold. I mean, if the wishes are trading related, of course. Um, All right, so let's take a look at gold. I'm gonna move myself. So all right, so we have. Let's take a look at the gold on the highest time frame. There we go. You have. There isn't anything here, as you can see. When I say there isn't anything here, obviously there is a bullish impulsive move. Obviously, it's very interesting. But I mean, from my point of view, from the point of view of a order block, like an area, a structure which is being retested, that I can, know my stats, know my probability, and I can have a trade on a signal. There isn't any here, right? The last structure that that price left is way beyond, and that's it. The weekly time frame, same thing. Really, it's just one move up. You don't see this very often. How many consecutive bars? This is a quite long streak. A clean breakout from previous consolidation here as well, breaks out. All of this tells us that it's very bullish on this higher time frame, something to consider for long term. On the daily, let's take a look. So on the daily time frame, before we get to the 15-minute of our dear friend who asked us to look at gold, what we see is that there isn't any. If you start from the top, right, this swing high, you look back, and at least on the daily time frame, there isn't a quasi. There isn't a quasi, meaning wasn't any structure. This is the quasi line. That's the neckline, meaning price has not even come near breaking any structure. So even the monthly, the weekly, and the daily, they're all very bullish. Yes, the market has, increased a lot. Outperformed just about any year gold has had in the past. But it's still looking very bullish, very strong. Yes, we had some correction or some retrace, but it's, as far as price action is concerned, it's not over yet until it's over, but it's not over. So on the daily time frame, we do have one structure here which is not fresh anymore. If you count the numbers of bar in between, that is to my definition no longer fresh. However, you can still see from a unfresh order block, which is not part of the quasi. The quasi was down there, so the quasi never activated. But if you go to the lower time frames, you can see how powerful these levels are, right? I'm going to the 1 minute, but you can do this on the 5 minute and the 50 minute even. Look at that. Where is it reacting from? That's not coincidence. Look at that. This brownish bar, that's the daily order block that I was talking about. Not fresh, but it still has a reaction. You can trade this. I don't have to explain you too much that this is tradable. There is edge in here, right? I use this all the time. So the reaction we get from when we get to these borders of the either a unmitigated order block not being fresh, or even a broken one when it gets retested from the other side. All right, so going back to the daily, just wanted to point that out. It's and some people ask, why am I looking at the monthly if I don't really trade the monthly? My stops are not based on the monthly, not even the weekly or the daily. Why do I keep looking at these higher time frames? And the reason is exactly what I just shown right here. Higher time frames, whether that be a daily, weekly, or even a monthly, the lower time frames will react to them. And if you didn't have this put on your chart and you're watching price action, you would think, oh, price, just made a high there, and totally random place. Price is no reason at all. There's nothing to the left. That's just a perfectly normal, regular swing high, nothing to it. But as you just saw, it has to do with structures on higher time frames. So it's great. Actually, I think it's even almost necessary for everyone to understand what structures on the other time frames there are, so we can understand price action on your time frame. So from the daily, there isn't really anything besides that reaction. The order block, this isn't fresh, so it's not going to produce me any trades. The H4, at least not on my main strategy. The H4, we are, in a very nice impulsive, as you can see, push, impulse, consolidation, another push, consolidate, and we're kind of in a sort of a slowing down phase. If you measure the legs of these moves, right? This is what is this? 150 almost, and we are currently at 146, which is actually not too far away from each other, but it seems like we are slowing a little bit down, although this this one big bar here would probably disagree with me. So but it looks like we're not we're not slowing down a lot, but I would say, from let me mark it this way. From how many do we have here? There was 7 bars, and from the initial next, that's from the biggest candle right there where the impulse started, and if you do that, we are 5. So actually the comparison is not completely fair, because we haven't made the same amount of bars, right? We only have to compare apples with apples, meaning compare a 7-bar period, or move with another 7 or so on the next leg. So maybe that comparison isn't the best. But I'm not seeing here any indication on H4 that we're ready to reverse yet. Yes, there is a daily order block we just talked about, but that doesn't mean it's going to reverse completely and go the other way. It may. But if it is going to do that, we need to start seeing some indication on some time frame that is relevant, maybe the H1, H2, H4. So it is too young to, the day is too young, or the moment in time is too early to say that currently. Let's take a look at before we go to the hourlies, what the range today is looking like. The ATR for today is 91. As you guys can see it, that's the indicator window, and you can see here on to the lower left corner there is a number as I hover over the candles, and that's the average ATR. So if we hover over the current candle, it will tell us 91, basically telling us that $91, that's the average it has had over the last couple of bars, the range, the daily range, because this is the daily time frame. So, and if we measure current candle, what the range is, it's 65, meaning on average, if today is going to be an average day, which sometimes it isn't, although if I check the calendar, I don't see any big news coming up. So I would assume, it has a good chance of being an average day. It still means that we can expand about $25, $26 on gold, either to the downside or to the upside, right? The range expansion based on the ATR does not give you a direction where that expansion is coming from. However, if you go to lower time frames and you see this, right, you can ask yourself, where is it likely to expand on the current day, right? So the day started here, right? That's the low of the day, and this is the current high of that day. What indication do we have that could give us an idea in which direction is going to expand today, right? Those 26 on average dollars that are still to come, or is it going to expand from the top, or is it going to expand from the bottom? That's the question. That's one of the questions that I ask myself. And given the market structure, tell us in the chat, where do you think, there's no wrong answer necessarily, but you will tell you, just if you've built a case and you have your numbers, then I'm not going to argue that it's wrong, but it doesn't matter. Let us know in the chat, where do you think that expansion, right? I just said the daily range of gold for today still has on average about 25, let's say $25 to go. Is it likely to be to the upside or to the downside? Let us know in the chat. I'll give you guys a couple of seconds. In the meantime, I'm going to look at the chat to see what what other messages we have got so far from our great audience.
There is a question here from Jamie, just in regards to your order box. How exactly do you draw them,
Yes.
or to define the limits?
Maybe I should do that, and then we come back to the answers to the answer to the chat of the question, right? The question we just put out here. In which direction do you think the current daily range will be expanded in? To the upside or to the downside? Do we have the option to put a poll out here? Pedro, I've seen you put polls on your Portuguese channel. Is it possible here we do a poll?
It is possible. I think you need to be how do you call it? The administrator of the channel, maybe.
All right. Yeah, I'll figure that out later. But you guys can put it in the chat. The expansion to the up or to the downside. Don't be shy. It's not. It's not. We're here to learn. So if you say it and it turns out to be the, I beg your pardon.
I was gonna say there's no wrong answer here at all. So just say what you think.
Yeah. Just say what you think, and we will be talking about that. And as long as you have an actual reason and an argument against it, I will. It deserves credit, right? That's the point.
Yeah.
So, but in the meantime, I will, as people are thinking and writing in the chat their ideas, I will talk a little bit about order blocks. My order blocks are slightly different than the average or the typical order block you would hear other people think or talk about out there, right? The last opposing candle in an impulsive move, and some other definitions. There are actually also institutional definitions where you have an area where a large number of pending orders are situated or placed. That's an order block. The other definitions is an area where not only pending orders but large orders of large number of trades are being executed. Okay, that they call them order blocks as well. So they're different definition, and my definition is deliberately a lot simpler and so easy to apply, so much so that everyone can do it. And this is the definition. So my definition of order blocks is consists of two candlestick combination, just two, the engulfing and the outside bar. Now here you have an example of the engulfing, which is right here, right? That's the definition of the engulfing, if my arrow will work, is where one this just watch these two candles or consider these two candles. Let me see if I can put a little box through them. So we're only looking at these two candles, and the definition of the engulfing is very, very simple. The engulfing is where the two things for engulfing. One is that they have to be the opposing direction, right? So if you have different colors, it will have opposing different colors. And the body of the second one needs to be bigger than the body of the first one, right? Or you can define it as well. The close in a bullish engulfing, the close of the second one needs to be above the open of the first one. Slightly different definition, but that's the engulfing to me, okay? And an engulfing then creates the order block, and the order block is from the open of candle number one, whether it be a bearish or a bullish candle, right? And it goes all the way to the lowest point of these two. In this case, it's the candle number one, so that will be, and I drag it to the left, that's the order block, right? That's where price has a good chance of coming back and responding to it. That's one thing. And the other candlestick combination, maybe you can see it here. Let me check a good example of the other version or the other one. I want to get a good one that's very visible. You can see it from a mile away that there is no doubt it is an engulfing. Let's take a look. And if not, then I'll just choose, any I see in the. I want to see a very beautiful one. Let me check. All right, here you have one. This is a good example of an outside bar. Actually, this is a perfect one. Look at this. You have these two candles, right? So it meets the criteria of an engulfing, although not all the time, but in this case it does, right? It is of opposing colors, these two candles, and the second one closes above the open of the first one. Okay, so it is in a sense also an engulfing. However, this engulfing is a special one. If you go to the high of candle number 1, let me mark that with some other color that is more better visible. Let me check this. Let me move this around a little bit so you're not confused. All right, so this is the range. Do you agree? This is the range of the first candle, right? The high and the low. And the second candle not only is it engulfing and engulfs it, but it also takes out the low right there. It takes it, and it closes above the high. That's my definition of the outside bar. This is an engulfing on steroids, basically, right? And those are the two order blocks. And what does price do? A lot of the time, not always, price comes back either immediately. Let me mark it like so, right? This is the movement that created the candle. And that's the move. It goes up, creates the order block, and the order block is from this place all the way down there. Let me mark the order block with some lines, right? So this is the line, and this is the other line, right? So these are the boundaries of the order block. Look at what price does. Goes down, creates the order block, comes back for the retest. It actually squeezes a little bit, and it moves out. That's the move. And actually, that's a very beautiful move right there. You can see how powerful these candlestick combinations are. Doesn't work all the time this great, but it's a good indication of who it has won the battle in that instance. All right, so coming back to the question. All right. All right, so the question was, a lot of people said, let me double check. So the question was, where do you think the range will expand in up to the upside or to the downside on gold? Well, there are, as Aaron rightfully said, so there isn't really a wrong answer because you can build your case on both sides. That happens a lot in the market. There's reason to go long, there's reason to go short at the same time. They coexist at the same time. And it's not wrong following the one or the other. Obviously, one is likely to have a better probability, but it's not wrong, expecting the opposite as well. Maybe it's 60-40. Who knows? So one thing is, you look at market structure. This looks like a webinar we're doing. We are. If you look at the market structure, right, this is very, very bullish. That would argue that the likelihood of the expansion is likely to continue to the upside, perhaps with some retracement, but eventually continuing higher, based on the market structure. And if you consider some other indication, we just talked about it, which is that daily order block right there in our face, right? That could be enough reason for price to go to and maybe squeeze it a little bit, but eventually go the other way. And all of that could happen today. So that's we don't know in which side it is. It is on us, or it depends on us to try to read price as it is delivering these candles, to read which side is it going to be. right? So, and that's how I trade. So if you go to the H4, for example, we have a bullish order block being created there. Price could come back and move out of it. If that would happen today, then I would guess it would go higher, right? The expansion will be to the upside. If you go to the lower time frame, if you look at 2, you see that it is still creating bullish order blocks, and actually you have an outside bar right here. Look at that. We just talked about what an outside bar is. Look at that. Remember the definition? Right? It takes out the whole range of the first candle and it closes above. That's a very strong bullish sign. If you know this and you recognize this, then it is likely that price is going to come back and move to the upside. It's not 100% probability, but so you start building your case for both one, the bearish side and the bullish side. And the one that gets the most weight, that's the one you should be looking for a trade in that direction. So I'm gonna hand the word to my colleague Esteems, because otherwise I hijacked the stream. Go ahead, Pedro or Aaron. Go ahead with whatever you guys want to share with the audience.
Yeah, well, Irene, are you looking at anything right now, Aaron, or not?
I'm not really looking at anything, no. But I am just staring at the DAX, hoping the area holds for buys. Just because it's the only thing I can really look at, to be honest, right now. About what Victor said, though, I like that he's saying follow the trend. Basically, it's very simple but very strong. Sometimes people look for a reversal a bit too much. They look for reversals all the time instead of just following the clear trend. So yeah, just want to point that out.
That's true. We had this trader as well that is looking for a trade on the DAX. I think it's long already, if not mistaken.
All right.
I'm not really sure where where his stop loss is, but I think you mentioned that it was. Just 1 second. I think you mentioned it is a tight stop. But I think maybe he's trying to look at the same opportunity that you are right now for potential long.
Yeah, that could be. I mean, I don't want to trade this, just because it's not high probability, but I'm just looking at it, So yeah, I did take a trade yesterday on my live account. Let me show you that actually.
Yes, please do.
So very great decision making yet again yesterday. So we had a sweep of this high.
At what time was that decision?
6 p.m.
Okay, good. I'll take note of it.
Yeah. So it's probably not the best time to be in a trade anyway, but it just took so long to move. So we got a sweep of this 1 hour high. The 12-hour high was tagged here as well, which we ended up sweeping. But before the close, it tagged it, so I expect it to go down. Let me drop back down. So we have a 1 hour sweep here and a 5-minute break, which was this. I got an entry around here. I got an entry about here. Put my stop there. Now, this was the worst price action I've ever seen in my life. So I was driving home from the gym and I kept seeing it go up, down, up, down, up, down, up, down, up, down, up, down. I got home and I was just sitting in drawdown and then back to break even. So I kind of felt like my entry might have been the bottom of the consolidation. So I got out for 0.70 cents loss, which is basically nothing on a 50K. I closed the trade and it ended up hitting stop loss. So I'm very happy I made that decision because I avoided a loss on the first trade for that live account. And the only reason I closed it was because it was bad timing and bad conditions. Nothing to do with my rules, really.
Good stuff.
So yeah, I was happy about that.
Yeah, recognizing that, maybe it's not the right moment, time of the day. You're not seeing the market is not the price action is not confirming, because you were expecting something, right? You were buying something
100%,
for a reason,
yeah,
and that didn't happen. And the fact that and that made you think maybe it's not going to happen.
Yeah, and then I mean I didn't want to get greedy, because when you trade on live account, sometimes you're just like, I need that move till I get the payout. And then I'll get out the trade, which for me here wasn't a big move. I didn't need much of a move, but I didn't listen to that voice. I fully ignored it, and it saved me a good loss. So happy with that.
So you're looking for the sell, right? You managed to sell and then you close it.
Yeah. I sold it. Yeah, this was a sell. Yeah, the candles just look at them. Oof.
Yeah, I was looking at it as well yesterday on the DAX. So I was already looking for the DAX yesterday.
Yeah.
After we had the big move to the upside from the last week or so, because what we had on NASDAQ on the DAX, sorry, is that at least we already had these highs in here that kind of took them.
Yeah.
And then we were still reacting from this supply, what is basically fresh. And I was kind of looking at two ways: either price would react from this level and collecting this liquidity would be enough, and price would maybe start going down, or price actually eventually would also target this top, and maybe then you would have the move.
Yeah.
But then I start tracking basically price, as you can see, basically even draw this trend line, and I was looking at every single previous low to see if there was any break of structure. And I never really saw that. What's going on? I never really saw that break of structure. Like I was following every low, and
so that made you stay out.
Yeah, that avoid me to get into trade with in that sense, because that's why I kind of wait a little bit for a break of structure. Maybe if you are too zoomed in, when I saw this one being broken, maybe then could trigger me. Okay, maybe this is not the break of structure, but then price just went straight away to the next one, and this is actually the real one when I'm making the movement. And that kind of made me stay away. I like this well, for example. I was even interested in potentially selling from here. I like this one that was left in here. But then, as you mentioned, it was already way too late, and I even ignored it. I never really saw the break. And sometimes it happens like that, and it requires a lot of patience. But maybe something that happened to me. Sometimes I spend one day basically tracking the price to potentially give me a trade. The trade doesn't happen that day. It ends up happening then the day straight after that.
Yeah. I mean, this was the same case for me, to be honest. The trade ended up playing the day after.
Exactly. So it requires a lot of patience, and sometimes it could have been like you did nicely actually of getting out of the trade when you saw that price action was not moving in there was no movement actually, and then you to get out. But sometimes what tends to happen is maybe we go with one or two losses trying to get that trade, and then the bigger one only happens the day after. So this was something that was happening to me a lot. Then you start adding or being even more patient to try to avoid that one or two losses to then only catch the potential win. Otherwise, then the win is already kind of just half of the win is recovering the previous losses that we had the day before, and it's kind of always damaging slightly the account. It just requires a lot of patience, but it's nice that you did that, because something that maybe many people don't do is when they are looking for a trade, they're always thinking about the profit, right? They're working maybe the winning trade. Another exercise is starting to potentially to visualize, okay, what happens in case price just goes to my stop loss, and at least I start being not being so affected emotionally when eventually price goes to my stop loss, because I kind of already visualized the idea that price would go to my stop loss. But what many people don't do is actually kind of what you did, which is starting to also have a plan when you are in the trade, and if price doesn't really evolve the way you want, maybe because of the time, basically because of the price action that happens in there, what to do in that circumstances, or like have a plan as well to do that. In this case, you decide to get out. Price was not doing what you're doing, either with a small loss or at break even. It's better than getting out at a full stop loss. But it's nice to have those three plans ahead. With price in your favor, what you can do, maybe in terms of managing the trade, expanding the target, taking partials, whatever it may be. If it goes towards in direction of our stop loss, it's okay. Kind of already visualize it, but also what you can do. Price gets stuck in a range around your entry point. It's also a good thing to do, a good exercise to do before even entering the trade.
100%. I mean, I could have thought about the wins. Sorry, but that would have kept me in the trade, and eventually I would have lost, because I would have gotten greedy and say I'm not getting out until I get my payout. Blah blah blah. So I'm glad I didn't listen to that at all, which I usually don't do anyway, but I used to do that. So,
if we're trading 1-to-1. um, not losing a trade is just as good as hitting TP.
Yeah, 100% agree, because it sets you back quite a bit. Now the thing is, sometimes I do extend my trades though, especially on challenges. I don't just look for one-to-ones because it's a challenge. I prefer to get it over and done with quite quick. So I'll look for lower time frame plays, get a little aggressive. But on my live accounts, I look for one-to-ones, higher time frame plays, clear plays. So I took quite a risk yesterday. So that was also part of why I closed. But like Pedro said, waiting a day, which is basically just doing nothing, can give you a day where you get set up like this, and the move actually occurs, which happened today, but I didn't get an entry.
Yeah, me neither.
But yeah, very good example, to be honest, from Pedro there.
Yeah, I actually like it. I actually get excited. In the past, I was getting frustrated because I was feeling that I was losing time or wasting my time kind of tracking a price action and not really getting a trigger, which in reality, I'm just following kind of my strategy in that moment, waiting for the confirmation. But then I get excited because of the day after, because basically what it does is it shows that price is losing momentum. Like as you can see here, price is reaching losing momentum. So it goes into that compression period that I really like to see without really getting correct. But usually what happens is when you do get that move, price will just break out this quite easily. Basically just what happened this morning.
Yeah.
Right? So that actually excites me when I do spend maybe a day just tracking price. Price doesn't really still kind of gives me the confirmation to enter into the trade. It continues to go higher and then finally even makes a small spike or takes some liquidity, whatever it may be. And then when it turns, it's quite easy. It's kind of an easy target. It usually tends to become an easy trade when you get inside because all this is compressed. There's no more buying pressure in here. Once price breaks it, it's just free to go and to fill out the next page. It's actually part of my A plus setup. If I was about to say that, this would be one of my A plus setups. And as you can see, like the confirmation actually happened then this morning, right? We finally broke structure, even slightly to this low, and then we finally had it's actually Quasimodo in here.
Beautiful one.
Yeah, very nice trade, to be honest.
Yeah.
So what you're saying is basically when you see a potential setup, but it's not really good or hasn't met your exact target, you get excited for the day after because if it does hit, you have a clean trade.
Yeah, so I'm a contrarian trader. So sometimes, for example, something that I like to see is even when I see price moving in one straight direction, like for 3 or 4 days, it's basically what DAX has been doing recently. So basically, DAX make out this move. It actually reacted from a good level and basically fill out this range and getting into the other extreme. But some other times, it's literally just price moving in one straight direction, even 3, 4, 5 days. Usually, it starts getting my attention that maybe price is about to slow down, especially if this FX. If you're talking about gold, gold can run forever, or indices as well. Sometimes they can run forever. But if it is FX, usually we don't really see just price moving in one direction for 10. Right? So you see at least some kind of oscillation, some kind of retracement. So if I do start noticing those 3, 4, 5 in the days in a row, price moving in one direction, it starts getting my attention. I start looking for potential weakness on price. Also looking left to see prices reacting from anything relevant or taking some liquidity or whatever. And sometimes it's that. Sometimes it starts getting my attention. But on that day, finally I start looking at it. Price still doesn't really commit to the move to downside. It's just you literally see price slowing down, like creating this kind of compression that we saw in here on the DAX. So I just keep an eye on it. I keep an eye on it. Sometimes yes, sometimes you do have a fake break, but then price still goes. So I'm aware that maybe price is not going to commit straight away after the first break, maybe because price hasn't really got to the final level that it wanted, kind of on the left side. Imagine that the order block or the supply was a little bit higher. Price already giving small breaks, but it's still a little bit of room. So I'm patient also sometimes with that. And then usually these are my best trades because price, that's when you see sometimes price just literally in 1 or 2 candles filling out the same space that it took 1 day to do it. Like it takes 1 day to do it, and then it takes just 2 hours to do the opposite move. So I love those setups. Those are actually my favorite, to be honest. Those are my favorite setups in general. So it requires patience. It just requires patience sometimes. Just to wait for it, wait. I start tracking price. I start tracking those lines to see if there's actually weakness, and then it's about execution whenever that happens.
And if it does give entry, right? Didn't want to be nice to us today, but It's nice to see the setups play at least, right? It's nice to see that what you said actually happens.
Yeah, indeed.
I like that you trade with confirmation as well, because I'm kind of similar like that. We have the same thing with that. I usually always wait for the close or for the break before I even look to enter. So I like that you also do that. It saves you a lot of losses from what I've seen in my trading. I've avoided plenty of losses by just waiting. So yeah.
No, definitely. I look for a break of structure, and the confirmation is again, it was through the through the experience, right? Because getting into the trade without the confirmation, it was usually a loss after loss after loss, and you start just creating some rules or trying to review your losses. How could you actually maybe avoid them? Sometimes yes, sometimes price just forces without confirmation and just goes and never retraces, and it happens, and I'll miss those trades. But it's a way to avoid losses, at least based on what I look for. And I'm a mutually counter trend trader, so if I was trying to jump into the market without any kind of confirmation, yeah, it would be bad for me. It was bad for me in the past, so that's why I kind of like that to change a little bit, something in there. Yeah. So now we'll see what will happen. It's kind of similar with the yen index, for example. I'm tracking yen index in here.
Yeah.
I'm just trying to see eventually when I do get some kind of
upside.
Right?
Yeah.
Which can then lead into potential shorts on euro yen. I'm tracking euro yen as well. I've been tracking euro yen. Of this move, I saw that price made a move to downside in here. Maybe breaking this level would be enough, but price actually just respected straight away the next month zone. So I'm not really considering this now as a break. I'm just kind of on the trend line. I'm just continuing to track it, and eventually I think we're going to have a move in here that's going to fill all this. So we may fake out this top one more time again on the left side. We are kind of let's see if I get it. Yeah, on the left side we're approaching kind of an interesting weekly, monthly super level, and maybe just a trade that I'm looking here is even just to test the previous top. So maybe I'm looking for this kind of a move. That's it. That will be the trade. I just need to keep tracking. Sometimes yes, it gives kind of the eager to try to already get short in here. Because maybe I already saw this one and maybe that's enough and maybe price can go down from here. But to be honest, when I saw a break, when I'm tracking price and I see a small break of structure, but price respects straight away the next key level that I'm looking for, usually price tends to end up still making a new high in this situation. So I'm going to just continue to track it. And it's another one that's been moving to the upside already since last week, since the 5th, 4th of November. So today is the 13th already. So it's already a full week of price moving just in one direction. So I'm tracking it. It's on my radar. Yeah.
So if, let's say, yen's been moving down all week like it has been, and you see a bit of a sign for bullishness, but you're not fully convinced, you'll sit it out, is what you're trying to say, right? You'll wait for the full confirmation before you actually do something.
Yeah, I'm waiting.
Yeah.
Again, there are yes, because there are some pairs as well, and even especially if I'm looking at the yen index. For example, today I was when I saw price coming all the way here already to the top, I was really expecting already. Okay, let's see if price actually breaks this one, but no, it is actually respecting still this high here. Yeah, I wait. I prefer to wait because usually then price tends to potentially come back again. And there are two. So what kind of opportunities we could have in here on euro yen, and this is kind of then how the quasi model could start to play out, because basically what the type of trade that I'm looking here is a potential left shoulder or the potential quasi model pattern. Okay, let's pretend that eventually price will end up making a quasi model. Price at this point is creating this top. Okay, I'm looking at this level. There's no left shoulder yet created at around this level. So even if price comes down and kind of reacts from this level, then eventually it can go higher again and then maybe create the head. Now, this is one trade that price is tracking, is compressing and eventually reverses. This is one specific trade, this is one setup, and it's not repeatable. Then if price comes up and creates the head, that's a different story. That's now potentially a different setup that we may have at around this level. But if I trade kind of thinking that potentially we may have a quasi-model before a bigger reversal, I know there are going to be potentially opportunities. If I end up missing this level, it's unfortunate, but then eventually I'm expecting my price to still at least come back, even creating a double top at this level, or eventually the high and may end up then eventually still maybe one more move down, and then eventually a third retracement into the same level in here. Who knows?
Yeah.
So yeah, that's kind of a little bit my thought process of looking at the chart goes in this place. But at this point, I'll be trading kind of the left shoulder, the potential creation of a left shoulder on the 0 yen.
Talking about confirmation, the quasi that I trade, let's switch to mine, if that's okay with you guys. The quasi that I trade in itself, it has sort of a built-in confirmation to it, because what the quasi is the an established uptrend being broken, right? If you're a breakout trader, you might be want to get in here because that's the area where the market actually broke previously, wasn't able to break, and now it is breaking, meaning it's likely to be reversing, going down, and perhaps in the future go much lower. But the confirmation that I wait for is it breaks, yes, and it actually, does the whole thing. I wait for it to go up and fail at making a higher high.
Yeah.
Of course, the there's no 100% short, right? Even when it looks like it is creating lower highs on the lower time frame, it can still push up and stop you out. But it basically built in the structure that you wait for, at least the quasi and the way that I trade you wait for the break to happen first, for it to break the structure, and then come back and fail at making a higher high. And that is the sign that likely this could be the right shoulder in formation or in progress. And you then get in for the last leg or completion of that reversal, which would be it breaking perhaps something in here and then continue to the low side, instead of getting in as a breakout trader who might be getting in here, right? And where do you put your stop? You have to put it all the way up there, and perhaps you're targeting the same, but you're getting in at a much better level. And this may not seem as dramatic, but these big changes, they do have an effect on your trade. So basically, the quasi as well. If you watch how I trade often, you would see that how the confirmation, how it's built in, how to wait for that confirmation. There is something. Let's go back to gold. Let's take a look at gold. I asked you guys if you thought, the audience, I mean, if you thought it would go up or down. And we had someone saying Hellboy thinks it might go down. Let me double check if these are all the submissions. One person said Pedro looks like he hit TP. Pedro is that is likely what happened, or not, Pedro.
No, I was just smiling because there is one. There was Antonio was commenting about food and food recipes, Brazilian food recipes and vegan Brazilian food recipes. That the other day on the live stream on the Portuguese, for some reason we ended up talking about food, and they started getting kind of a lot of ideas and recipes to cook, even sweet desserts and stuff like that. So it's yeah, and actually he's inviting you guys because apparently he wants to share a few recipes as well. So Aaron and Vitor, you are welcome to join the Portuguese live stream.
Okay, great. Well, great. I'm always up for an invitation.
Yeah.
So great, awesome. And did you get the recipe?
We'll see. He's going to share with me.
Okay, hasn't shared it yet. Okay.
Yeah, not yet.
So you're in full anticipation.
Yep.
Okay. All right. Perfect. Well, maybe Aaron and I will join the Portuguese session and check that recipe out as well.
Yeah. Just before we continue, just one comment in here, because apparently we've been talking about patience, and I think Cherry unfortunately didn't have that much. with us. I think he was looking for something on NASDAQ, a head and shoulder, which could also be the. So basically, I
Would you
think the
like
question
to?
is, yeah,
Would
maybe
you
we
like to
can just
show
take
it?
a quick look. Yeah, maybe I think he's mentioning. The question is if the right shoulder can be the same on both time frames. I think that kind of can combine and be at the same level. I think it's maybe the question that he's asking, which could happen. Sometimes you do have a bigger Quasimodo or a small Quasimodo within a bigger Quasimodo. In this case, what was the Quasimodo that he's talking about?
I see it.
Is it
I
now that
see
you
it.
broke? Is it now that you finally broke this low? That's what he's saying, or it was before that? Because I could see many
Um,
here, many small ones. I could see even
let
one
me.
here when price turned. Okay, this was a
Okay.
Quasimodo, exactly the last one just before price turn. And now, yeah, maybe you want to see towards maybe this one as well. That price could also create it at around here after we broke this low. Actually, in this case, there are kind of a few that you could look at. But yeah, go ahead. Maybe Victor, you can maybe share your monitor. But Cherry, on our side, sometimes we are in the middle of a conversation. We don't really pay attention straight away to your comments. If you are just a little bit patient, you end up getting your answer on the live stream. So maybe you're going to come back. Maybe you're still here. We don't know. But we are going to answer your question. Yeah, go ahead, Victor. Maybe we can show the Quasimodo.
Well, I don't know Cherry's exact idea, but if you go to Cherry mentioned H1 time frame. This is the NAS. There is a pattern which could be considered a head and shoulder for some people, right? You have a higher swing high in the middle, so higher than the left. This would be then the left shoulder, the head, and possibly identified as the right shoulder. But it all depends on your definitions, because for my definition, only now we broke the structure of this bigger H1 quasi, right? So it is a reversal pattern, yes, but I wouldn't consider that to be the right shoulder yet. It's all in the definition. If you think that's how you trade and you have data to back it up, don't let me tell you that's not your right shoulder. It is your right shoulder, right? However, I don't see that. I don't consider that as a right shoulder for my quasis, because I need to wait for the structural break to happen first. That needs to happen. If there's a certain sequence that needs to happen with the quasi for it to be a valid quasi. All before this moment, this current candle that broke that low, everything that happened in between is just one big movement, right? Even though there are two separate sort of peaks, it's one big movement to me. So to me, in the H1, at least if this is the chart period you're talking about, Cherry, and let us know in the chat and like the stream while you're at it. But let us know in the chat if this is, or perhaps correct me. Maybe you're looking at something else. Be as specific as possible. So now we do have a quasi, but just now. So the question to me is, what I would then see if I would trace this as, that would be the significant low to be taken out, not that low high, that low, not neither that this one. That would be the head. It now breaks it, and perhaps will continue to go. Who knows? It already created a quasi, but from this moment, I can start looking back from where we are up to the head and look for possible reversal patterns. So that would be the quasi that I would be looking for. In more specifically, I would then zoom in on this particular time frame. I would not start on the 1 hour, but just for example, I would then mark the head until the lowest point it has reached after the head, and then select only the ones that are beyond that 50% retracement. That's a arbitrary decision that I made. There are quasi that do not come up to there, and they are perfectly valid to be taken. They're just not valid in my world. Okay, but that's just mine. I mean, if you trade them, you know how to do that, and that's you decided to trade them, then by all means trade them. But I decided not to do so. So, and then I look for region on the same time frame, or not region, but structures in the same time frame that could indicate where is price going to create that right shoulder. And I see a couple of order blocks here, and the one that stands out a lot is the one that created that big move. But we have three right now, and I would then label them as possible entry points on the same time frame. Look at the time frame; it says H1, and these structures are also tagged as possible entry on H1 order block or H1 time frame, right? So this is the quasi on this time frame, and these are the levels that I would be watching or wanting to get a entry if it does everything else that it needs to do. So this isn't everything, but this is the basic breakdown of what I do. Very, very simple when you think about it. It's not rocket science. Um, I do work for the NASA, but this is not rocket science. No, I don't work for the NASA. I'm just kidding. Don't work for the NASA. Never have. But anyways, me just being silly here.
We finally know the origin of the mask. You guys finally found out why Victoria wears the mask.
So I started on the H1 because Cherry mentioned H1, but I actually don't start from the H1. I start from the monthly, the weekly, the daily, and for my intradays, I start on the H4. And on the H4, we do have the same pattern that also is indicating a quasi for me, right? So you have an established uptrend, higher high, higher low, and it breaks that significant low. So now I do the same. The retracement is already there, and I mark the order block, which is an outside bar. For those who were paying attention when I was explaining outside bar, there is another example of an outside bar, and this is on the H4. And once you merge these two time frames together, where you have H4 indicating just one area and the H1 indicating three areas, guess which H1 order block I will be trading. Not rocket science, right? So that means because we have multiple time frame indicating that, I will be more inclined to take this one. Why? Because you have multiple time frames telling you that that was a significant area that price moved away, created and moved away from, and are likely to come back and have some kind of a reaction. And perhaps that's the reaction that will create the last right shoulder. So that's without going to the 15-minute. And if I go to the 15-minute, actually, I don't need to go to the 15-minute. Let me double check. I don't trade like that, but I mean, you could look for the quasi on the 50-minute as well in the right shoulder. I think Cherry was trying to do that. I have to double check that the high it is. Let me double check. Yes, it is. All right, so it is a quasi as well on the 15-minute. And perhaps I don't use it this way. I don't use the 15-minute, but you could definitely check build a case around that. I'm gonna have to use the retracement as well. And the retracement gives me one. Yeah, the retracement tells me that this is not a valid quasi for me. So on the 50-minute, personally, I would filter this out. It's too big of a range pattern to be considered if an effective 15-minute quasi. It is a 15-minute quasi, but it's not one that I would trade. So I would still just mark and trade this area. Let me indicate it on H1. For those who are interested, that's the area, that's the lowest part, and this is the high. So I'll wait, just wait patiently. There's that word again, Cherry, patiently for the order block to be revisited. And then, only then, if it happens within a certain period of time, I will then go to the lower time frame to look for possible signs of reversals that will allow me to get my entry in with a tight stop, somewhere small in there, and target something on this time frame, meaning on the H1. And that's it. Well, I hope it sounds as easy as it is in my mind, but that's the idea. Coming back to gold, because let me double check here. Actually, before I come back to gold, let me double check if there's a something very happening, Mario. Very, very funny. Mario, by the way, is a great member in our Discord community. We were chatting yesterday among others, not one on one, but with a nice group. And awesome, Mario, for joining us today as well. And I believe yesterday you were part of our stream as well. So awesome seeing you coming here. Because
Mari is a beast, okay? Mari is also, he's Portuguese, he's part of our community. He's a beast. He's sharing actually on Discord his journey with the 5ers. Basically, he recently started 3 or 4 accounts, like 5, 10, 100k, and I think he just started a boot camp as well. We already got payouts from the 5 and the 10, and I think he just passed phase 1 on the 100k. So Mario is a real G. He's a real trader, and I'm trying to convince Mario every single time to actually join the Portuguese live stream. So maybe now that I'm sharing in English, maybe you guys can also convince Mario to actually join. He's a bit shy. Okay, maybe you can wear mask. Maybe you can follow Victor's tactic and kind of wear maybe a mask or a hat or something. Okay, with some glasses, like I don't know. But Mario, the tweet is also made in English. You are more than welcome to the live stream. Okay.
awesome. Go ahead, Erin.
Sorry, I was gonna say I do have to go now, guys. It was a great stream. Nice to talk to you again, Victor, and nice to meet you, Pedro. But I am unfortunately gonna have to cut, guys.
That is very, very unfortunate, Erin. But we will be anxiously waiting for your return to our stream again. As always, you are very appreciated by everyone in the chat. We see that, and by the hosts as well. I think I can speak on behalf of Pedro as well.
Yes, you can.
All right, thank you, guys. I'll see you guys next time. Yeah, take care.
Take care.
Bye.
Bye bye. All right. We have. So yes, we were talking about Mario. Awesome. I was gonna say, it's great to see these because Mario is just like Mario. There are many other examples of traders who come to our community and they never leave. Right? It's. I know it's the reference to Hotel California may not be the best reference, but it's something similar like that. Yeah, they come to the Discord community, to our YouTube channel, and they are, they become OG original gangster. They become fixtures in our community, and they're there, they're engaging others, and sometimes, a lot of times, they actually grow into Pedro or Aaron. They come to the stream because they in meanwhile they have so much knowledge that they can share with the audience, and everyone would grow by what they share. Many of the hosts started just like that, even undersigned, right? I just started in the Discord community as well, not thinking that I would I would be doing this, but hey.
Yeah. Mari is a great example because, and that's why we also provide the giveaways. Actually, Mari's journey with the 5ers started out because he got an account from one of the giveaways we did in the Portuguese community, and then he got so happy with it that he passed the account, and then okay, why not actually start buying more accounts? And that's how it all started. So that's fantastic. Meanwhile, again, he already passed the 5, 10, 10k, already got payouts out of it, and past phase 1 on the 100k, and now he actually trades in a different way. He trades kind of all the accounts separately, so he doesn't kind of over expose himself on all the accounts, and he's doing great. He's doing really great. So yeah, it's a good example.
Did you just say that he got payout on the 10k and also on the 5k?
Yeah, I think I already got payout on both accounts.
On the 5k he got from giveaways.
Yes, that's how it started.
Listen up, people. payouts from giveaway. So meaning an account he just won with us for free, just by participating, by being here, by just being here for free, and he got payouts there, and that account is still growing, I assume, and probably gonna give him who knows how many payouts, and maybe scaling ups, all in the possibility, in the realms of possibility in the future. So there we go. That's the evidence. That's the you can too. This could be your story. You could be watching us today, and if you want to get, you know, if you want to have a chance to become the next Mario, there is one thing you can do. Yes. You're thinking, what can you do? Yes, there is one thing you can do right now, right here. You can take action in that would, who knows, maybe you could become the next Mario. And $450 from the giveaway. That's good. That's the payout, right?
Anyway, yeah, it's talking about payout. I just don't know where is my commission on that. So, Mari, I think we need to talk in private, because I don't remember getting any commission out of this situation. Okay, I gave you the account, so by minimum should be enough to get something out of it. It's okay. I'm waiting for the bigger payout. Okay, I'm patient. I'm waiting for a payout on 100K. It's going to be slightly bigger, so then you can give me commission out of it. I'm patient, Mari. I'm waiting.
And the members in our community, are asking, what can they do? How can they become the next Mario? So if you're interested in winning an account and have the possibility of getting payout just like Mario, who did like $450 and counting, because he's probably gonna do it again in the near future, getting another account, I mean, there is one thing you can do. And the thing is, subscribe to the channel, because when we get 90,000, we will have another massive giveaway, just like the one that Mario won from, right? So we get to 90,000, we celebrate. For that celebration, we give away some accounts, and you can be one of those who win it and go on to become someone receiving a $450 and God knows how much more in payouts. Very easy. We're still waiting for about 500, I think less than 500, 400 and something subscribers to come in. It could happen today. If you guys are, if you go around your neighborhood telling everyone about the good news, we could reach it today. But anyways, let's come back to gold while we are gathering all those subscribers for that 90K milestone. Yes, exactly. That is the proof. That is the proof that the giveaways are real and rewarding. Very good. That is indeed the case, right? It is. This is all real. We are real traders. These giveaways, these accounts are real. The money they get in their account when they reach that payout with these accounts are real. Ask Mario. All right. Coming back to EU, not EU, gold. So we just asked not long ago, about half an hour ago or so, where do you think that expansion is likely to come from? And the expansion, I mean, these are the levels, the high and the low of the day. And there's likely, not always, but the likely that the prices expand on average is going to expand another 25, maybe 30, and maybe just 20, still. So the expansion is it going to be to the upside, to the downside? And I went through a different number of arguments which one it could be, based on order blocks, on higher time frame, on the daily, on the H4, and so on. And one of the things that for sure you could be looking for, even just using order blocks, which is pretty simple, is that, let me go back to the reaction. Look at that. The reaction of the H4 block was nice. Mix X Twilight. You're speaking my language. I like that. Miss Twilight 88. All right, perfect. Let's go back to, yes, the reaction was nice. Good. Let's take a look at, let me take a look at where I made a question. All right, so about an hour ago, more, I thought, time flies. It's already an hour ago. Someone, you have an admirer in the audience, Pedro. Someone thinks your smile is cute. You guys make the girls in the audience. You make Pedro blush. All right, let's.
You made another comment as well. Like you mentioned, like you went away, came back, and my face was still the same, kind of in the same smiling position. I think 20 minutes after. So,
all right. So
it's a conversation, guys. It's a conversation. And of course, Vitor's company. Sorry, Vitor, continue.
No. Go ahead.
No, go ahead.
All right. So, okay. So, a couple of you guys thought it could go down, and I want to go through the answers because I thought there was a few who had, some good points, made good points there. Let me double check where it was. We had. Oh, there we go. Trying to find them. Someone talking about vitamins in the chat. Good stuff. All right, I think I just skipped them. But the point is, doesn't matter. The point is that, yes, we have the structure above that could certainly create or open the door for a bigger reaction. And maybe we are getting that as we speak. Because if we go to the H2, as you can see, we created a bullish order block, right? And I just mentioned it's an outside bar, meaning it's a strong signal that buyers did come in, at least in these two candles, right? Perhaps you wouldn't say the same currently because we are below that order block, but within these two candles, the buyers did come in and shown their appetite. That's a fact as it closed. That can never change again. Into the eternity, that candle will never change, right? It's a fact. So if the market is going to continue higher, one of the scenarios, one of the ways it can play out is that price either continues directly, or it goes back into that order block and then bounces off. Both of them are the bullish scenarios, right? Because that's the last sign we got. We got H4 order block being created as well as H2, and another one, the last one was an H2, which would then be bounced or retested as price moves higher. Since that is the only the last sign sign that we got from price action, it's a safe bet. Even though you could have reasons to short this as well, as we talked about on the daily time frame. So one thing you could do is create, so to speak, these kinds of tests for the market, right? So if the market is going to expand to the upside, okay, and it is retesting a structure, a bullish structure, if it is going to go to the upside, it is likely not to close below and invalidate that structure. It doesn't make sense. So in 21 minutes, and that's actually the time we still have on this stream because that will close on the turn of the hour, the order block will get either invalidated or not. Right? So if it closes below that order block, if it closes below this level, which is 19.06, at least on this price feed, then it would be, I would consider that an invalidation. And to me, that's the truth for me. It will mean that it breaks a bullish structure. That's a bearish sign. The same way as a creation of a bullish structure is a bullish sign, the invalidation or break of that structure is the opposite. So it's the bearish sign. So I would wait 21 minutes or 20 now for that to close. If it doesn't close below that order block, that could be another sign of price, as we talked, that price is likely to be going up and possibly expand in that direction. Nothing is certain. I don't know what's going to happen, but as the market is moving, you can get these clues. Is it getting more likely or less likely that it's going to expand to the upside or to the downside? And so you build your case, and then you can, once everything is lining up, or a great number of things are lining up in terms of order block, maybe you use indicators, maybe it's the time of the day, maybe there's news coming up, doesn't matter what you use. But as you're building your case and things becomes, as you have like a like a like a balance, how do you call that, weighing balance? Yeah, is it, you have, Minerva, the justice, you have it on the statue of the justice, you have like a scale, exactly.
Yeah, exactly.
As you have the scale, but you can't see both hands, but if you have the scale, one side will prevail, will be much more convincing, that it's going to go up, because everything is lining up. You'll have the 4 hour telling you it's going up, you'll have the 2 hour, perhaps the 1 hour as well. Then you have some, who knows, something else, maybe it's not a time frame, maybe something else that's telling you that it's likely to go up, or the opposite. And once you have that scale going in one direction on one side, then you can say, well, this trade, this direction has now become a high probability trade. There are so many things stacking up that I'm going to, take the trade. And that's how you build, basically, when you're looking for setup. Obviously, you have trade plan that will automate basically, stepwise what you need to be doing. But the scale is built in. If you did your trade plan well, it's built in to allow you, or to select, to filter exactly those high probability trades, because this is the setup. The setup is supposed to be a high probability setup. So that's what I wanted to share. And someone reacted about that reaction we had on the 4 hour, a beautiful reaction right there. Someone asked, saying we had some impact on them. Thank you very much for that. I really appreciate that. I have to say, we get these comments a lot. I'm not the only one. All of us get these comments, and that this is the best reward we can ever ask for doing this. So thank you very much. All right. There was something else. Oh yeah, the at the time, with the information the audience had, the majority was expecting for price to expand to the upside. If I were to ask now the same question, probably the scale would have changed, right? So you can now see a outside bar right here, right there. These two candles are forming currently an outside bar, indicating that the sellers are taking control. And it hasn't closed yet, and a lot can happen in 16 minutes for sure on gold. But if it closes like this, that could be the beginning on an H4. That could certainly be the beginning of a possible temporary top, and likely it will expand to the downside for the rest of the day. However, we do have this bullish order block still here, and if we go to lower time frames, maybe we can actually pinpoint a test. We create another task for the market. This is not a fresh order block, so don't treat it as such, but it could be something you could use for, yes, you could use it as a 15-minute. I don't do this on my trade plan, but it still applies. If it reacts above the 15-minute order block right there and doesn't close below it, let me check. Yes, you do have a quasi on the 15-minute that has a not so great H1 argument, but certainly does have an H4 reason to go up. So let me mark this on the 15-minute. There you go. And so you want to be looking for that test. Is it reacting? Let's go to the 1 minute. I don't know about you, but this reaction is not there. It's not reacting at all on that time in that order block. What does that tell us? Two things. Maybe it's not going to reverse at all. It's just going to continue. Or it is heading towards something else, which is not that order block on the 15-minute. Maybe to take liquidity from that, which would be the Asian low, I think it was. Yes, the Asian low, maybe taking liquidity here and then change back bullish. I wouldn't be too surprised. Change back. We'll have to wait for the confirmation, right? I'm not predicting that it's going to happen, but take liquidity here and then perhaps change the other direction and then expand to the upside. It happens a lot, especially in gold. Traps and tricks, all kinds of people into thinking all kinds of things, and you have the reaction. Actually, we are getting the reaction on the 1 minute. Look at that. It didn't seem like it was going to have anything. It didn't close below it, so this order block is still valid. But what I would do here is wait for I don't have any reasons to get into this trade yet. Let me double check. It didn't. Yep, on the 15-minute. There we go. So I would wait for perhaps a quasi formation on the 1 minute, maybe something like this. This would be the left shoulder, like another sweep down, creating the left shoulder. I know that doodle is not looking great. I know. Let me take that away. Maybe create another time, come back, and I would be able to catch it on this moment, if it does that. But we'll see. Maybe it's going to be a V-shaped reactor. V for Victor. I don't know. I'm just kidding. I'm just making that up. All right. Pedro, there was one question, I think, in the chat. Okay, so here we got a good question, but I'll come back to that later, because that may be something. Yeah, I'm not sure where let me double check. There is another way I can look for them. We can select all the ones that.
The ones that you're saving.
I beg your pardon?
Are you looking for the comments that you save all the way?
Right? Yeah, I made a star out of them. I tagged them as a star. So DJY Cuba, yes, that's exactly right. That is exactly because there are discretionary trader out there, and I do use discretion on my trades on different strategies that I use. But on the one that I share with you guys all the time here on YouTube, there is no discretion. It's a mechanical system. I don't share all the rules exactly, but I give you all the tools for you to either build your own, given the rules and the structures and the concept that I give you, or be quite close to how I do things. So I'm not a discretionary trader when I'm applying this main strategy. I'm a mechanical trader, and the order blocks is a essential part because the levels, the outside bar, and the engulfings that create these order blocks, they're precise, they are objective. The line, without a doubt, you can say this is where the line is. If it closes below there, it's going to invalidate, and if it doesn't, it didn't, and I can still take the trade, and so on. So you can build your case, and this is exactly right. So thank you for that. Someone interested in the Hindi language, Pedro, maybe we should switch now to Hindi. I'm pretty sure we can start practicing our Hindi. Go ahead.
Yeah, no, I'm just going to ask Samir to come here, and maybe Samir can ask him. But the good thing is that we at the 5ers, we also have Hindi community. Okay, so I think you do have also a YouTube channel for our Indian community, which is great. I'm not really sure if they go live daily. I don't think so. I think it's more pre-recorded videos, maybe going live once a week or something like that. But you can check, and we are growing. Okay, so the Fivers basically started with the Portuguese community. Now it goes into Indian, Japanese, and you are growing into niches, which is great, and it's a way to feel closer to also all of you that are part of those languages. So yeah, go explore, go check our YouTube channel for the indie community. We also have on Discord, so if you are part of the Discord in the Fivers, we also have our indie community there. I think they go kind of on they create content in there as well quite often. Yeah, this is again, community is really important for us at the Fivers, as you have noticed. Aside from, of course, the main channel, the English channel, where we are really close to 90,000 subs, we are also exploring into more niche markets. Let's go like that.
Yes. So we are, investing in building communities to cater you, the trader, from different, different parts of the world, from different languages. And the Discord is, you can see we are expanding. We're always working behind the scene to give you a better experience as a trader. And I don't speak Hindi. That was just a joke. Pedro, I don't think you do. Maybe I know you have lots of hidden talents, but I wasn't. I don't think Hindi is one of them, right?
No, it's not.
Yeah. I thought so. But we don't speak Hindi, but we do have a community, a growing community. We have a guy, Samir, who streams with us quite often, regularly. He is from that community, and it's only going to be bigger and improving constantly. So stick around, be part of it if you want to. Actually, that's what I wanted to do for Sweet Hall 605. Join the Discord community. Meet fellow traders who speak and are from that part of the world. A lot of traders are from India, by the way. A lot of traders. Okay, so let me double check what else we have. All right, that's so let's go back to the charts. We have this order block on the 15-minute, which, to be fair, the market hasn't done anything yet. So far, it has just, in my mind, just acknowledged that there's a level there. But it hasn't given me a sign that it's going to reverse from there yet. Right? This is the 1 minute. This is, one of quite sensitive. It is one quite sensitive of a time frame, and it hasn't created that quasi, or there is there's an order block here. It's only 1 minute that you can then mark and just wait for the market to disrespect it, or to use it and bounce off of it. That could be a test, as it's actually happening right now. Let's see, you have this creates the order block, and it comes back. And if we are going to go up, it should respect and not close below, but close up and have follow through. If it does that, that gives you some idea, gives you the scale that, as I was talking about, those the Justice Lady, the scale it has. Well, not about the justice, but I mean the scale. One side winning the battle and above the other. So we'll have to wait. Patience, my friend. All right.
Yeah, overall it was a good move on gold. I like the order block that you had on top. Where price reacted. I think on Tuesday I also mentioned a little bit that price could react from that level. Also in the lower time frame, I think it's kind of it was maybe a 4-hour demand zone that was broken, and price didn't respect it on the way down, so now it's respecting as well on the way up. That one from the week as well. So basically, it was an interesting zone to expect some reaction. I think it was because of gold. Otherwise, I think I would have tried to short there. But because gold sometimes just keeps on running, and I kind of ignore it a little bit because there was maybe price action to try to sell it at the top. Yeah, but basically the 4-hour demand zone that I mentioned, it was this one in here. It's basically the level that broke all these tops, and price should have kind of respected it on the way down, but it didn't. Like just literally broke it, and it kind of left a new level in alignment as well when it went down, and now price just respected exactly basically the base of that zone. It's going to be quite similar to what you have. Yeah, but on the lower time frame, maybe there was already a little bit of a pattern that I like to see as well. Kind of price already broke these lows and then made the fake out. But because it was gold, I didn't really pay much attention to it. But I could see, let's see if it respects now. Maybe can respect and go higher. Otherwise, I think a good level that I would like to see gold coming back to it was it to be maybe even 4,050s or 30s, something like that, and then maybe go higher from here. But you have way more structures before that. We have maybe again this low. Let's see. We have maybe this structure as well. Price can still bounce from here, or then maybe can go a little bit deeper into this previous range from this week. Yeah, let's see how big of a move it's going to be. Yeah, and if price starts breaking above this level, then maybe can start going all the way. Yeah, potentially. Yeah, that's just a little bit of the levels I had in mind on gold. But so far, it's reacting quite nicely.
Yeah. Good stuff. All right, let's check in with our audience.
Yeah, sometimes I think. Yeah, go ahead. Sorry, go ahead.
Yeah. Someone from Nepal. Welcome, Joseph from Nepal. I'm not gonna try to Adhikari, Joseph Adhikari. Good stuff.
You are great
Anastasiia.
We are really great at pronouncing names. I'm not that great next to you, mate.
Okay, let's take a look at. Okay, so someone asking about the upside down chart. And the upside down chart, for those who are wondering if this member is perhaps playing a joke on us, no, the person isn't playing a joke. It's a real thing. And if you want to know what it is, I'm trying to suppress a sneeze right here, live. So okay, all right. So far, I succeeded. No guarantees though for the future. All right, thank you, Pedro or Remy for being the invisible hand. The upside down chart, if you go on TradingView, which I assume you are using as well at home or wherever you may be, you go to the side, right, the y-axis, right, the vertical scale. You right click it and you can invert the scale or use Alt and I as the shortcut, and it will invert it. And that's what they are talking about, the upside down chart. Does the upside down chart analysis really work? Sondre Holman, it works just as well as the right way around, right? Because if you use a tool that works, either it be EMAs, crossover, or MACD, or whatever it is, or order blocks, as as I do, you should see the same thing, right? Just by inverting it doesn't create anything new, or it doesn't eliminate anything that's there. If it's there, it's going to be there, whichever orientation it has. However, what you're talking about is there are people, right? There are traders out there that have somehow visually they have better results if they look for buys, right? They have their eyes, their mind, we don't know exactly what it is, I'm not going to go into the details of neuroplasticity on this topic, but something that for some reason they're more capable of identifying longs compared to cells. And in that case, if you have a bearish trend, if you switch it and put it to inverted, right? So you put it upside down, you're basically looking for that, perhaps that long. So it is a thing, and that's more visually, and that's something you have to find out for yourself, which one of the two you are, if you have any preference at all. I don't have that, or I haven't noticed that I have such a thing, but I know people who do. So it's a real thing. But it's so there you go. I just changed it again. It's not the world upside down, it's just the graph. But we have come to the end of the stream. I am always amazed, perplexed by the fact that I somehow lose track of time, the notion of time, whenever we are here streaming with you guys, and sharing this time with you. So let's see. Do we have any last comments we would like to address before we go on?
I think it's basically it. A trick that sometimes happens with inverting the chart sometimes happens or helps use with your equity account, right? So if you're not enjoying the direction of your equity account, sometimes you can just press Control I and kind of it reverses, and maybe it works better. maybe it works better in the end, and you can keep on doing what you are doing. So that's the trick. It's not on the trading view, but it's on your dashboard and your equity account. Maybe that can help.
Pedro just shared the instant solution to feel good about your equity curve, especially when it goes down. You just invert
when you're in a
it.
drawdown, that's the technique. When you're in a drawdown, just flip the chart on the other way around, and it works. It works, guys.
Pedro, you're funny. It's a good one, actually. It's a good one. If you feel bad about the process, you flip it, you watch it, you start to wanna raise your hand in celebration because you see it go up. It's all trick, but I mean, who cares? I mean, your mind doesn't really know the difference, anyways. So why not trick it into being happy, and perhaps that would release some neurotransmitters that will help you be more creative, and who knows, be resilient, and continue to go on. Good stuff. All right, so I'm gonna leave you guys. This is the end of our stream. I would like to thank everyone, especially those regulars in our stream, and there are many of them, Mario being one of them, but there are many way too many to mention right now. Thank you all, everyone watching. Remember, we have that milestone 90,000 coming up. You can make it. We reach that level faster. The faster we get there, the more, the faster you get a chance to win some accounts and some payouts, or the chance for some payouts. And we have a Discord session. I believe Rich mentioned that later on he will be hosting a session in our Discord community. Awesome community. The tribe is going to Discord coffee time. Yes. I have to admit, I don't know the exact time. You'll have to check the schedule on Rich's start of his session, but it should be any time now, in 45 minutes, maybe an hour. Check the schedule to be informed. You don't want to miss those sessions. They're awesome. Yesterday we had an awesome time together with the group, and it's that's how it usually goes. We connect. That's community connection. And I enjoy these moments. I enjoy YouTube. I enjoy Discord. It's all because of the engagement we can get with our audience, and vice versa. So that's it, guys. Any last word, Pedro?
that's it. Thank you very much. We're going to still have the Portuguese community also then the YouTube in 2 hours basically. So go drink a coffee on Discord and then join us for some recipes, Brazilian vegan recipes on the Portuguese one, and that's it. Enjoy your weekend. Victor, thank you very much. Guys, subscribe. Let's get to 90,000 over the weekend. You guys can do it. So thank you.
Perfect. Thank you. So join the Portuguese session. We have so much in store for you. So, but take care, and we'll see you in those sessions. Bye bye. Take care.
Bye bye.